market. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. It's Friday. We made it. Woo!
Woo! Ew. That was kind of lackluster, Mikey. No cap.
I had a little something in my throat.
A little tickle.
Yeah. But, yeah, it's Friday.
Why are we
Party
here?
Polo on.
I know.
And the Brady, we're here because it's Gigi's Chicken.
Yeah, Gigi's
today.
Chicken. Great lunch. Great lunch.
It is pretty good.
Top tier.
Yeah, but we're actually here for the people. We assumed that yesterday's close was pretty violent to the downside, and
then you got a tweet, and the tweet got...
The tweet was hilarious.
The taco was reversed.
Yeah. And
So we thought it was going to be a little crazy today.
I understand now.
Yeah,
probably going to be crazy today.
Okay.
Yeah.
I would think
So why not be in the studio,
In the mix.
ready
Yes.
to go?
Yes.
Were you guys looking at futures overnight? Just like...
They've been relatively stable. I mean, 6,500 has kind of been our spot here at the lows. They were up like 20, 25-ish at one point. You had the tweet come out right after the close.
Yeah.
Like, we're moving whatever down the road. Market rallies like 80, 90 handles. Immediately sold off from there. It was like back to basically unchanged within like 10 minutes.
Wow.
I was like, oh no. It's not working.
It's not working anymore.
It's not working anymore. This is not good. So that was my thinking for today.
Yeah, the algos reacted on the tweet, and then they reread the tweet, and we're like, "Oh, this is just nothing."
Yeah.
Right.
Yeah,
And Fridays have been painful. The last couple Fridays have been like, you've had Friday, big move lower, and then usually on Sunday there's a continuation of that, and then there's a taco that comes out, and the taco helps the bounce on Monday and Tuesday, and then it's just continued selling Wednesday, Thursday, Friday. That's kind of been the MO. So it felt like today would have been dicey, especially with where the market is, and you had stocks like Meta was down like 50 and change. Microsoft looks like.
But that was for a reason, though. Like Meta was that's like a verifiable, like tied to their court case reasoning. But
the court case was like what, 400 million or something.
One was just like 6 million to the one lady, but it's opening up the doors to other lawsuits, and then another was like 325 million.
No, the stock lost about 120 billion yesterday.
Yeah.
So they could go through about 1,000 of those lawsuits and lose less than what they lost yesterday in the stock market.
yeah,
Not
great.
It was just I don't know. It wasn't good vibes yesterday, so we figured it would get a little crazy today.
But yeah. S&Ps are at 6-month lows. They closed at 6-month lows yesterday. SPX specifically. And we're gonna open below 6-month lows. It looks like
Pain. Welcome to the pain cave.
Oil at 96.68. Volatility futures. VIX is just below 30. Did we get a 30 handle overnight? No. 29.84 was the high of the session for VIX. So could get dicey.
Okay.
Was the thought.
All right. Well, we will batten down our hatches before we get too much more into market talk, because we literally just have 3 more hours talking about the markets.
That's true.
I want to talk about you guys.
Oh.
How are you guys doing today? Mikey is locked in. He is checking all the Doppler, AccuWeather, radar locked in. He's jonesing for some golf so bad. Like, I've come to terms. Like, I'm not taking the bike out this weekend. Like, it's just like when you have a weather-related hobby, sometimes you just have to be like, look, it's not going to happen.
Yeah, I totally get it. I guess I'm just a masochist. I'm playing golf Saturday and Sunday this weekend.
Oh, so you doubled down.
Oh yeah.
Okay.
I was only going to play Saturday.
Sunday looks better.
That's not a saying.
Yeah.
Sunday.
Yeah.
Sunday looks better.
But I mean, it's going to be 50 and sunny. I think we're in the stage where like 50 and sunny will feel like 80.
Because
we're so used to the.
Are you playing a course that faces the lake?
No.
Okay.
Yeah.
Because then you're just going to get bitch slapped by the wind.
Yeah. It'll be deep in the suburbs.
Okay.
Which
Then it would be warmer.
Yeah.
Okay.
I think we're gonna be okay.
I don't know. We just had a conversation about how it'll be much nicer, like in the sun. In the shade, it'll be like 35.
Sure.
Yeah.
So as long as you just avoid the shade,
Yeah.
you're totally fine.
Yeah.
Yeah.
When is the last time you got to play a full round of golf? I know Nikki got to go to Vegas and Utah and Arizona and all that.
He's been a very fortunate boy.
Yes.
Last year, really.
Oh, wow. Okay.
I've been to the range plenty of times.
Sure. No, I know.
Yeah, but
And the golf dome
last year.
and
the dome,
yeah, the dome.
the coveted dome.
But a full 18. It's been like a year. Or not a year, but last year. Yeah.
Last fall.
Last fall. Okay.
I'm ready.
Yeah. Just get ready for the sting. The
Yeah.
sting.
Oh yeah. I was thinking
Take
about
a little
that.
extra dirt, and it just kind of.
Have the Advil prep. Take
Yes.
Advil before and then
Yeah.
take Advil after. You don't need your kidneys.
Just mainline coffee, a couple of Zins. I don't even do Zins.
No.
But whatever you need to keep that heart pumping, right?
How do you sit between Gus and Nikki and you don't do Zins? That's like the Zin triangle right there.
He just leans over and he goes, "Guys, I got it. I got it." And we'll be like, "What?" And he's like, "Okay, this weekend at the Houston Children's Open Memorial Tournament, Kurt Kitayama has been bombing it. He's the one. He's the one. Every lineup."
Yeah.
And he was. He was
did
minus
good.
5.
Yeah.
It's all, but Mikey just like leans over and gives us like nuggets of
Sure.
random sports
Data,
knowledge.
yeah.
Mm-hmm.
Now he's getting into baseball, which is not my forte. So
That's Gus's forte for sure.
Baseball?
Baseball.
yeah,
Interesting.
yeah. You had a chance to save Gus. You let us take Gus to the doctor.
I tried so hard. I tried
No,
so
you
hard.
didn't. No, you didn't.
Yes, I did.
You were an easy adversary.
I can't. I was like, hey, come over here and I will make you into a Swiftie. And then you are just like, hey, we're going to do drugs and gamble.
Yeah, you want to come drink some Miller Lights and gamble?
I was like, Gus, I will help you adopt a cat. This is true because he wanted to adopt a cat when he moved. And I was like, I know all the rescues here. And you're like, hey, we're going to go on a bar crawl and start drinking and then do Zens. And then I'm going to show you how to new ways to gamble.
Yes.
I never stood a chance.
We did show him the fantasy world,
Yeah, we corrupted him.
which I think it's been good for him.
Yeah. No, he's good. He's good.
Yeah. But that's just the world we live in. It's all just taking risk and
Poppin' Zins.
yeah, it's a magical place.
Did you see Tasty Trade branding at the Cubs game yesterday? I put it on our social media channels. Jessica was at the game, so I was like, Jessica, if you see our sign, I was like, will you take a picture for me and send it to me? And she's like, I got you, girl. And so her and her husband went to the game yesterday. It was overcast. I think there was maybe a rain delay. I don't know if it got super delayed.
Yeah, the rain
but
last night was
Tasty Trade, proud sponsor of your Chicago Cubbies.
We still do the Mound
Still
Ball.
doing Mount Ball. Yes, someone did tweet. They're like, I like how Tasty Trade is sponsoring whether or not a ball will stick to the mound.
Yeah.
Tail event.
Yeah.
Yeah, I didn't catch the live game, but I was checking in randomly.
Oh, we lost. Both Chicago teams lost.
Oh yeah.
Yeah.
The Sox are so back. Lost by
There was
12.
actually like on Twitter, they're like, the White Sox have already
Slow
been
down, Mike, it's
eliminated.
one game.
James is still holding on hope.
Yeah.
No, we've already been eliminated from the playoffs.
Yeah. One game, that's it.
I mean, we lost like 14-2. Like we just got spanked by the Brewers.
Classic. Yeah, we'll lose by 12, then we'll lose by 10, then we'll lose by 8, then we'll lose by 6, and then eventually we'll lose by 4, and we'll lose by 2, then we'll maybe win the game after that.
Okay.
SMRT.
Yeah, there you go. That's
there
just
are
how it
some-
goes.
There are some strong candidates on the Sox, though. Like Montgomery, he's legit.
Mm-hmm.
So there's a lot of young talent.
Okay.
Young talante.
I mean, if you're going to the Sox game, you're going for the food.
Yeah.
Sure. Oh, 100%.
Yeah, I mean, like,
100%.
they got some great food.
Yeah.
You know what's my favorite thing about a Sox game? You can take Halstead, just get an e-bike and just rip Halstead all the way to the Sox Stadium.
Yeah.
And then you dump the bike, and then you get another one back. It's really actually pretty fun. High risk.
I was going to say, it's not exactly the most.
It's a far bike ride, but if you get an e-bike,
Okay.
it's cruising.
All right.
Yeah, but I know you're going to just stop in Chinatown. You're not
true.
going to make it.
It does pull me in.
Yeah, you're going to be like, oh,
It is a
no.
vortex, for sure. But that's on the summer agenda for sure.
Oh,
Ripping an e-bike to the stadium. see the
Okay.
game, Get some brats.
Yeah.
there you go.
Yeah.
It's a good time. How about you, Nikki? What'd you do last night, or what's on deck for you for the weekend?
Didn't do much last night. Watched some basketball. I mean, the games were pretty eventful.
Oh, yeah, who-
Hawkeyes. Shout out to some of our peeps. Joe, who I was talking to this morning, Joe Bria from our the trade desk. He's actually going out to Houston for the game, Iowa, Illinois,
Oh,
which
wow.
will be fun. And my sister went to Iowa, so she's pretty fired up about that as well.
Okay.
So those games were good. But yeah, I mean, I had no skin in the game other than my square, which didn't hit. It's winner 5, loser 2.
Okay.
I also have a small stake in winner 6, loser 5.
Okay.
So those are my two. Those are my two. Like, that's really what I'm rooting
Sure,
for.
sure.
More so than the winners, but a couple good games. I mean, it was a good game. The Texas game was down to the wire. That was good.
Texas, Purdue.
Yeah, the first game.
Who won?
Purdue on a last second. Did you see that?
Yeah.
Yeah, that's hard for me
Oh
to
yeah,
support.
you have Purdue. Yeah.
I've got Purdue winning.
Yeah, that's hard for me to support.
Yeah.
But I
No,
would say
no Purdue for you. Why? It's in.
They're our rival. They're our
Oh,
our most hated rival. Like
Yeah,
it's
but
like
you guys are a football school now.
yeah, that's
you care
true.
about basketball.
That's true.
That doesn't matter to you.
That's true.
But no, we're gonna have a fun Elite Eight here because we've got the classics, but then Iowa took out the 1 seed, took out the 4 seed. So if it's not Purdue, I want Iowa to win.
Okay.
Just for the Cinderella story.
Right, just for the vibes.
Yeah.
Wait, is Michigan still in it?
Yeah, Michigan plays tonight.
Oh, okay, good.
Who are they playing on that side? Hold on.
Hold on.
Alabama.
Oh, okay. Oh.
Yeah. Duke,
Okay.
St. John's, the UConn-Michigan State game. That should be good.
Okay.
Iowa State, Tennessee.
Oh, wow.
Yeah, Michigan minus 8.5. 172.5. That's a high over.
I was like, you were just
A lot
saying
of
numbers.
points.
I don't know what any of these numbers mean.
Yeah. So.
All right. Sorry,
6-5. 6-5 or 5-2.
you probably won't be able to grill this weekend. I'm sorry, Nikki.
I got it out of my system this week.
You're already done?
I grilled basically every week. No. I'm fired up and excited
Yeah.
for it. It's one of my favorite things. I mean,
Do you have the digital thermometers? Like my dad swears by the remote temperature monitoring situation. I'm sorry.
I got these things between my legs. I know when the meat's done, okay?
That's not how that works.
Okay.
I don't want you to
Yeah.
stick that in the meat.
No.
That's not here.
No, I do have one of the thermometers. But
Okay.
I feel like you really only need that with a big.
Okay.
You have the laser thermometer.
No, I should get one of those.
I've got that.
Those
You
are.
need that.
Oh, like the infrared ones?
Yeah, I
Of
feel
the
like
laser-
that's-
yeah.
Those are nice.
Yeah.
That's probably better.
I have that. If
Yeah,
you
I
need
should
it.
probably do that.
Yeah. Okay.
I just have the ones that you stick in there and just close the lid.
Yeah.
Gives you a little text.
Yeah. Oh, it's a app.
Yes. Yeah. It has an app,
Wow.
so you can set it to alert you when the meat gets to 160, 170.
Ah.
Yeah, it's nice.
That's
See, that's
fun.
smart.
Yeah.
Well, no matter the temperature of your meat. No, I'm so sorry.
Ooh.
We got a great show for you today. I don't know where the schedule is. I don't have a schedule.
I got it for you. Well,
You have a schedule? Okay, yeah, good. Yay.
We got Fast Market.
Oh, that's good. It's Fan
Always.
Friday. That's right.
Yeah.
Fast Market headed your way. Viewers submitting their trade ideas, and what a wild week it's been for that.
Yes, we have a Fast Market. I believe.
Is Jamal in?
I believe we have Jamal coming on
Okay.
for
The weekend stocks?
this week in stocks.
Okay.
And then for our for our market measure, zero DT segment on put spreads, it's kind of an interesting look. It's based on we're looking at different expected move spots.
Yes, thank
for
you.
the put spread. So we're looking at the VIX 1 day and a half of the VIX 1 day. So we're using the VIX 1 day to determine the placement of our short strikes. We're also using the VIX, and we're also using just the IVX, which is the at-the-money straddle price.
Oh, okay.
We're using a variation of different spots for the short option and seeing how they perform. It's a pretty interesting one.
And I did get the schedule. Thank you, production, for that. Quentin is going to be in the house. Did he go to Alabama?
Yes.
Yeah. Okay. So he will be in. Yeah, it is a big day for him.
I'm hoping he has the full Alabama gear.
I hope he's dressed like an elephant.
That would be good. Like if he had one of those hats. Yeah, that would be good.
But he's also going to be counting down the top trending tickers over at Tasty Trade today. And special programming guest note, Jenny will be joined by Tasty Trade superfan and super trader Fauzia. So Fauzia is going to be on. She spearheads the
is that electric?
The women of Tasty Trade. Yes, because they're ladies. So it is electric when Fauzia is on. Fauzia is super nice, super smart. And yeah, she's going to be on with Jenny. So you definitely want to stay tuned for that. That is our run of show for today. Do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's March the 27th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news? Ready for the news. President Trump extends a pause on attacking Iranian energy facilities now to April 6th. That extends the date now for 10 days. He says talks are ongoing. Iran says new phone who dis, but it did move the market. Like you said, the bots caught it, but it does seem like these head fakes are not working anymore. Where do we go from here?
It is no longer a succulent, beautiful al pastor taco. It's now a minced meat taco, a nothing taco.
It's a lukewarm Chipotle taco.
It's a lukewarm Chipotle with no guac.
Do you know that Doritos makes bags now for a taco in a bag? They're like wide, and you rip open the top, and you can add in whatever.
Oh, really?
That is innovation I can get behind.
Pretty good innovation.
Yeah. That's great.
It's like a Dorito Loco taco at Taco Bell.
Yeah.
Have you seen, I love the gimmicks, the Taco Bell chicken strip Crunchwrap?
Oh, I haven't seen that one.
You haven't got that commercial yet?
No.
It's basically like chicken tender inside a Crunchwrap.
Oh.
Love it.
Getting back to World War III. World War III. No.
World War III.
Yeah.
Yeah.
We saw this yesterday. It was a market head fake.
Yeah, it's concerning that the taco doesn't keep working. I don't know what to think here. I feel like his sentiment and tone has sort of he's watching. Mm-hmm. He's watching what is happening here. And so if the past is any indicator of what he is going to do now or in the future, he's probably close to reaching a spot where he's got to kind of do something to fix this. So I'm wondering what happens this weekend.
Can we talk about the dollar and bonds?
Yes, bonds look awful. I mean, bonds have been, they've reversed every little bounce that they have. They're trading at 112 right now. I mean, the dollar has been strong. I think you've seen kind of that dollar strength in the move that you're seeing in like metals. Gold and silver have both just gotten absolutely murdered. Bonds have been super, super weak. Rates have been obviously skyrocketing. And then the oil market has just been crazy too. So it's been a tough market, I would say, across the board.
How about you, Mikey?
Yeah, I'm loving the dollar strength, honestly, because I've been buying the dollar for a while in the Tasty FX.
We're like back
account.
to even now, basically.
Almost, yeah.
That's great.
But back to even on these positions that were losers, which is, the account is up nicely.
Yeah.
But yeah, these positions were dragging us down. But yeah, I think it's interesting because when you look at the CMU FedWatch tool, there's a 20% chance we get an interest rate hike in June, and an even higher percentage chance that we get one in July. So the market has completely flipped from interest rates cuts being priced in this summer to an interest rate hike being on the table, and there's no cut priced in really anywhere now this year.
Yeah.
So
That's wild.
yeah, very, very interesting. And I think the lack of market rally yesterday, like they didn't hold its footing into that announcement is very concerning. I think you're seeing the VIX. The VIX is reacting first to that right now.
For sure.
Up 29, almost at 30.
Yeah.
And the markets are selling off, not as bad as yesterday, but it's not looking good.
No.
What's the move for the market today? What is it saying that
The expected moves on the E-minis, we are looking at about a 50-point expected move through the end of the day. It puts you at like 64.50 and 65.50-ish.
Okay.
Going into the weekends, it's been way more volatile, so I feel like outside the expected move is probably the play here. To which direction? I would probably say it's more likely to the downside, but who knows?
Who knows?
I don't know.
Well, in other news, NASDAQ confirms a correction, again, as the Wall Street slumped yesterday on Mid-East uncertainty. Indexes, the Dow was down around 1%, S&P down 1.74%, and the NASDAQ down 2.38%. That confirms a correction. Oh, no. What are you doing in the individual indices, if anything?
I've been doing so in the Qs and SPY, I've been doing downside crab trades, which is like buying a longer dated put that's closer at the money, selling 2 puts further out of the money in a shorter duration. And you do it for like a small net debit. You have tail risk on the downside, but you're kind of like neutral / slightly bearish because you have a little bit of positive gamma to the downside. Your upside risk is minimal, and I am long NASDAQ futures. Like I have long delta across the board. So I've been trying to massage my delta a little bit, reduce some of the long delta that I have here.
Yeah, I have a bunch of positions in SPX. I usually place a new SPX trade every Thursday when we're at the SIBO.
Oh, okay.
But I also have a year-long strangle in the micro E-minis, and that is in the money right now, but it's actually, I feel good about that position.
We put on that SPX position too on the close yesterday.
Yeah, the 0-day iron condor, yeah.
And that one looks like it's like marked at.
Yeah,
that'll be a good one.
Yeah.
The 20-point move that we have right now is essentially maybe, well, what did we close at yesterday? Let's see on the, because we had that move, like, yeah, we're basically right where we're like 20 points higher from where the market closed.
Okay.
Even though we're down 30 because we had the tweet that moved everything higher. So we've gone basically nowhere from the close yesterday, even though the market's saying we're down 30. Yeah. That's basically a reversal of the taco that we had yesterday.
Yeah.
That'll be perfect for us for that small little position.
Perfect.
Yes.
Like you mentioned, alluded to before, metals have taken it on the chin, but gold's tumble has created opportunities to buy some gold mining stocks at bargain prices. Shares of gold miners have been in the dumps this month as investors have expressed fears over how the Iranian war will tarnish the value of the precious metal. Anything to be done in gold now, because we haven't been really talking about the gold miners. Like your GDXJ, your
GDXJ. I put on a diagonal spread in GDX a couple days ago. I'm basically flat there. I do think it's interesting. 88 IV rank.
Oh, wow.
So it is very, very high there. Gold and silver have both caught me. I mean, I'm a little bit surprised at the move in gold specifically. I mean, silver, you have a little bit less of the like kind of safe haven to it. I'm a little surprised by the crazy move in gold that we've had to the downside. I get it. It's liquidity. Everybody, you need to sell gold to get dollars because you need the dollars to buy the oil, to this, that. I get it. I know. I'm a little surprised that in a time of war and extreme uncertainty that the one risk asset that everybody talks about is, down 25%.
Yeah, and we this was one of the things that is kind of the spookiest, I think. Like yesterday, we had gold down, silver down, market down,
It's sell everything.
oil up.
The correlation is
That's-
1 right now.
Yeah, the correlation is 1, which is when things get really hairy.
Yeah.
Gold's catching a little bit pre-market right now, but yeah, when the market's tanking and precious metals are tanking, and the only thing green
Bonds
is
tanking.
oil. Like,
Yeah.
not a great sign.
Nope.
Yeah.
Yeah, definitely an opportunity to get some bullish delta in there if you think this will reverse or even just chop around here.
Mm-hmm. Pain. Yeah, the 60. There's no portfolio that's had a nice couple weeks. 60-40, tech heavy, S&P 500 heavy, Dow heavy,
Crypto heavy.
Yep. Precious metals heavy. There's no
Chip heavy.
Chip heavy. Unless you were just like statically long
short.
Energy stocks.
Yeah.
And I guess maybe dividend paying stocks. Those have been like somewhat better. If you look at the Schwab SCHD has performed a little bit better. The equal weighted S&P 500 RSP has been a little bit better. But there's been nowhere to hide. There's nobody's having a fun time.
Yeah, XOP. Another one.
Yeah.
XOP, I mean, the longer this drags on, XOP could be 200.
Oh, wow.
It's all just getting our own oil out of this ground here.
Mm-hmm.
So we'll see.
Good news, breaking news this morning. The Senate has reached a deal to fund most of the Department of Homeland Security, praise Jesus, except for ICE and parts of CBP. The bill now moves to the House. Come on, House, you literally have one job. Because then Congress is going to recess for, I think 2
Free
weeks.
break.
Yeah, for 2 weeks.
Yeah.
So the funding lapse led to missed paychecks for TSA. I think they're on day 42 of not getting paid. Obviously, it's not sustainable because they were still trying to financially recover from the last shutdown. Over 500 TSA agents have quit, and many airports are on life support because there's one lane open for thousands of people at a very busy travel time. So hopefully this deal gets done today. What are the airline stocks doing?
So I've got a variety of airline positions. I'm short puts in UAL. I have a call ratio in Delta. I did a covered call in Jets, JETS.
Oh.
That one is kind of a ETF basket. I think it's mostly weighted towards UAL and Delta, but it's got the whole kind of sector there. So I've got some long Delta there. Volatility's high. We did the Jade Lizard for the Johnny Trader account too. So if you're looking for positions that are relatively capital efficient, certainly a spot to look.
Yeah, the airlines are one of my favorite sectors to get into when they tank because it's just one of those things they're not going anywhere. They just can't go anywhere.
Sure.
So it's they have that embedded perceived floor, we'll say.
Unless we can't get jet fuel.
Unless
and
we can't get
nobody's
jet
getting
fuel.
going.
Right. But they're not taking a hit from people who are missing their flights and they're stuck in the line because they're not refunding those tickets. They're still charging change fees.
Yeah.
They're like, hey, if you want to get home, it's this $1,000 ticket in first class. Your move, buddy.
Yeah.
So they're still making money. So they're fine. One thing that I do think is interesting, rental car stocks ticked up yesterday, Avis and Hertz, because, no, I'm still on the same story, because people are like, you know what, F this, I'm going to just drive 8, 10, 12 hours because I'm going to be in line for half of that. I may as well just rent a car and drive to Kansas City. I don't know where you're going, but
It's actually a 200 IQ play.
yeah.
That is.
Getting into-
I wish I would have
didn't
thought
even-
of that.
I didn't think about that.
I read it, so this is not me being organically hey, here's the play, but I was like, you know what, that's awesome.
Yeah, I wish I
And as
would
a
have thought
Avis
about that.
presidential member, your girl is no.
Oh, yeah. Yeah, I think that is a really great point. And you're seeing Avis rip higher, went from 90 to 140 in the last week.
Yeah.
Yeah.
Nice little move there.
And
It
Hertz.
looks like we're late though. You got to get us that news.
I'm
Day
sorry.
one, Vanetta, ear to the ground. Come on.
Well, I would say Hertz is still there. Hertz is a $4 stock. You just buy a couple shares.
Yeah.
Yeah, but I think that's had some of these stocks like Hertz. You remember when it was delisted?
Yeah.
And went bankrupt, and then it came back. You have no idea what these are even trading at. I know it says 1.2 billion here, but this is
I'm sorry I didn't get this to you
Yeah,
earlier.
next time. Yeah, come on, you're supposed to get me that early.
Oh, good. It's a great point, though.
Yeah.
Micron stock has fallen into a bear market, and it's now the cheapest stock in the S&P 500. I was shook when I read that headline. Micron's price to earnings multiple has compressed dramatically as earnings expectations have surged and the stock has fallen. Micron down almost 7%, 7% yesterday. It now trades at 4.5 times expected earnings per share, and it's just been a swift decline, and it's cheap now. Relative.
Yeah, I think a lot of the tech names are just caught up in the vibe of the market right now. This is being one of them. I mean, the semiconductor space in general has taken it on the chin too. I feel like it has to end at some point, but it continues every day.
Yeah. Nice thing about Micron is
Super high implied volatility.
yeah, so you could do a bunch of things. You could sell put spreads in there. You could do counter spreads, and even if you go to like it's trading at 350, even if you go to 400, which is 50 points higher, but halfway through the range where it just fell, there's plenty of stuff you can do there for not too much premium. I mean, you can get into a calendar spread, long June, short May, or a diagonal spread.
Yeah.
For $1,000 or somewhere around there. And if you get that pop, it's going to be a nice trade.
Yeah.
Anything else in the chip space that caught your eye?
I've been trading some SMH. I mean, Nvidia has not looked great. And none of the stock. Nvidia is below or is trading at like 170, which is kind of the lowest we've seen in the last, let's call it 6 to 8 months. Going back to August of last year.
Do you buy on this dip in Nvidia, just knowing what you know?
I have some long delta there, but again, it's just the vibes in the market. There's no fuzzy feelings here. I think going out to like a June May is the play here. You sell some May premium against it. You do a diagonal spread. You have some decay that goes in your favor for the next couple weeks, and ideally, we have a little bit of a breather in the overall situation.
Yeah, if you go June, May, and you keep risk small still, it just gives you more ability to layer in if it keeps tumbling, and then you have a lot of time on your side for this to work out. Because we've seen, if and when these things shift, you could see the E-minis have a 500-point rally in a week.
Oh, wow.
I don't see any reason to doubt that.
Can you tell me when that's going to happen? No.
I wish. Well, we need the taco meter.
Yeah, we need the taco meter.
That's the thing. But that's another reason to give yourself more time, because if and when everything shifts and things settle down and reverse here, the market's going to react violently to the upside. I just don't see any reason why it wouldn't.
Volatility is really high in the front too. So you could do something like the 185, 195 or the 190, 200 diagonal spread June, May. I have the 190, 200 and it trades at like $5.
Yeah.
And so, you have some positive gamma, you have a little bit of decay over the short term. So you have something that kind of hedges if you don't get any sort of move to the upside. But it's a cheap way to get a 20 to 30 delta position where if you think, when this cools down that there's going to be a little bit of a face ripper, it's a good risk reward. So that's kind of where I've been putting it. And it doesn't have as much risk to the downside. You get a 20% downside move in the market like everybody wants. And, you're out a couple $100. It's not like selling the puts and now you're out,
your house.
Yeah. Yeah.
Hey, it looks like Apple is thinking with that big brain energy. They basically said that Apple is reimagining Siri for today's AI landscape, and they're tapping multiple existing chatbots for an AI upgrade. They're like, look, there's no need for us to spend $20 billion in CapEx when these things already exist. They're like, we're just going to open source basically Siri, and I don't hate it. So Apple is taking the unusual step of connecting Siri with Google's Gemini, Anthropic's Claude for you, Nikki, OpenAI's ChatGPT, and basically it's like it's a It's a harem for Siri.
You don't hate it, and the rest of the market doesn't hate it because Apple's been relatively strong. Apple was up like $3 or $4 yesterday on what was a disgusting looking tape, and it's been kind of steady here at 250. It's come off the highs, but it certainly feels like it's like a little bit stronger than everything else.
It's kind of funny because like Claude Code is amazing if you haven't used it, and these other LLMs are just so like
So behind.
so in depth. But yeah, and then you have Apple, and it's like, Siri, stop listening. What are you? It's like the redheaded stepchild
Sure.
of the AI.
The only thing Siri's good for is like setting a timer. That's like the only thing, you know, like Siri,
Sure.
set a
So
timer for
archaic.
10 minutes.
Yeah.
And that's like as good as it gets. Like
Yeah.
you can't code a website with Siri.
No,
My God,
absolutely
that would-
not.
That would never work.
You know how I set that timer? I'm just like, Alexa, play All Too Well, 10-minute version. It's Taylor Swift. And then that's how I set a 10-minute timer.
I love it.
Apple also yesterday announced more increased, heft behind their American manufacturing initiative. So I think that also helped the stock tick up yesterday. But in other news, here's something interesting. Major outgoing CEOs are citing AI. Oh, no, am I on the wrong story? No, maybe. It's fine. I did that to myself. No, you're right. Netflix is raising prices again across all streaming plans. When I Googled an image for this story, it just brought me all the other stories about how many other times Netflix has raised prices.
Yes.
I'm so upset about this because, again, your girl was on her parents' plan, and then I got locked out. So then I've been paying for Netflix, and then it just keeps going up and up.
Well, you
and
can
up.
have them add you as like a
I know.
person on it. and
I can
think it's
pay
like,
for my Netflix. I know.
Yeah.
But the company's ad-supported plan will now be $8.99 a month, up from $7.99. The standard plan is now $19.99 a month, up from $17. And then the premium plan, I think that's what I have. It's going to be $26 big dollars a month.
Damn.
What to do in Netflix?
Netflix trading, it's up about 80, 90 cents here pre-market, trading at 94 and change. I mean, it had a huge move after the Paramount deal kind of went away, or the Paramount kind of won that deal. I had some cover calls. I closed out of them, freeing up some buying power, taking some risk off the table. I don't know what you do here. Diagonal spread, short puts, maybe.
What are you doing in Netflix, Mikey?
Yeah, I think the nice thing is that they had the split, so it's a $93 stock now, which gives you a lot of flexibility regardless of your account size. But yeah, I think with earnings coming up mid-April in a couple weeks, this is probably one of those stocks where I'm going to wait and see what happens with the rest of the market over the next couple weeks.
That
and
makes
then
sense.
I'll trade it for earnings. But yeah.
But I'm like, if you just got $3 billion from not doing this deal, why do you need an extra $24 a year from me?
Inflation. Inflation, don't you know?
I didn't just get $3 billion. Are
you sure?
Yeah.
Pretty sure.
I mean, I think they'll keep doing it until there's, a consequence.
Yeah.
Like if you raise it $2 and your subscription numbers don't go down, but
It is
why
kind
wouldn't
of
you?
it is kind of crazy because even if you were just like, I like Netflix because I like shows about sexy realtors,
Yeah.
but now it's becoming even more enshrined in sports.
Yeah.
So it's harder, I think, to divorce yourself from, like, if you, like, you guys are sports guys, and like, I mean, I liked that I could watch the NFL games on Netflix, but now it's also like baseball and like F1 and like like it's a whole bunch of other stuff, and it's like, okay, well, I need Netflix.
Yeah, that is true. Peacock though.
I don't have
I got them good.
You got them good?
I got them so
How'd you
good.
do it?
How?
You just keep using a different email address?
Well, no, maybe they got me good, but Peacock's one of those, it's like literally they have one sport, but everyone's watching it. And it's like, you need Peacock Plus to watch this. So I subscribed, and then I went to go unsubscribe, and it was like, but wait, how about we give you Peacock Plus or whatever premium for $3 a month for the next 6 months?
Yeah.
And I was like, smash, we're doing that.
There's going to be... got you.
Right.
They got you.
No, because I won't spend more than I will logging in or resubscribing for a month, and now I just have it.
Yeah.
And I've used it
Until you
multiple
forget
times.
about it, and then they ding you for that.
I already canceled that.
$29.99 right at the end of this. And then they get all that back.
No, I anytime I do like a free trial or like this kind of thing, I immediately cancel it or just not. I disable the auto renew.
Okay.
That is smart. That's
Immediately.
smart.
Yeah.
Smart.
Immediately.
Yeah.
This is funny. Tom Brady, just a little query to the NFL. He's like, hey, I know that I own part of the Raiders. I know I'm a team owner, but just for giggles, could I come back and play? And then the NFL was like, you sit your ass down. But he was feeling himself after this flag football game. And all sources say that he did inquire with the league to see if he could play, but then he got shot down.
Good for him. I mean, you had Flacco has looked okay.
Yeah.
I mean, like in his couple.
He's been throwing dime.
Yeah. I mean, I bet Brady could get in there and be
absolutely.
serviceable.
But he owns a team.
So what? Yeah.
So, like, which would you rather have? Like, be a team owner or be like a QB again?
I mean, be the team owner.
Right.
Be the better of the two.
It's
but
less, you just chill.
yeah. I don't think there's like a conflict of interest there if he came and played for the Raiders.
You don't think there's a conflict of interest if you're on an opposing team and you like sack the owner of a team and like put him into concussion protocol? Like there's gonna be fallout from that.
I mean, it's different if it's like, one of the McCaskies out there.
You're taking out Robert Kraft. You take out Robert Kraft.
If you take off Robert Kraft's like leg and he's like, disabled, like that's probably a problem. He probably never puts you on the field or signs you. But Brady's not holding a grudge in a game that he loves, that he's played for 20 years. He knows the situation.
He knows the risk.
This isn't a nobody. This isn't like throwing a nobody on the field.
I'm just saying, like he has it all.
Yeah. No, I know. It's you got to flash
more.
There's something.
Yeah.
You don't know what you got till it's gone.
Yeah.
Well, his weird, creepy Insta stories of his divorced dad Insta stories prove that. It's so weird.
Yeah, he's always been a weird guy.
Yeah. But anyway, finally today for my viral video. Last week, if you were with us, I showed the food lineup that the White Sox would have on offer for the 2026 season, and not to play favorites or anything. So just like to be fair and balanced. So today I'm bringing you the Cubs food offerings for 2026.
Slop.
Little segment I like to call Trader Taste Test. Hit it. Maybe.
I mean, we know that this is all going to look way better than it actually comes out.
Forget just the boring stuff. The Cubs have a Bow Wow dog. It's one of the Vienna beef
amazing.
hot dogs, but it's inside a soft bao bun. You'll also find chicken and churros and a crispy tostada snack. Also new this year,
That
some
looks like a
options
nightmare.
for fans
Yeah,
who need to eat gluten-free.
Okay, sure.
Okay.
This year, we are dedicating a stand to food that is made without gluten. So it's our first year to do this. We're very excited. Everything in the stand will be made without gluten. It is Clark Street Grill, which is in section 112.
Yum. You can sample those new items. When
And
the
then
Cubs
look, they
open
just
their
offer
season
like
next
chicken
Thursday
tenders.
against-
Come
Yeah,
on,
the
Cubs, do better.
Yeah.
The bao bun is the most intriguing to me.
Yeah, but that
looks
looks
disgusting.
It looks
yeah,
so
it's
made,
not-
though.
But this is how it's always been. The Sox Stadium has always had way better food.
Yeah.
And
But you can't do it. Wrigley is a 100-year-old stadium. You can't just.
How do you eat that tostada stack in the seats
I don't
without
know.
getting it? I mean, it looks good, though.
Yeah, it's just not.
You're gonna get yolk all
Slop.
over people.
Yeah.
I mean, the chicken and churros, I mean, it looks good.
That looks good.
It's good, so. But anyway, hey, that's my time for today. What's coming up next?
Well, we got a little daily recap, and then we're going to get into confirm and send, and then we got Jamal for This Week in Stocks into the opening bell. So we're going to have an action-packed day today. Stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Mikey, my friend, we are back, and before we get into the little recap, let's take a look at the market today. You got E-mini S&P 500 futures were below that 6,500 mark, down 31 on the session. Rough day yesterday, getting basically reversing the entirety of Monday's beautiful green candle. We are back to the lows here, including today. You're at 64.92. You have the NASDAQ down 172, below that 24,000 mark. Here you've got the Dow down 189, about 10% off the highs here, just a little under that. And the Russell down 17, the Russell and NASDAQ, the weakest of the group today. Oil continuing to get bid higher. You got 96.85 on the oil futures here, up 2.5%. Volatility futures at 26.86, up about 2.33%. You have the VIX itself at 29.73, very high. Reaching that 30 point that we saw on the kind of craziness a couple weeks back. You have bonds down 18 ticks. We're at 112.04. They've reversed the entire move that they had this week. No relief there. You have gold and silver catching a little bit of a bid, but near the lower end of where they've been trading. Gold's up $55 here, about 1.25%. Silver basically unchanged here, up a nickel. And Bitcoin kind of taking it on the chin with risk assets across the board here. 66 on the futures, spot at 66.7 right now. Not looking great.
No, it is pretty bleak, and the VIX is probably going to be above 30 today, I would imagine.
Yeah.
And the only thing that's catching a bid is crude.
Yes. Crude volatility has remained sticky. we don't have a number for it right now because this will recalculate once we open. But 90-ish has kind of been low for oil volatility. We'll see if that gets bid a little bit here into the open because you do have oil kind of approaching that 100 mark. Might see a little bit of extra volatility there. And just the overall market volatility probably bleeds over into the oil markets, I would guess.
Yeah. There will still be some interesting opportunities, though. We're layering into some longer-term positions, and we've got some near-term stuff in SPX. That zero-day iron condor should be good on the open. I would imagine we'll get filled. If this market just chops around where it is right now, we'll probably get filled pretty quickly after the open.
Yeah, I wonder if I just put in a working order here.
Yeah, that's what I did.
What'd you put it? You put it in for
$1.
For $1?
Yeah.
Yeah.
Collected 2, put it in for 1.
Yeah. I'm gonna put a 250 in there.
Yeah, because you're wider. You've got 15 points wide.
Yeah, I did it at 385.
Yep.
So it would be I guess I could. It's like I'll put this in at 260. Let it sit there and see what happens here on the open.
Yeah, it is crazy because one of my iron condors that I put on an SPX was like an iron condor out in May that it just encompassed all of my other positions, and we're almost tested on the downside now. 63.50.
Today might be an interesting spot for something like that. I might look to do that.
Yeah.
In SPX,
Super
like a
wide.
May super wide iron condor.
Yeah.
Take advantage of this 30 IV, 30 VIX that we have right now.
Yeah.
So we'll take a look at that on the open. You want to get to our quick little recap here?
Yeah.
All right, let's do it. Yesterday, tough day. So you had an extreme down move in the NASDAQ here, significant down moves in both the S&P, the Russell, and I should say all three of S&P, Russell, Dow Jones. Is pretty consistent selling throughout the session. We haven't really seen that kind of washout. It's just been a stair step, just liquidation all day, just death by paper cuts every single second. Definitely a big move to the downside. We're at the lows of the range here at 6,500 on the E-minis, so we'll see if that continues into today. As for the big boy Mag 7s, as we mentioned kind of in the session with Vanetta, Apple has remained kind of strong. It's off about 10-ish% from highs, but has remained strong relative to some of the other names. I mean, you had a huge move in Meta down almost 8%. Nvidia was super weak. Tesla's looked horrible. Google below 300. That one couldn't get a downtick for months and months, and has moved about 15%-ish from the highs. Amazon and Microsoft have both been, kind of choppy. Amazon trading around like 210-ish, around that mark. Microsoft getting to new lows yesterday for the last like 52 weeks. We're going back to April lows here. Mag 7's not looking good.
Yeah. But at the same time, opportunity.
Yeah.
I think these ones, if you remember Apple 2 years ago, when it was literally like nobody wanted to buy Apple. And now Apple is somehow the strongest of this group. Like this is how this is going to work down the line. Like there's going to be some rotation, and
it's not exactly a V bottom. Apple was not a V bottom. Apple was a chop fest. Google is the same way. We were talking about Google going away because of ChatGPT.
Yeah,
and then Google stole the show. So
Meta's a little scarier because it's a different ball game with what's going on. But like Microsoft, I think is really interesting. We've been layering into positions there. And yeah, in these kinds of markets, just adding as much time as you can while still being responsible with risk, I think is going to be a really good decision. And like long-term calendar spreads, like that's where I'm going with a lot of these $300, $400, $500 stocks
for sure.
Just because you can get into a cheap calendar spread that will still benefit from any rally down the road.
Yep. Sector-wide, it was weakness across the board. Energy has been kind of the one bright spot in the markets here, but you could see semiconductors and tech down 3 to 4.5% here. Metals and mining have looked awful. Vanetta mentioned that. Maybe we look at some of those stocks. Across the board, it's it's been pain if you've been in anything other than energy, which has been the strongest of the group here. IVR's high across the board here. These are all the ETFs, so it's not very common that you get a 60 IVR in something like a metals and mining, or 40 or 50 IVR in an ETF like XLK or SMH. So if you haven't been participating, it might be an interesting time to get into some positions there, whether they're diagonal spreads or short premium trades outright. Definitely looks interesting here. To the upside, there were some names that had some moves to the upside. Brown-Forman, I think there was like kind of a merger takeover news there. You have VLO, Oxy, APA, CF, ConocoPhillips. Those are all like energy / war related moves, at least in the short term here. CF, one of the fertilizer stocks there. Randomly, Best Buy is in there. When was the last time you've been in a Best Buy? Years? I think it's been years for me.
Yeah. I don't even know
why you.
Oh, actually, I went into Best Buy when I bought my condo to get a router.
Huh.
That was the last time.
Because you like needed it that day.
Yeah.
You couldn't wait the 24 hours for Amazon to ship it to you.
No.
Yeah.
That's crazy talk.
Yeah.
No, but that was the last time I went, which was
years
ago.
Yeah. Best Buy, the one random name in that group. To the downside, it was basically everything else. So some of the kind of high-flying names that we've had, some of the memory stocks here, you got SanDisk, Ciena's in there with the optical side, LRCX, ANET, AMAT, STX, Teradyne. Obviously, Meta, one of the biggest movers, too. You had APP in there, kind of another kind of ad play along the Meta universe there. So it's all tech on the downside, just getting hammered.
Yeah.
No bueno.
And it shouldn't be that surprising. I mean, tech was such a huge rally to the upside, and the concentration really plays a role too. And when these type of markets present themselves, you should expect to see those same companies that ripped higher be the first ones to fall.
Yeah.
Nutty.
Last side here, just give a quick little heat map. Pain across the board. Energy is really the only thing in the green here. You can see some deep red across the board here. I mean, when you get in that deep red color, it's a 3% or more move. So you got some pain across the board. Not looking good out there.
Yeah. XOP, I think, is still really interesting. You see the energy as the lone green spot there, but XOP is going to benefit from this America First refinery project.
Has it already? It's gone from 130 to 185. That's
100%. Yeah. However, this implied volatility in here still feels a little low for this realized move. So if you think it's going higher, it's you can get cheap delta in there, is all I'm trying to say.
For sure. So that's our quick little recap. We're going to take a quick little 90-second break, come back. We got confirm and send a couple viewer emails that we got, and then we got Jamal for for this week in stocks, and then we get into the open as well as fast markets, so some trade ideas too. Those will be interesting with the way this market's moving. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll be right back.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Mikey, my friend, we are back. I just closed out of a small amount of my sick. Tiny little move. I don't know, 40, 50 cents. Just something to make me feel better about myself.
Yeah. I have hindsight regret. Could have closed a $150 winner.
Yesterday. You could have scoopied.
It's still up $40, but yeah. And this will be volatile. But yeah, that's really, I'll be looking to do the same thing if we catch a bid there.
Yeah. You like that thing though.
It's nice.
It's a good size. Like
it's really nice.
You like to trade MCL.
Yeah.
That's a good addition.
Basically
the perfect size.
Same thing, different product.
Yeah.
But yeah, I'll be keeping my eye on that, and then our little SPX 0-day Iron Condor from last call yesterday.
Yeah.
And I don't know, maybe we throw on something for the weekend.
Cool.
In there. All right. Yeah, confirm and send. What do we got today?
Let's do it. March 27th.
Time flies when you're having fun.
Yep. End of the quarter. I think that'll be Monday. First quarter.
Tuesday.
Is it Tuesday?
Tuesday. Yeah. If you have a double ratio spread, do you adjust the trade ever? If so, how?
So you are synthetically short a strangle. That's your risk on the double ratio. You're basically selling the strangle to finance buying those two long spreads. So you could treat it as if it was a strangle in terms of your management. That said, these are going to be slower moving trades. So the long spread part of the trade is not going to move all that much until you get to like the last couple weeks until expiration, especially if it's a relatively tight spread. So for the most part, I think you got to kind of be holding these a little bit longer than normal. But from a risk perspective, if you get a big move in either direction and you're like looking to manage this by moving out in time, you could roll it as if it was a strangle. You close out of the long spread that's profitable. You have the untested side long spread is out of the money. It's probably worth nothing. And you could just basically roll it as a strangle or a strap.
Yeah.
And that was my quote alert. When we were talking about alerts, I put in an alert for VIX over 30.
There you go.
So we just got a VIX over 30.
Yeah.
29.99 is what it's at right now, but it just ticked to 30.03.
Yeah, E-mini's down.
That's kind of cool.
That is nice.
I forgot that I had that in. Because Jamal was talking about this week on Monday, how he puts alerts in and he got a flurry of alerts overnight when we had the crazy move on Monday. And I was like, oh, that's a good idea. I'm going to put an alert in for VIX above 30. And I just got it.
I love it. The double ratio too, if you're staying in the same cycle and you get tested on either side, the untested side, like Nick said, is going to be worthless.
Yeah.
You could turn it into a butterfly if it's cheap enough. So if you have the call ratio or the put ratio, let's say you have the call ratio and the market's dropping right now, if you can buy that symmetrical call long option to turn your upside into a butterfly, then you can basically remove the risk from that side and leg into a free butterfly. And you could do the same thing if the market reverses. So lots to consider there, but that's basically it.
Yes. Next one, please. On a day like Thursday, where the ES is down over 100 as I write this, do you just sit on your hands because you worry we're either going to fall a lot more or we're going to get a massive rally? Okay. But differently, are there times where sitting on your hands is the best play, and are there times where the market has moved well beyond its or are those times when the market has moved well beyond its implied move?
I think the implied volatility is picking up here. So the implied move for like the weekend is 150 points.
Yeah.
So I think you're still going to have situations where implied exceeds realized volatility. But yes, these markets are super volatile. So just got to be careful. But we are still placing new trades every day.
Yeah.
Just because the general market is moving to the downside doesn't mean I don't want bullish delta in Microsoft, bullish delta in United Airlines. Like there's single name opportunities, but at the same time, when the market is selling off like this and vols spiking, there's bigger opportunities for just trading the S&P 500 or just trading the NASDAQ, like selling far out of the money put spreads, far out of the money puts. Like that's where the value really pops up here.
Yeah.
So we're looking at everything, but adding more time to these positions is something we're doing into moves like this too. So instead of sitting in my hands and waiting for things to move,
roll, reduce some delta.
But yeah, I put in a January 2027, September of this year calendar spread in Microsoft yesterday as an example of like these prices are just too low, in my opinion, for such a big name tech stock. And I want to start to layer on some long-term bullish delta in here because I don't know when it's going to reverse, but I think it will reverse eventually.
Next one, please.
Can you please explain what the term gamma scalping means?
So you're basically just playing these moves in the market, whether you traditionally do it with like calls or puts, and you're basically just scalping these intraday moves. A lot of people do it with like tail options. So you buy 10 delta, 20 delta option on a very short duration, and you get a little bit of a move in the stock in your direction, and you scalp out of that position. It's basically a leveraged way to just scalp the small movements in the stock, is what it mostly means. But this market hasn't been great for it because it's been pretty one-sided. So usually do this like when you have choppiness, 20 points here, 20 points there, up, down. This has been pretty one-sided for the most part.
Indeed.
I got my email for my alert too.
Love to see it.
Get the email, you get the platform. I probably have the text too. I think you get a text, right?
Yeah, you should.
Yeah.
If you have it enabled.
Yes. How does the stock MSTR work? I'm trying to understand why anyone would buy this versus just buying Bitcoin.
Great question. MicroStrategy is now Strategy. It started as a company. It actually was as a tech company. It still is. But Michael Saylor went on a heater and has just been converting this company to just buying and acquiring as much Bitcoin as possible. So last year, this was the volatility product of Bitcoin. Because they had so much exposure to Bitcoin, when Bitcoin would rip higher, MicroStrategy would rip even more. And same thing to the downside. MicroStrategy went from 530 to what it's trading right now. And
like what?
Now it's at like 130.
Yeah.
I think the problem now is there's so many spin-offs of MicroStrategy. There's like MSTR, there's MSTK, MSTC, MST whatever. And it creates the same issue where the liquidity isn't all going to MicroStrategy anymore. It's going into these other spin-offs.
And Bitcoin hasn't been
good. But yeah, for MicroStrategy to be volatile to the upside again, you need Bitcoin to have 10K days over and over and over and over and get back to 100K real quick. And you'll see MicroStrategy rip higher in a violent way. So it's like to put it simply, it's the volatility product that you can trade that will look like Bitcoin's movement.
E-minis down 41. You got the VIX above 30 here. Ouchie wawa. We're going to take a quick little 90-second break, come back with Jamal for This Week in Stocks, and we got the opening bell fast market coming up right after that. Going to be a wild day today. Get your hard hats on. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Mikey, we are back, my friend. We've got E-minis down 43. Oil up almost $3 here. It was up $3 and change at 1.9734. You have volatility futures at 27. And per the alert that I put in with Jamal on Monday, the VIX is above 30. I just got that notification on my platform, the email, the text, everything. Jamal, This Week in Stocks, rough.
I mean, it's a double-edged sword, right? You put these alerts out, it's not really what you want to see, but you do want to know. And I feel like that's a level that's you just want to pay attention to. Look, I don't really want to start here because it's not gonna end well. Okay, we should actually start with these games last night. Nick, I don't know if you know, but 2 more Big Ten teams just won, and they just went a little bit further. I just want to make sure you're aware.
Are you trying to talk some smack
one
about?
of them is Purdue, who Mike has in his bracket. I know.
Yeah, I poo-pooed the Big Ten. Yeah, I mean, I feel like every other year it's like you have, 80% of the Big Ten gets in there and then they all lose in the first 2 rounds. So I feel.
But this year the Big Ten actually was really good.
Yeah,
it actually really was. It really was. I mean, this has proven it. But
props to the Big Ten.
There's some pretty good teams,
except for Wisconsin.
Oh, you said it.
Props to the Big Ten, except for the frauds.
That's fair.
In Wisconsin. It's okay.
That's fair. High Point University, look, man, they.
Did you get?
Yeah, did we lose audio?
I think we lost Jamal's audio.
I think we're.
Oh, they shut you off, Jamal. They shut your.
It's my bad. It's my bad.
I was gonna say they said whatever he's saying is just gobbledygook. That's what they said.
Yeah.
All
No,
right.
I was saying High Point University, they actually had a pretty good. They paid a lot of money for their team. As we learned, they have money. As we learned on Monday from Panetta. I don't know if you know this, Mike. They do some wild stuff at that school, man. It's crazy. I
actually saw like short video about it, like a TikTok video, that it's like $70K a year to go there. It's basically like not an actual school. It's just like they like a program to like build you into an adult. And so
yeah, I'm glad you said that. I kind of knew that already, but I didn't want to say that on Monday.
I didn't know that. I didn't know that it was actually just like not a school. Like it was.
It's like if you don't get into NC State or like Wake Forest, or if you don't get into Duke or something like that, yeah, the High Point University is there for you.
But it's quite expensive. You walk out of there with like $300K in debt. You know,
I don't think most people who are going there have much debt. Is the thing I feel.
Okay, all right.
A lot of them.
All right.
Just not all of them. Obviously, some of them, most of them probably take out loans, but there's a lot that have loot. And a lot of it's a well-funded alumni base. I think.
Okay, so it's a fun time.
So they literally made a university for the rich kids that don't try in school that still need a degree.
Yes.
And they know their parents will pay for it.
Yes, that is exactly what it is. Yes, that's
pretty wild.
exactly what it is.
Exactly what it is.
Yeah. Wow.
Yeah, it's crazy. I mean, going back to Monday, that was when we were talking about this. I mean, what a surprise. We're right back to Monday's levels on the ES and most of the other indices too. It's not looking good out there, folks. Look, the dollar is above 100. VIX, as you just said, is above 30 or sitting around there. Jeez, bonds are at lows.
111 on the bonds right now. They just got below 112.
The interesting thing is the ebb and flow of oil prices, right? Like earlier, when we had these similar levels, oil was at 100 on Monday, I'm pretty sure, prior to all the big moves. And it's at 96 now, right? So that's kind of not necessarily comporting with me. Gold is positive. I don't know why. I feel like that relationship has been really weird this week between gold and the dollar. It's really oscillated a lot.
Yeah.
I always like to do this more recently with these green shoots. Bitcoin is at 66K. It's at the lower end. It's not breaking down lower. Obviously, S&P is broken down lower on the lower end of its range. Bitcoin is too, but like I feel like we've stair-stepped down, in markets. Like we were at 6,600, now we're at 65, now we've broken through that. Bitcoin still seems to be sitting at 66. I'm worried because if we get uglier in this market, then that breaks through 60. Markets break through 64, probably 100. I mean, and the VIX gets to 40. It could really get ugly. But this is kind of the pattern we've seen. Up on Mondays, down on Fridays, heading into the weekend. There was news yesterday, right, about pushing back any further strikes to Monday, April 6th. It's interesting how we get these dates that correspond with either a Monday or a Friday, right?
Yes. I think we've caught on to that MO. That the weekend is usually the when the tweet storm comes out. Yesterday's move after the close didn't make me warm and fuzzy. You had the taco has clearly lost its luster. We're down to it's Taco Bell tacos. It's not local, beautiful, homemade Mexican restaurant tacos. It's Taco Bell. It's slop now.
Yeah, I mean, well, the whole taco trade, right? Trump always chickening out. I mean, you can chicken out of really tough talk about tariffs that you're going to impose, but how can you chicken out about when you already had airstrikes against Iran, and then Iran comes back and says, they're willing to keep the Strait of Hormuz shut for the longest time. You can't do anything about that. You can't chicken out of that, right? And so that's the real problem. And so, I don't know, man, like going forward, I had the bullish positions I have on. I pushed a lot of this week has been spent, and as I'm sure a lot of people, it was the 21-day cycle. I pushed a lot of stuff out to May, and I don't think, man, I don't know. Your question earlier this week is a poignant one now. Earlier this week, we were on Last Call, and you're like, what's the area?
Yeah.
What's the area where we buy? we're damn close to an area that we threw out on the show. What, 6,400? I don't necessarily. I'm saying that because I'm not putting on any more long positions at the moment.
Sure.
At this point, I think it's a waiting game. I mean, you have to wait to see where this thing goes.
See, that's my ultimate. Like, it's everybody. It's easy on the way up, and everybody's like, "Yeah, you just buy them; they go up every day." On the way down, there's got to be a spot where you say, "Okay, that's my spot." I think I've said, and I'm at higher prices. I was at like 65, 66. Like, that's a spot where I'm getting long.
Mm-hmm.
The hardest thing to do, I think, is to look at this market and be like, okay, I'm going to start getting long here. We go lower. I'm going to get a little longer because it looks like duty. It looks like duty, but I think like at some point you got to start looking at that, right? I mean,
yeah, I think if you look at just historical sell-offs, like we're down 10%, or almost 10% right now from the highs in SPX. If we get down 20%, like that's where you really got to start considering. Because like historically, the worst market years have been down 30%, down 40%.
Mm-hmm.
So if the closer you get to that, the more extreme this move obviously is, and you got to start ignoring the tape and start getting long at that point in a responsible way. Keep the risk in check, but the further down we go here, the more the opportunity is going to present itself, and there will be buyers eventually.
Mm-hmm.
And when the buyers come in, it could be a swift rip to the upside.
Yeah.
Agree. I just don't want to do it anything near term at this point. I mean, I'm a month out. I think you got to at least be a month out because this situation is volatile. We have zero control, obviously, over the situation over there. And so, I mean, obviously, that's what we're moving on. Like it's different than last April when it was tariffs and Trump could just say rhetoric because he was the one who's creating the administration was the one who's creating the fall in the market, right? Because of tariffs. Oh, we were so worried. Oh, well, the tariffs aren't going to be as bad. We rise. Things like that. In this situation, I mean, it's the global conflict that's creating the situation now, and you can't just back out of a war.
Yeah,
you can't. Right? That's the issue. So. Initially they said, 4 weeks? Well, I mean, we're beyond that at this point. It's been the whole month of April, March, and we're heading into April, bless you. And so I am just being cautious and adding the longs. Like you said, Mike, I've gotten enough here. Even yesterday, I spent time rolling different things and changing a few strikes here and there. It's going to be more about adjustment than straight up ads. And I'm certainly not adding anything within a 3-week time period now. Not longs, like vol, sure. Iron Condor or something, within the 3-week period, sure. Yeah. But not directional. Directional, I got to be in May. I got to be in May and June now.
I agree. Does the move yesterday, does that concern you that the luster of the taco has gone away?
I mean, it was a day early, right? We discussed Fridays, and don't worry, we're getting the move today too. But it was a little day early. It definitely concerned me that it was already happening on Thursday. It was like they were getting ahead of it. Because again, this has been 4 weeks straight that we've seen we're up on Mondays, we're down on Fridays. And I felt like the market got a little bit ahead of it yesterday. So I am a little worried about what's going to happen today. For those who are chartists, I mean, we're on the 50-day moving average for ES and NQ. We're a little below it on NQ, and we're not quite there, believe it or not, on the Russell, which is showing some resilience, and we're on a 50-day moving average for the Dow. So that's Dow, NASDAQ, and S&P, and that's really not good. They're kind of ugly.
6,500 has been the taco spot. This is the second taco we've got at 6,500.
I think that's where his break even is.
That might be his spot.
But
his pain threshold.
But he already pushed it. But he already put the pushback date is already set for April 6th.
Yeah.
I mean, what is he going to come out and say today? That's gonna be a. I don't know. What can you come out and say today that'll alleviate markets?
That is a good point. You can't because he said something yesterday. He can't say something new today.
You can't do it twice in a row.
No, it would be a kind of a flippy floppy look.
Mm-hmm.
But yeah, a lot of these Mag 7 stocks are near lows. and there's plenty of opportunity out there. I loved your call, Jamal, about just being longer term with direction. Like we're looking at June, May. Like I threw on a January 2027 calendar spread yesterday. So there's stuff you can do to keep the risk small and put a ton of time on your side.
Mm-hmm.
Yeah, I think that's what you got to do at this point, and just wait it out. Because, like you said, Mike, the bullishness eventually comes in these situations. It just, and this one is a little worrisome because, again, we don't have any control over ending a war in Iran. So I feel, it would seem if we could, we would have already done it. That was the idea going in, right? Oh, it's going to be quick. It's going to be pretty swift. It hasn't been that at all. Yeah. It's 4 weeks now. We have, and everything you look at, 4 weeks of volatility in gold and silver, 4 weeks of VIX closing above around 24, 25, 4 weeks of the dollar basically hanging out in the par 100 range, 4 weeks of this selling that we've seen so far. So hold on to your hats. All I can say, we'll see what Friday brings, but I'm a little worried about today.
Yeah, today I think, if it plays out like every other week, Friday has been the most painful of the days all week. So that could certainly play out today, but we will see here in a couple minutes here. We got the opening bell
4 minutes to go.
Coming up next. Jamal, thank you for joining us. We're going to take a quick little 90-second break, come back with the opening bell, and then we got fast market, a couple trade ideas. Those will be interesting to look at given this the moves that we've seen in this market. We're going to take a quick little 90-second break. You're listening to Tasty Live. Thank you, Jamal.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, my friend, we are back getting into the opening bell here in just about a minute. You've got E-mini S&P 500 futures down 31, about 0.5% to the downside. You have NASDAQ down 144. You have the Dow down 200 and the Russell down 14. Everything down about 0.5% here. Oil, 96.90, up $2.41, about 2.5%. Volatility futures at 26.75. They're up about 50 ticks here, a little under 2%. The VIX itself at 29.69. You have bonds down in the 111 handle. They just got spanked here in the last hour or so, going from the upper 112 handle down to below 112 here. Gold and silver both up a little bit. Gold's up $43 here, about 1%. Silver up about 10 cents here. The gold-silver ratio sitting at about 65 here. Bitcoin down $1,800 on the futures spot, down 1,600. ETH as well, moving that way. Ugly.
Yeah, not looking good, but I'm interested to see what this SPX Iron Condor is going to open at.
Yes.
We put in our.
There we go.
Yeah, we put in a 0-day or 1 day to 0-day Iron Condor yesterday on last call.
I just got filled on mine.
There you go.
260. Good job out of you. I owe you lunch. Gigi's fried chicken for lunch.
Thank you.
Yummy.
Appreciate it.
On me.
Yeah, we had a feeling that yesterday at the close we were down like 120. We had a feeling maybe we would chop within the implied move, at least on the open, and that's what's happening right now. Because to your point earlier, we had that Trump tweet that ripped the market higher like 80 points, and then it sold off again. Yeah. But in SPX, we actually closed, or the E-mini futures, I should say, we closed at 65.25, and we opened at 65.35 this session. So like the overnight session. So even though we're down 40, it's actually pretty close to where
it's basically unched from the move. The taco has been taken out.
Yep.
Got E-minis down 38 here. Oil $2.30. The upside volatility futures at 26.95. Getting a decent move in gold. I feel like I have to. I was going to hold on for dear life with these puts, but I feel like I have to roll these and sell something against it too.
Yeah, I was looking at Nvidia. June, May.
Okay.
Diagonal spread. 175, 190 for $9, $15 wide.
There you go.
I think you could also look at some longer term stuff. Like yesterday, I did a January 2027 long option and then a short September option. So you can get into some cheaper calendar spreads up where these stocks were trading. So like Nvidia is trading at 170. The 200 strike is probably where I'd go, just a nice round number. And you can go pretty long term and do it for not that much premium, especially if you're selling a September option against it.
I think I'm going to look at the wide SPX Iron Condor.
Yeah.
That we kind of talked about. Like, you got a VIX at 30. Defined risk makes you feel a little bit better, but you got volatility super high. So I feel like you got to kind of put out a sort of short premium core position here further out in time. I'm thinking around a 1 standard deviation for the short options and then going like 50 or maybe even 100 points wide.
I like it. I like it.
And do it for like 1/3 the width of the strikes here. I'm looking at 5,900. Should I move that to? I'll do the 5,900, 5,800, 6,900, 7,000. So it's about 500 or 600 points in either direction here. I'm looking at 100 points wide, so it trades at about $31. Has about $6,000 in total max risk if you're fully in the money at expiration on this. I'm hoping. I would think that this would be a nice trade, even if I'm tested on the upside, just because volatility is so high here. But I'm hoping we get a little bit of a vol contraction and a slight bounce. That would be ideal for this position. I also rolled out my gold. I had a short put in gold into this up move. I rolled it out into a strangle, so I had just the puts. So I had the 420 puts. I rolled to the 400. 450 strangle for a small credit there, just reducing my overall delta because I have long delta in gold. I will not miss out on any of the upside if there is to be some. And I can also probably, okay.
Beautiful.
E-mini's down 50 here, low of the session, not looking good. Oil up 258 here. You got volatility futures up 89. The VIX at 30.08. Spooky. Not good. Not good. Gold has given up its little bit of a rally here. Anything else you are looking at specifically, my friend?
I just got filled on the Nvidia long-term calendar spread.
There you go.
So I just went out to January, did the same thing. Bought the January 200 call, and I sold the September 200 call against it.
Okay.
And the total package is $700. But if you look at the Theo P&L analysis mode, if we get a 20, 30-point rally at any point this year, it'll be a $200 winner. So it's just one of those things where you're layering in some long delta with a really hefty short premium against it. So if we do tank here, you can buy back the short option, and then you basically have a very cheap leap option or close to a leap option.
Yeah.
I think that's an interesting way to play these big moves to the downside. Still taking advantage of the near-term IV pop. So I have one in Microsoft. I have one in Nvidia. We'll see how they go.
I just closed out of a strangle. I had an AMD small, tiny little winner, taking off a little bit of risk here. Some of the naked positions that I have out in April, just to reduce some of the exposure I have. What else? Nothing looks good. I mean, you got, like, if we just look at the S&P 100 here, you could sort it by biggest moves to the upside, downside. You got some of the banking stocks are coming for those. You got Goldman Sachs there down 19 and change. Citigroup down a handful. You got some of the tech names like CRM, Oracle that had a little bit of a bounce yesterday. It felt like they were at lows. People going to find stuff that's already down 50%, thinking that they won't go down another 50%. But we know that isn't true today. You've got to the upside, some of your defensive stuff. You have Philip Morris in there. You have Kraft Heinz, AT&T. I mean, this is not the list you want to see if you are expecting a nice bounce in the market. Some of the oil names, you got XOM in there. You got Dow Chemicals in there as well. Pepsi. I mean, it's not a inspiring group to the upside there.
No. And we've seen this the last couple of days where it hasn't been a swift sell-off. It's been a stair step lower.
That's the most painful too.
Yeah.
The swift one, you get it, you get the move, you get the pop and vol.
Yeah.
You get the relief. Here, it's just slow.
Yeah. We haven't seen this in a long time.
Yeah.
And it's being reflected in the VIX and the VIX futures.
Oh yeah.
But yeah, we opened the session this morning. We were down like 25, then we were down 35, now we're down 50. It's a slow selling.
Looks horrible.
Yeah. But
Looks
Apple,
absolutely horrible.
Apple's up today. To your point, staying strong here.
It's been the one stock bucking the trend.
Yeah, Apple, Costco, and precious metals, gold and silver.
Yeah.
USO ripping higher at 121.
Oof.
Yeah, USO was a big beneficiary of this oil move, of course, but also the backwardation in oil. USO seeks to replicate futures performance. So when you have bafwardation, steep backwardation in the crude oil contracts, you'll see USO behave like this, where it pops in a big way, stays afloat, and now
it'll drift. It'll actually drift higher because it's the way those products work is it's mostly in this front basket, right? So it's trading 70 or 97 right now. As we get closer to the contract expiring, the liquidity shifts into the next contract here at 93. So it basically sells out of 97 and buys 93. And there's a 4 or 5 handle spread there between the two contracts. So that's a positive carry month to month, contract to contract. Typically, you see it the other way, where it's in contango, where there's a negative carry. You're selling, volatility or oil in this case, where it's at a lower price and you're buying at a higher price, and there's a spread there that drags the price down. That's why you typically see volatility products kind of drag to zero, whereas here, when you have backwardation, it's going to drift up. And the same thing with volatility futures. If we look at the vol futures here, they're going to be pretty steeply backwardated. If I had to guess, I've done this for a little while. So volatility futures here, 27.30, up a full point here, about almost 4%. You can see volatility futures in the back months, 25 and change, 24 and change, all the way back to the end of the year here, that's at 23. So if we stay like this, these vol products like your UVXY or VXX, they're naturally going to go up without even needing vol to go up all that much, just because they're selling front, buying back. Of course, it's a question whether that sticks or not. That's always the biggest question.
Yeah. And the inverse of that, SVXY, which is an inverse volatility product, this product is at 1 year lows.
Yeah.
Almost. So this is another one that I like to keep my eye on, because when we get these big moves to the downside and the vol pop and the backwardation, this product will tank. But we know historically, eventually volatility will go back into the teens, we'll get back into the contango curve. And when that happens, SVXY will drift higher. So I like to look at SVXY as if you're trying to buy shares in something that will benefit from volatility going back to normal eventually, SVXY is one of those products. You can see it in the chart.
E-mini S&P 500 futures down 47 right now. You got the NASDAQ down 200, the Dow down 445, and the Russell down 19, oil 97.26. You have volatility futures up a full point now. They're at the highs of the session here. The VIX itself at 30 and change. You got bonds down 22 ticks. We're back at 112. You got gold and silver both bouncing, but don't look good either. 44.52 on gold, silver at 68 and change here. Bitcoin as well, not getting any love today. Anything else before we take a quick little break?
I don't think so. I mean, the market will show us
the way.
It'll show us the way eventually.
To zero,
maybe. But yeah, a lot of these stocks are selling off. You have banks selling off.
Yeah.
Also, down 2%. JP Morgan almost. But yeah, Costco continuing its rally higher. Apple, same story. So Costco could be interesting.
$4.
Yeah.
I don't know if I like getting long things that are up on a day where the market looks awful.
Fair. But yeah, I mean, I think Costco, Walmart, McDonald's, those are your cheap food sources, we'll say.
That's the recession tape.
That's what I'm saying.
Yeah.
We're seeing it live. But yeah, I think there's definitely interesting products that are moving to the upside, but this market's going to be volatile today. Feels like.
I don't really have anything else to do here. I mean, this pop in volatility, I could close out of this Unity stock. That's going to be a goner. I don't know why that stock is up $2 and change, but that can.
There you go.
See you later on that one. That removes a line item from my portfolio. That's kind of nice. But yeah, it's tough in a pop in volatility like this. Anything that you've sold, whether you're directionally right, even if you sold calls and the stock is down, you're not getting paid today because volatility is up.
Yeah. My SPX Iron Condor, the 0-day, is a 64-cent winner right now, so it's coming in more slowly than yours did because it's more narrow.
Yeah,
that makes sense. But yeah, I've got a working order in that. It's 30 cents off the bid. So we'll see.
Cool. All right, let's take a quick little 90-second break. We're going to come back with fast market. This should be an interesting one because we've had some big movements in the market, so maybe we'll get some trade ideas from the peeps here. We're going to take a quick little 90-second break. You're listening to Tasty Live. E-mini's down 44.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Thank you, my friend. We are back. E-minis staging a rally. I shouldn't even say that. They're down 35 here, 64.90. You've got the NASDAQ down 156, the Dow down 300, and the Russell down 11 here. Everything down about 0.5%-ish to start the session. Oil catching a bid, up $2.76, 97.25. You have volatility futures up 79 here, about 3%, 27.05. Volatility futures at 29.30. You've got the bonds at 112.02. Gold and silver both relatively strong today, but not looking great. You got gold up $58, silver up 57 cents. Bitcoin moving with the rest of the market here down $2,000 on the futures. Icky, not looking good.
Yeah. Gonna see a volatile day today.
Yes.
VIX ticked above 30 for the first time in a while. And yeah, gold trying to catch a bid, crude catching a bid, silver catching a bid. So it's an interesting story that's playing out today, with only a handful of equities in the green in Apple, Costco. So yeah, we'll see what happens here.
Yeah, I've been just closing, scratching.
Yeah, I closed my silver position.
Battling. Yeah, I closed off a silver put that I had. It was a scratch, but I'm happy with the scratch. I'm trying to close out of some of my long gold exposure that I have with this short put spread, but markets are moving around pretty violently here. There we go. You want to see what the peeps have for us here? A little fast market?
Let's do it.
Let's do it. Damn, I'm so off. So off.
One day.
MU.
I should cue you in. That's because I've got the internal.
You do. You're kind of a music guy. You
Yeah,
gotta.
I'll cue you in next
You're a
time.
man of many arts, and there's Mikey is like an onion. You peel one layer, and there's another beautiful layer underneath, and then you peel that one, and you're like, oh my god, it just goes on forever. So many dimensions to that young man over there.
And then you get to my gambling side, and it's rotten.
And then you're like, oh my god, this guy's a psycho.
But that's how onions work.
Yes. Yeah. Very good.
Micron.
Bullish. All right. Today's break below short-term support makes me cautious, okay? Selling a 293, 20, 450, 470 iron condor in May for over $10. Okay. I like this. If you did this yesterday, you're probably having a nice little day today. Let's see what this is trading at. Okay, 290. So that's about a 15 delta. That's the long option. Okay, so you're leaning a little bullish. So 320, 290, 450, 470.
Hey.
Yeah, so this is about 980. Let's see where we get filled here is what the mid price is.
322.90. Yeah, you have a ton.
Markets are low wide here. Okay.
Yeah, 30 by 20. 30-point wide put spread by 20-point wide call spread. You're picking up a lot more premium on the put side because you're taking on more risk, of course, but you're also kind of within that expected move. So, yeah, I think it's a nice little trade. Play for this chop.
I put it on.
Nice.
I just got filled. So did the exact trade. We did it at 980. So you're up about 20 cents on us so far. So I like that. Thank you, Ian. Sacramento.
Love it.
Interesting trade.
What else we got?
E-minis down 50.
Ew.
Low of the session. Icky. Volatility future. Where's the VIX at? 29.65.
Crazy. Chipotle could go with the 30-day puts here or a more conservative diagonal between April and May. Curious what y'all prefer from Fatima. Toronto.
Yeah.
Let's check it out. Yeah, Chipotle is $30 now. Kind of crazy to see. Was trading at 60 just last year. And it's tried to catch a rally, but it's sold off from there. Caught a high of 42 recently. So I like the idea of selling a put here. We haven't seen sub 30 pricing in many moons. So 30 strike put, trading for $1.50 out in May. If you just sell the put, you'll be in the earning cycle in the 49-day. But if you just sell the put, it's not going to matter if you get the rally. You'll still be able to get value out of that short put. So I think
this stock's a dog.
Yeah.
CMG is a dog.
Only $500 in buying power for the short put, but the max loss is $2,800 if you sell the 30 strike. So if you wanted to keep it really small, you could go with the diagonal spread. Buy May, sell April. And it's going to be a $2-3 debit for a 3-point wide, 3.5-point wide diagonal spread. So I think that could be something interesting. And then you can roll into the earning cycle. If your April short put or short call goes to 0 or close to it, you can roll from the 21-day into the 35-day, which is where the earning cycle is, and then pick up more premium that way.
I'm going to lean slightly long. I did a 30 straddle with the 35 call. So a straddle with a big lizard.
Yeah.
I did it at 380, 375. So you have a tiny bit of risk to the upside. It's more of like a neutral / short vol trade than it is bullish. But my risk to the upside is very minimal. If we get a 35 print on CMG, this will probably work out pretty nicely for me. So I'm in. I did that at $3.75. It gives you a break even at 26-ish. So we'll see what happens here. But this CMG is one that has had my number for quite some time.
Yeah. It's been a dog.
It's down
for sure. But yeah, I like that trade.
Very nice. Intel, IV is elevated and price action looks range bound, selling a 1 standard deviation strangle in May and planning to close it before earnings. Well, planning is great until you get a 10% down move in the market. Then you got to adjust those plans low. Omar, Orlando, Florida, Intel.
Omar, you're on the right track here. We actually placed an Intel trade yesterday.
For Johnny Trades. We did the short put call ratio.
Yeah, so it's another way to play it. But yeah, the 1 standard deviation strangle today is looking like somewhere around 32, 33 put strike and the 52.5, 55 call strike. So pretty wide, but you can get close to $2 for it. We got into the 40 short put and the 50-55 call ratio yesterday. So just adding a little upside kicker in case we rally off these lows in the market. Market down 60 now.
Oof.
Crazy.
I did the 35-55.
Okay.
So you do have some call skew here. I mean, the stock's at 43, so the 55 call, which is $12 out of the money, it is about a 20 delta. The 35 put, which is about $8.5 out of the money, is a 17 delta. So you have, a higher delta for further out of the money on the call side. I did that in May for $2.23. And then I also have a Jade Lizard type position. I'm short the 40 puts and the 45 calls, and then I'm long the 50 wings. So I'm certainly neutral here. Short vol.
Love it. So yeah, we're in. Thank you, Omar.
Yes.
From Orlando.
E-minis down 63 at the moment.
I just got filled on my SPX 0-day into this sell-off for $1.
Nice.
So took another $100 out of that.
Love it.
And we'll see. Maybe at the end of the morning session here, we'll throw on something for the weekend.
Cool.
Coinbase leaning bullish with support near 150, selling a Jade Lizard 150 short put with a 200-210 call spread for decent premium and no upside risk. May expiration from Chris in Austin, Texas.
Ooh, Coinbase not looking good. Down $11 today, about 6 to 7% here. Ooh, the 150. We're looking at May, so this is a pretty directional. Your short put is about a 35 delta here in May. So it's a pretty directional shot that you're taking here. The 200-210 call spread trades at like $1.70-ish. You're selling a $13.50 put to $1 call spread. You're really just short the put. I think if you were looking at this trade, I think you're really just short the put. I don't know if I want to be that directional here. Maybe thinking maybe like I'm closer at the money Jade Lizard.
Yeah, so you could actually, because this is selling off even more today, you could go from May into April. And you could do a 140 put in April with a 180, 185 call spread for 587. So same idea, a little bit more narrow on the call spread side, but you're in the 21-day cycle, and this will decay rapidly. You're not in the earnings cycle. So that's another consideration too. Into the sell-off, it creates this opportunity for more near-term type of stuff.
I sold the 125 out in May, which is about the 1 standard deviation. So I sold the 125. I sold the 170, 180 call spread against it. The 170, 180 call spread, 10 points wide, trades at about $4. So you're getting like $6, $6 on the put, 4 or 5 on the call spread. I did it at 965. So technically I have a tiny bit of upside risk, but really this is more of just like kind of a neutral / almost kind of slightly bearish position here. Omnidirectional.
Yeah.
We'll call it. E-minis down 70, low of the session.
Crazy.
All right. So we are in on the Coinbase Jade Lizard.
Sweet. APP. App loving. Sold off quite a bit recently. Not ready to get long yet. So staying neutral with an iron condor in May. The 290, 310 put spread, 20 points wide. 530, 550 call spread, 20 points wide, with strong call skew from Ethan in Charlotte, North Carolina.
Yeah, this is a stock we've tried to trade many a time. I mean, you got an $8 wide bid ask spread on a 20-point wide iron condor.
Yeah,
it's going to be a really hard one to trade. The Coinbase trade, I was like, I don't know. This one, I feel like you gotta just avoid this.
Yeah, it's a little tough in May, especially because you've got earnings priced into the May 8th cycle, the 42-day cycle. So with risk on both sides, neutral risk, it's going to be a lot of risk without a lot of profit until that earnings cycle. So I think for me, if I were to do something in this product, I would go to April and just go more narrow.
Okay.
Do something like a 10-point wide or a 5-point wide, and just keep the risk small. You can still you could do a risk one to make one in the 21-day. You could do a 340, 330 put spread, 440, 450 call spread for $5. And that one will come in quickly because it's only 21 days if you're right. And you're in this nice little channel here. So
it's just it's going to be getting filled.
It's still, yeah.
And the P&L is going to fluctuate wildly. I mean, it's a tough one.
Maybe wait for earnings.
Maybe look at it for earnings. Yeah.
Just earnings.
Yeah.
Exclusively. Because that's when you'll get some more liquidity.
Sure. I think in a market like we have right now, where there's just so many other places that are more liquid and more interesting from my perspective, I would rather just keep this one on the back burner. So I'm gonna pass on APP now. Maybe we look at it for earnings.
Fair. XOM, completely neutral in XOM here, selling a 145, 185 strangle in May from Mark in Dallas, Texas. Texas showing up today.
Yeah, 145, 185.
Didn't you do something in here yesterday?
Yeah, we did a put diagonal spread in the Johnny Trader portfolio as our short position. Not working today with oil up on the session, up $3.13 on crude oil futures, XOM up $2 and change. Volatility futures at 27.75. The VIX itself at 30.20. Woo! 30.19.
So for this one, I think this is another one. You're in the earnings cycle. You're selling risk on both sides. It's going to offset your theta decay until the earnings announcement. The risk here, I think, is to the upside in XOM. So I might consider just ditching the call and then moving the put from 145 to either 150 or 155 to pick up some more premium and just sell the put side. You're still neutral in that sense, but you don't have the upside risk in case this thing really takes off. Given the market situation right now, I feel the risk is to the upside in this one.
I think I'm going to play this. I hear you on the upside risk. I don't know if I can sell the puts, though. I'm thinking maybe a ratio spread. I was thinking the 170, 175 right at the money, the long call spread, and then selling the 185 where they're looking at. It trades at about a 20-ish cent credit in May. You got to break even up at 90, 190-ish. So you got another 20 handles to the upside, 10, 15, 20% on the stock. No risk to the downside because I have enough oil short vol / short delta into this move.
Cool.
All right, so I got filled on that. So I did that at 20 cent credit. Small credit.
I like it.
It's neutral. It's a neutral position. If we fall out of bed here, it basically does me nothing. If we kind of chop / go higher, that's kind of the best case scenario.
I dig it.
Tail risk on the upside.
Index.
Just straight up index. Okay. Waiting on any headline or tweet that could shift sentiment. If we bounce, indices like SPY, Qs, IWM, and DIA all offer good premium, selling a bullish iron condor wider on the put side. Okay, Derek. I think this is an interesting spot to do that. I did a wide SPX iron condor this morning, which didn't lean bullish, so to speak, but it is short vol. And so by that kind of setup, you are somewhat bullish because you expect volatility to come in on an upside move. So I did that. I also have downside crab trades that are like, I would call omnidirectional. You kind of want the market to chop here, volatility to come in because you're selling more units on the tail. So I have this in. I think if you've avoided the downside move that we've had here, you got to start looking at like wide iron condors or strangles if your account size is big enough out in May, because you don't, this 30 mark in volatility, you don't get much higher than this most of the time. Yeah. Not to say you can't, but this is like, this is a spot where you got to start considering that stuff.
Yeah, I think if you're doing something like this, I like any of these, and I totally agree with you. If you get a reversal, you could see a swift market rally. Mm-hmm. Maybe not to all-time highs, but definitely from the bottom here. But yeah, I like the idea of going like a 10-point wide put spread with a 5-point wide call spread, or any kind of ratio like that, like a 20 by 10 or 10 by 5. Yeah. I'm looking at the 21 day in April and the Qs. The 540, 530 put spread.
540. Okay. So you'd go into May?
April.
April.
Yeah. The 540, 530 put spread.
Okay.
And then the 600, 605 call spread for $3 almost. So you have risk to the upside, but it's negligible.
And you're doing like a dynamic iron condor where your put side is wider than the call side. So it would be a blessing if you were like at 590.
Yeah.
This trade would be great.
Yeah. So it's definitely a way to take advantage. You don't need to cover the risk on the call side completely, because if the call spread goes in the money, it'll be trading for about 250. Your put spread's going to lose value, and you're collecting 280 up front. So even if the call spread goes in the money, it'll be a scratch or a small winner.
Very good. I'm already in. I like this situation if you are looking at new trades and you have better timing than me. Next one, please.
Microsoft taking a shot here. Pure speculation. Iron Fly centered at 400 with 20-point wide wings from Joe in Vancouver.
So you're basically like buying a butterfly here. What are we thinking? In
400 20-point wide wings, probably April.
So I have some long delta here. I'm short the 350 puts in May. So you want to buy a butterfly. I mean, the 400 strike, the stock is down another $8 today, and yesterday it was down like, what, 10?
Yeah.
So when he was looking at this, we were probably sitting at like 380. The stock's at 357.
Yeah.
If you're doing an iron fly, rather than selling the in-the-money put spread, just do a butterfly, a call butterfly. It'll trade for a debit, but it's the same trade.
Yeah.
You'll just have tighter markets. The in-the-money put spread, it's not going to be horrible because this is Microsoft, but it's, you got $1-ish wide spreads on each of the options and the in-the-money options. We could show this here. So the way you would do this, instead of being short, like let's just make this 10-point wide. And we'll go here. So this is 370, 380, 390. We're looking at this in April. And this spread is, we'll call it 30 cents wide here. Instead of selling the 380, 390, and then selling the put spread and then selling the call spread, this spread is going to be, about 70 or 80 cents wide because you have $1 wide spread on the in-the-money put spread that you're selling. Rather than doing this trade, which trades at an $8 and change credit, so you have $1 and change in risk, you can do the butterfly, which is the exact same thing. If we were just to buy the 370, sell 2 of the 380s, and then buy one of the 390s, you can see trades at $1 and change. Max profit is the same exact thing. It's your upside shot here for a bounce into into the end of the April expiration. So do the out of the money call butterfly versus the in the money ironfly. The ironfly we use at the money. It's the same thing as a butterfly, same exact risk profile. I guess I can add another $100 in risk here. What's that matter for me? And
it doesn't matter.
My 350 puts at the money getting my face ripped off.
I went to April and I bought the 380, 400, 420. So I did this butterfly here in April.
Okay.
Definitely going to April instead of May for me, just because May has the earnings, and for these butterflies, you want extrinsic value to be as close to zero as possible.
Yeah.
So April is the expiration for me, and yeah, it was $1.70 for a 20-point wide.
Cheap shot.
Yeah,
I like it.
Hood, running a diagonal in Hood, long June 80 calls and short the April 77 calls.
June 80.
So a little backwards diagonal.
More like a calendar type position.
Yeah, it's basically a calendar with the strikes being close. Yeah.
But you're using $300 extra in buying power.
Correct.
Because you're short call. This is why we don't do these like this.
Yeah.
Like I would rather go and buy the June 75 call and sell the April 75 and do this as a calendar spread, or go to May and sell like the 80 strike against it and do it at a $3 debit.
Mm-hmm.
You'll have positive delta into you want the stock to go up in either of these trades.
Yeah.
And it'll just use a lot less capital, and then you don't have the risk of like, okay, the stock's the expiration risk, the assignment risk of being long or short stock at 77 at the April expiration. That's how I would do this.
Yeah. I think because it's going to be cheap anyways, we would set it up with either a calendar or even a slight diagonal spread. Like you could buy the 75 in June and sell the 77 in April. You're paying over the width of your intrinsic value, but you still have no upside risk really, and your debit is going to be less than or equal to the other one.
I did the 75.80 June, May, and I also have long stock here. I've covered strangles, so I'm short the strangle with long stock. So I have some long delta here, along with a lot of other things.
Beauteous.
Yes.
One more. Last but not least.
Google. Okay, Google has taken a beating and might be the weakest in the Mag 7. I don't know about that. If you've looked at Microsoft or Meta, those are certainly weaker. Setting up a calendar around the 300 strike, selling May against June. Okay.
Owen and Reno.
Probably do something like this. So you're going June, May.
June, May.
A lot of time.
Yeah, I like it.
I'm going to go
300 piece. June, May. So let's see. The May is trading for $7. What is the? Bless you.
Thank you. Ooh.
Yeah, so you're picking up a little bit more premium by selling the May monthly. The May 1st cycle is where they're pricing in earnings with a little jump in implied volatility there.
Mm-hmm.
The 35-day. So the 300 strike there is trading for $5.50. But it's not that much of a difference. But yeah, the 300 strike calendar for $3.
Mm-hmm.
Why not? I can get down with this.
I think I might do just a June, May diagonal.
It's fair. But yeah, these are the kinds of trades that I really like a lot in this environment. Just taking cheap upside shots, long option with a lot of value. Worst case scenario is this market keeps tanking.
And you lose the debit.
Or you just buy back the short option.
Yeah.
The short option loses all of its value. You're just left with these June longs that have 80 days or 70 days by the time, if the market keeps going down. And you have these really cheap, unlimited upside calls now. And if you do get that big rally, they can come into play very nicely.
I did the 290, 310, June, May.
Cool. I did the 300, June, May.
There you go. Same sort of thing.
Yeah.
Very
That's
good.
it.
E-minis down 60 here. I think this was a good session. I think we got about pretty much all of them.
Yeah, I think
either have them on or.
I think our last session too, the fifth one, the bottom left corner was another X. So I think that's our zone.
Yeah.
Fortunately.
Well,
9 out of 10, it's perfect.
It's about as good as it gets.
That's an A. Last I checked.
Yeah. No, that's a good
from
one.
the people.
Yeah.
Love to see it.
Thank you. No applause because my stuff not looking good. We need a little bit of a bounce here. E-minis down 58. You have oil up $2.68. Volatility futures, they're hanging in there. I don't expect to see any volatility come out today. You got VIX at 29.82. The VIX futures 27.50. 5-year bonds catching a little bit of a rally. Gold and silver also kind of bouncing a tiny bit. We're going to take a quick little 90-second break. Come back. We got a market measure sponsored by the SIBO. A nice one on put spreads in SPX. We're going to take a look at those, see what the juice is there. We're going to take a quick little 90-second break. You're listening to Taste Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Let's celebrate, dance to the beat. Forget the walls and stomp the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we are side by side. Hey, side by side. When we are side by side.
Mikey, my friend, we are back. Let's go through a quick little market update. You got E-mini S&P 500 futures are down 50 here. You got the NASDAQ down 250, the Dow down 350, and the Russell down just under 20 here. Catching a tiny bit of a bid here from the bottom of the session and across the board, but not looking great. You got oil down up $2.86, down about $1 from the highs, 97.37 right now. We got as high as 97.87, so I guess only like 70 cents from the highs. Volatility futures in by a little bit from the highs, 27.35, up a point-ish, about 4% here. The VIX futures at 29.56. You've got bonds upticking a little bit. We're in the 112 handle. That's kind of nice to see. Gold and silver both catching a little bit of a bid here. Gold up $86, floating around that 4,500 mark. You got silver at 69 and change. Bitcoin still down here, 2,500 on the futures. Spot's actually at 67 and change. So nothing looks too encouraging right now. Just a little bit of chop here. I think I got to probably take off another one of these silver contracts.
Apple continuing its little rally here, up almost 1% in this big red market the last 2 days. So
does that make you feel good?
It does, because I do have a bullish position in there. But yeah, today's content, 0 DTE, out of the money put spreads, I think will be very applicable.
Yeah, these haven't been great this last couple of weeks, but they were amazing for a couple of years. I've seen some comments like, I did these and now I'm out some money. Yeah, well, when the market goes down, it's not the greatest trade.
Yeah, that's why the 0-day stuff.
Got to be prepared.
I size way down.
Yeah.
Because you're doing it every day.
Yes.
Ultimately.
And there's only a small amount of data. The data set is 3 years.
True.
I mean, first they had the Fridays that came out every week, and then they had the Monday Fridays, and then they added the Wednesday in there. So you had a Monday, Wednesday, Friday, and then they just added the full Tuesday. They added the Tuesday, Thursdays 3 years ago. So now we have every single day expiration. So there's only been a handful of years where this has been applicable.
Yeah. I'm intrigued.
Very good. Well, let's see what the gang put together for us here. 0 DT out of the money put spreads, sponsored by the SIBO. Take a look. So 0 DT options, I mean, they offer fast results, highly liquid. It's obviously an appealing trade. Lots of people are trading these in many different ways, whether it be just put spreads, iron condors, long spreads, long calls, long puts. People are seeing these all day long. Last week, we explored various mechanics around selling at the money put spreads, but many traders prefer staying out of the money. So we're going to look at out of the money spreads this time. Obviously, this means we're going to accept a smaller initial credit. So your closer at the money spreads are going to be juicier premium. Further out of the money, going to be lesser premium. But in exchange for that, you're going to have a higher pop and a higher win rate, given that we've had quite a decent move to the upside. But your overall pop's going to be better on the out of the money trades versus the at the money trades. Those are going to be more 50-50. The big question is, how far out of the money do we go? So we often use an expected move as a reference point for when we place these trades. But for same day moves, there are meaningfully different ways to calculate this. So we're going to talk about just kind of the different ways that you can incorporate expected move or different expected moves you could use for your trade entry here. What do you normally look at?
I look at the big orange bar on the platform.
That's the straddle / IVX that you see on the volatility when you look at like SPX. So if you look at SPX, it's this number right here, $41-ish. It's also represented in this brown bar in the middle there.
Yep. So that's where I start. It's always going to be around the 25 delta, 20-25 delta. And then you can manipulate it from there, but just visually, that's where I start every time.
I think that's a pretty easy way to do it. I usually go to delta and I go to just the 20 delta, but I'm doing usually iron condors.
Yeah.
So I'm doing both sides and 15, 20 points wide, depending on my risk tolerance for the day, but somewhere around there.
Yeah.
So let's take a look at this next slide here. So the VIX and the VIX 1D are things that are the VIX 1D is a newer product. I think that's only been around about 1 year. It's the VIX 1 day.
Yeah.
It's been around, I believe, 1 year, around that, just to give you an idea of what that looks like here. So the VIX 1 day, it's a VIX style calculation for 0 and 1 day options. So this today would look at this Friday SPX options as well as next Monday's SPX options. You see this constant kind of bid into the end of the day. You see all these green bars kind of close up at the top, and that's because you have volatility. The 1 day or the current day options go to basically 0, and you kind of move into the next day's volatility. So you tend to see this kind of spike to the end of the day, and that's just the mechanics of the calculation because you're moving more towards the 1 day options, which are going to have a higher volatility as you get closer to expiring today. But the expected move is basically just spot price, and then you can incorporate the vol, and you divide that by the number of days left until expiration. There's your calculation there. We just talked about the VIX 1 day, but it's largely composed of 1 day options rather than the 0 day options because of the time that comes off the board. So you only have 8 hours on these 0 day options. We have much less, or a little bit less than that now that we've passed has passed. And now we're going more into the 1 day options, so you get a little bit higher volatility. Because of this, using a fraction of the index derive the expected move is a natural way to place 0 DT trades. So we're going to be looking at VIX. We're going to look at the IVX, that expected move, the brown bar that Mikey mentioned. And we're also going to look at the VIX 1 day, which is more of a short-term volatility metric. Typically, would be a higher number than the VIX itself is going to be a higher number, but when you extrapolate that to a 1 day move, it's going to be a lower number than the actual VIX 1 day. The VIX 1 day is looking at the VIX, the short-term options, not looking at the 30-day options. So we're going to see how put spreads placed at different distances out of the money anchored to each of these expected move frameworks have performed. So you can take that expected move calculation, you can look at the VIX 1 day number, plug that into here. You could look at the VIX and plug that into there. And then you could look at the IVX and plug that into that calculation. That's how you'll get each of these spots if you are looking at this sometime in the future.
Yeah.
And doing these trades.
Love it. So yeah, same kind of idea, the same strategy, just using different frameworks for entry points, but using 3 years of data in 0 day SPX options collected every 10 minutes. Consider the results for selling one 20-point wide put spread every day, either at 9 a.m. or plus or minus 5 minutes from there. Experimented with short strikes at different multiples of the different expected moves or at the money as a baseline. Explored closing positions at a range of profit targets from 10% to 50%. Other trades were allowed to expire. Examined the total number of winning trades, total profits or losses, and the maximum drawdown. Largest amount someone could have lost following these mechanics every day by starting at an unlucky time in the study. And as we talked about yesterday, it's hard to be 100% lucky. It's also hard to be 100% unlucky.
True.
Yeah.
You should keep in mind these drawdowns are the string of drawdowns.
Yeah.
So these numbers are going to be more than what you can actually lose on a single trade.
Mm-hmm.
But it gives you an idea of like, okay, when things don't go my way, what's my distribution size, right? So you're taking $50, $60, $100 profits every single day. What's the bottom part of my P&L distribution on a day-to-day basis?
Mm-hmm.
That's what it's going to give you here.
Yep. So let's dive in.
Yes, the first ones we have. So we're going to manage these at different percentages. So we're going to start at 10%, go up to 50% of the total credit collected, and take a look at like the win rates, the average P&L, and then the max drawdown. So the first grouping that we're going to look at here is the winners closed at 10% of the max value. And then we're going to look at, again, these are, so the columns that you have here are each of the different entry points based on the volatility calculation. So we're looking at the at-the-money short strikes. That's what we've looked at in the past. And we're looking at half the VIX one-day expected move, and then the full VIX one-day expected move. And then we're looking at half the VIX one day. If you took the VIX and put it into the volatility calculation for expected move, we're going to take half that. And then we're also going to look at the full VIX expected move. And then we're going to just take the simple one that's right on the 0-day expiration, the IVX, that brown bar that Mikey looked at. And so you can see across the board here, they've all been net profitable. That is influenced by the higher win rate than you would typically expect. The pop on all these trades is going to be like 70. And you're realizing 90% plus pop. That is mostly because the market has had a significant upside move. If you started doing these this year, you're like, this trade stinks. Well, the market's gone down. Something you have to keep in mind here. You can see across the board your average P&L, kind of the best when you're doing at the money, because again, those are the most bullish. Market has gone up. You're going to have the most bang for your buck there. It gets better as you go more towards the expected move there. When you're using the VIX numbers are kind of, because it's 30-day implied volatility versus the IVX, the 1 day, 0 day. You're going to be closer at the money, which is going to skew the P&L. It's not going to be as good as some of those further out expirations, but because you're closer at the money, you have lesser max loss on those trades, which means lesser max drawdowns in the case of those trades. So you have, and the data speaks for itself. It's been 3 years. It's been an upside move, 10%, good profit.
Yeah. For me, I think this win rate is a little too high.
To be consistent.
You
expect this to come.
Well, no, it's just because if you're closing it at 10%, you're taking it off too soon for the risk you're taking.
Yes.
I think is what we'll see as we go down the road here. Some people in the YouTube chat saying, wow, 99%, 98%. That's because we're closing winners at 10%.
Yeah. And those max drawdowns are big numbers.
Exactly.
And that's because you're taking such quick profits. The max drawdown on an at-the-money put spread, it's going to be the same across the board, or at least it's going to be relative to whatever you manage at a higher number. Your max drawdowns are going to get lesser with just the purely directional at-the-money trade because you're collecting more premium, your winners are bigger, and so your max drawdowns are naturally going to be lower.
Mm-hmm.
So we'll see that kind of across the board, but your win rate is going to get lesser.
Exactly.
So here, again, managing at 25%, your win rate kind of comes in a little bit for the at-the-money strikes across the board. When you're managing the trade, it's going to be you're going to have a higher win rate. You're taking your average P&L is going to increase here. Your max drawdowns are also sort of they're in line because the same period, like this week or the last couple weeks, will probably be our new data set for max drawdowns because we've had such big moves to the downside.
Yeah.
There's been a consistent number of them, and so it's just something to keep in mind. The losses can get big. Got a nice win rate. Got to keep size in check.
Yeah, but this one, closing winners at 25% versus 10%, your win rate goes down, but the average P&L per trade is double or triple in some of these with a similar max drawdown. So this is why it's the same concept as why we don't sell 5 cent out of the money undefined risk options. It's yes, you're going to have a super high win rate, but when it comes into play, you're going to have some pretty big losses too. So it's you got to have this balance of risk reward. And you can clearly see it here, the difference between a 10% winner closing and a 25% winner closing with all these same entry points and frameworks. You have a much higher average P&L per trade over time, and the max drawdowns are similar.
Yeah, I think that's kind of the key here.
Yep.
And you'll see that when you get to the 50% here. So when you're closing winners at 50%, again, you're going to see your average P&L kind of tightens up. It's actually in the middle of the 10% and the 25%. The 25%, your average P&L is going to be better, but you're going to have bigger drawdowns than you do with the 50% here. You can see across the board your drawdowns max drawdowns get lesser because you're taking more profit. Your P&L values as an average are staying all in line across all of these. It's just tightening up your distribution on the downside here.
Yeah. And I think this one's interesting because you're going to have, if you look at the difference between a 10% and 25%, you're picking up way more premium over time with probably a similar risk in trade. But when you're going from 10% to 25% to 50%, to get to 50% with 0 days, you have to hold it a lot longer.
Yeah.
You know, like you have to get
where you get a big move.
Yeah. For you to get 25%, you can get 25% from the opening print to 10 a.m. a lot of times if the market's not going crazy. But to get 50%, you have to hold it another couple hours, and that extra couple hours could create more volatility for you. So somewhere between 25 and 50%, I think is the takeaway here in terms of average P&L per trade mixed with a nice win rate, mixed with similar max drawdowns.
Yes. 90% win rate on some of those. Sounds nice.
Love to see it.
Sounds nice. I think
it's like your friend that says, I don't look at the market unless it's up 15%.
That's true. That's true. They're not happy right now, I can tell you that.
No.
Couple takeaways here. So initial strike selection is one of the most important times for an option trader to determine the characteristics of their trading outcome. It's one of the only things we can control. Despite the persistent bull market, out of the money put sellers have been able to largely keep pace with at the money traders thanks to more consistent winners. So we've seen that out of the money and at the money spreads, into what has been a bull market, they've both been good. Further out of the money strikes gave up some profits, but further insulated traders from the dangers of consecutive losers. When you're selling at the money spreads, you're going to have bigger risk and bigger reward that's just going to come with the territory. The best performing profit targets for further out of the money strikes were slightly higher if you take smaller credits. Try to keep a larger part of them. So somewhere in the 25 range, that's kind of the spot. The exact particulars of which out of the money strike to use was not especially significant. When you're trading it, and this kind of goes to, we had this confirm and send question the other day on Wednesday or maybe yesterday, where they were like, how do you pick which strike? On a 1 day time frame, whether you go to the 6,500 or the 6,495 on SPX, basically the same thing. It's kind of just the mechanics of being out of the money versus at the money.
Yeah.
So there was not a significance to which one was better, though a full VIX 1 day expected move is likely too far. So if you're the VIX, what that's telling you is that volatility in the here and now is usually the most overstated. When you're looking at 0 day options, it goes to why we do these, diagonal spreads, stuff like that into earnings, because the 1 day volatility is usually the most juiced of the bunch. And therefore, if you're using that as a gauge of where you should place your strikes, it's probably not worth the risk.
Yeah, it's the same concept as yesterday where we talked about like trying to time everything perfectly, which you're not going to be able to do anyways. The mental load in doing that is just so aggressive. And that's why, especially for 0 day stuff where I know I'm entering it in every single day, it matters even less, which is why I go to the orange bar for me personally. Look at the orange bar, sell this put spread, and you can do it in 10 seconds instead of doing all this analysis and having the market move, and then you have to read
and you miss it, or
Exactly.
Sometimes you'll get better prices.
Yeah,
because sometimes the market will open and E-minis are down 40 and then they're down 60 in 10 minutes. By the time you've done your analysis, you have better strikes. Indeed. But it works out. It's very similar.
Yeah.
Good stuff. Quick little market update as we've had some whippiness in the market here. You got E-minis down 65 here. We're kind of at the low of the session, near the lows. 64.54 was the low, so about 4 or 5 handles from here. You got the NASDAQ down 330, the Dow down 450, and the Russell down 29. Everything down about 1% here. Oil at the highs of the session, 98.25 here. We're about a nickel off the highs. Volatility futures at 27.60. You got the VIX itself at 29.95, just ticked into the 30 handle again. Bonds down 16 ticks here, 112 and change. Gold and silver have remained kind of strong here. Gold's up $80, silver up $1.12 here. So silver kind of catching up to the move in gold, 69 on the dot there. Ugh. Hasn't gotten any better.
No, it has not. No, it has not.
Good stuff. We're going to take a quick little 90-second break. We're going to bring Q on to see what's going on at the trade desk here. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back, my friend. E-mini S&P 500 futures down 67. You got the NASDAQ down 330. You got the Dow down 440 and the Russell down 31. Oil catching a bid here just under 98. You have volatility futures at 2760. The bonds down 15 ticks. Gold up 80. Silver up $1.16. And Bitcoin risk off today with the VIX just under 30. But who cares about that when we have DDT. Q. What's up, brother?
What's going on? I mean, how do you do it? Very well done on the readout there.
Thank you. It's
better every day.
10 years.
Yeah.
10 years been doing this.
Yeah. All right. Now you might learn something.
I know. Finally. It took me a while. I'm a little hard-headed.
Yeah. It's all right.
Yeah. How's it on the desk today? A little craziness. You got 6,500 broken through.
Mm-hmm. Yeah. Very, very busy day on the desk today. So probably gonna have to keep it a little short here. But yeah, a lot of activity in the markets right now. A lot of
30.
Yeah, a lot of managing of positions, lots of rolling out to further dated expirations. Because like when you roll out to further dated, it gives you more amount of time to manage those positions. But then also, like with the VIX being high, it gives you more exposure to that Vega when it does come down.
Yes.
Right. So that's what a lot of people are looking to do. Instead of trading like the 45s, maybe they're going out to something like the 60s, for example. Like if they had something at 45 and now it's at 30, rather than waiting to 21, maybe they'll just go to 60, is a lot of what we're seeing right now.
Yeah. And if you're trading futures options specifically, and you're short options, short puts, short strangles, even wide iron condors, 1x2s, whatever, you got to watch your sizing, because volatility is one of the biggest components that goes into the span margin calculation. Those things can get very, very big. They start small because volatility is at a low or lower. And when volatility expands and you get the move against you, those products can get, those options and those positions can get very, very big. So keep your position sizing in check. I cannot stress that enough. It's always the case. Size kills.
Yeah, you always want to make sure that, because like, you know, a short put in the ES could start out as 13 grand, but then when it goes to
25.
like 40 grand,
40.
you know, it's not as fun.
Yes. All right. Well, I know you're busy. You want to get to your list, and then we
Yes,
can
sir.
take a look at the markets here.
And we've got the graphic back here.
Woo-hoo!
Top 20 symbols going through the system. The king back at number 1, Tesla with an 11, Microsoft 49, Nvidia 16, Meta 43, Micron 58, Amazon 38, IBIT 59, TQQQ 46, GLD 93, Palantir 24, SLV 62, SoFi 27, AMD 33, MSTR 50, Dell 38, Google 33, Apple 27, Broadcom 31, Oracle 56, and USO with a 70.
USO.
Rough list. I didn't notice that I bought instead of sold my silver, so now I just flatten that out. Took a couple of those off. Thank you, Q. That's it. I can let you go. We got a couple minutes here. We can play some trades and just see what's happening here. Thank you for joining us.
Thank you.
We've got E-mini S&P 500 futures here down. They just ticked to down 70. It was the low of the session here. 64.51 was the exact low there for just a moment there. Oil at 98, not good. You got oil or volatility futures up $1.24 here. The VIX itself at 29.88. So definitely seeing some volatility here. I was actually thinking, because Bonetta brought this up, GDX.
Yeah.
Little gold miner.
Yeah.
Volatility super high. Gold kind of fluttering, but you know, maybe it'll be the safe haven that they once told me it was.
Yeah. I'm down with that. June, May. I mean, that's the move right now, I think.
I think you could. I was gonna go May, April.
Yeah. I was looking at the 85.95 call diagonal spread, June, May, $5.
See, I did the difference in the duration. So I did the 85.90.
Okay.
I did May, April for that same sort of debit. I did a $4.20 debit. So very similar setup, but that's, you know, going out further in time, you get to go wider for that same amount of debit. The caveat being it's not going to move as quickly. You don't have as much decay in your favor. The gamma is a little bit further out in time, so it's not going to move as much too. So same sort of setup, just a little different entry.
Yeah, that's the nice thing about the longer term diagonal spreads and even calendar spreads too. You can get a cheaper debit for, you know, the ability to make money specifically for a diagonal spread. You can usually set it up where if you're buying a 10-point wide diagonal spread, you pay around $5 for it. Or if you're doing a 20-point wide, you're paying around $10 for it. And that offsets your need for volatility collapse and short option decaying, because you're as long as you're paying under the width of the spread, it's going to be a profitable trade if it rallies.
Yes.
So, yeah, I like those longer term trades, especially in this unknown territory we're at right now, where we don't really know how low this thing can go. But if we have 80 some odd days left to expiration, and we've seen the big rips to the upside happen before, it could just be a one-day thing. If we get a 200-point relief rally, a lot of these positions that we put on are going to be taken off for winners.
For sure. Speaking of a reversal, you have Apple down 30 cents now. There was one of the only ones that was green on the day, or at least in my portfolio here. Besides like the gold stocks, I've a strangle in LRCX. That stock is up $1 here. Micron and some of the memory stocks catching a tiny bit of a relief here. Micron up $7 and change. Netflix is up a nickel. Silver up tiny. It's has not looked good.
No,
not
at all. But couple minutes left here.
Yeah,
we can quickly review what we've got in today. So I closed that SICK contract for a small profit earlier this morning. It was pretty minor, but just taking some risk off there, booking a win. The SPX 0-day Iron Condor we put on yesterday during last call, we both took off.
Yes.
So I had a $100 winner into the sell-off. You had like a $300 winner.
Not that much.
Two something?
Like 150.
Okay.
Yeah. It was a good one, but not, not saving the rest of these positions here. I mean, I've got some long delta in the NASDAQ that is starting to taking
chunks of your heart.
Yeah, it's taking like a leg.
Yeah.
I'm not
Merely
dead, but
flesh wound.
It's more than a flesh wound now. It's more like an amputation.
Okay.
So I need that back.
Yeah.
Is what I'm hoping.
Microsoft got into a cheap butterfly. I really like this one. It's a 21-day April butterfly. The 380, 400, 420 for $1.70.
Is that moving yet? Because Microsoft has bounced like $2 or $3. Probably not moving all that much. I mean, like,
it is up $30.
$30? Okay, there you go. That's actually
$1.70 with a almost 2K max profit over 21 days. Like, that's the kind of stuff I like right now, especially with this pop-in vol here. Google, long-term calendar spread. I guess not that long-term, but bought the 300 calendar spread, long June, short May.
Yeah.
That was 387, and then we just got filled on the GDX trade, 85.95, long June, short May. Call diagonal spread filled for 516. So a bunch of new trades, finding new opportunities in this red market here. And I think the name of the game is
size.
Size. If it's undefined risk and you have the size capability, selling near-term premium 21 days and in is how you're going to take advantage of this implied volatility pump and still get a nice premium for doing so. If you're going the debit side of things, going longer term, even though it's more expensive on the long option, selling something against it will reduce that cost basis. You're still taking advantage of the heightened IV in the near term. And we've been doing long June, short May. We've done long January, short September. It's all about size, but in these markets where you just don't know where the floor is, with a debit trade, the more time you can have on that long option, the better off you'll be. Even if these things keep selling, you can buy back that short option for pennies on the dollar. And now you have inventoried long calls in June, long calls in January. And if you get that reversal, they can be really nice additions to portfolio value.
It allows you to get long delta into a downside move.
Yes.
Without adding downside risk.
Correct.
So you leg out of that call for $1. It costs you $1, obviously, but you've realized that value. Let's say you sold it at 3 when you put on the call diagonal spread. It's trading at 1. The trade itself is not a good trade. It's not a profitable trade.
Yeah.
But if you were to say to yourself, okay, I want to get a little bit more long Google here, just buying back that call removes some of the short delta and the short gamma that you have on the way up. If there is a 5 or 10 handle move, instead of losing, $1 or $2 on that option that you're short, that option isn't there anymore. That's $2 of value that you've gained. It's that delta's worth that you got on just closing that trade out.
Yeah. If you pull up Microsoft real quick, I'm going to buy back. I'm going to talk about something real quick here, but this was a Jamal trade that I still really like a lot. It's the 380, 370 put spread in May. In the money.
380.
In the money. Pretty.
Just a $5 wide?
380, 370.
Okay, $10 wide.
And then we use that premium to buy the 425, 440 call spread.
Okay.
This whole package was put on for 70 cents. But the key here, that 440 call that's now trading for $1, I initially sold that call for $600.32.
Mm-hmm.
So I'm just going to buy back this call right now because with short premium, the most you can make is the premium you collected. I collected $600. I'm buying it back for $1. And in the same vein, I'm adding $100 of risk to this position. But if Microsoft goes from 360 back to 400, let's say, that short call that would have gone from $1 back to $5 or $4 is not going to be there anymore. So it's going to really accelerate the upside move. I'm not using any more buying power because the buying power is in the short put spread. But it is a way to get more long delta in a cheap way and manipulate this position slightly and, give up that extra $100 that I can collect if Microsoft stays down here, but it's not going to matter anyways if Microsoft stays down here because it's going to be a loser.
Yeah. Oh, but it makes perfect sense. I mean, it's a small adjustment. It takes away the cap on the upside tail and allows for, if you do get that bounce and volatility is still staying bid, it's going to move a lot more than you would have expected.
Yeah.
So I like it. I've been doing that over the last couple of days, but market has kept going down, so it hasn't really helped yet. But I have faith.
Yeah. Still a lot of time. A lot can happen from now to May.
Silver up $2. Silver and gold are moving here. Got gold up $120 here. Silver's up at 70 again. I think I might have to scalp another one of these.
My sick position. Should have held it.
I know, should have held it. I close out puts.
What are we doing here?
I know.
It's all right.
Stinks.
Can't
All
time
right.
everything.
Yeah, you can't catch all of them. I think I have some. I'm
still
not
in-
hold those.
I'm still in the SLV strangle too. The 87, 97, deep in the money in May.
Okay, basically just long.
Yeah. But I've picked up $1,600 in that strangle, so still going to be okay.
Yeah.
As long as we catch a bid here, keep this bid going.
Very good. E-minis down 55 here. Gold and silver are kind of the movers right now to the upside. Gold up $123. You got silver up $2.36 now. Volatility futures at 27.30 here. Oil near the higher end of where it's been trading, 98.18 here, and the VIX itself at 29.44. That was a wild week. What do you think we take a quick little 90-second break? We get the stomach ready for some Gigi's fried chicken and go on with the rest of our day. What do you think?
I think that sounds like a fantastic plan.
Sounds great. Everybody out there, stay small. Still some whippiness in the market. We're going to take a quick little 90-second break. We got Jenny and Fazia.
Yeah.
Special guest, fan favorite, up next for the Liz and Jenny show. Stay tuned for that. We'll be back in 90 seconds. We'll see you on Monday. The bat's back.
Hell yeah. Peace.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style. and speed. FX marks the spot. Trade it on Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Golf play, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Everything is better when we are side by side.
everybody, and welcome to the Liz and Jenny Show. Liz is out of town, and I am honored to have a very, very special guest today. Fazia is on with me, and I don't even want to say your last name because I know you. Oh, it's up there, Fazia Timberlake. I didn't want to say it. I know you're related to someone very famous. I didn't want to say it.
Not anymore.
So Fazia is joining me. She is amazing. She has decades of experience in option trading, many years of experience as an option mentor, and you have been with Tasty Trade since the beginning, since we started.
Yes.
So welcome to the show. Thank you for joining me.
Thank you, Jenny, for having me. It's always a delight. I watch you every day, you and Liz, but it's really nice to be here. Thanks a lot.
I see you have a jade lizard or a lizard background. Is the jade lizard your favorite trade?
All the lizards, the jade, the big, the reverses. Yep. Yeah.
Okay. You know what? That's perfect. So I actually think, we've got a lot to talk about, and I wanted to hear a lot about what's going on in your life and what you're doing trade wise and in this crazy market. But I don't know if you've noticed, but lately we've been having someone from our team take a clip of the show, and they take a smaller clip, 10, 15 minutes, and they share it on YouTube. And I've gotten so many requests to go over some jade lizards. Since you are one of our jade lizard experts, I thought that could be a great, this could be a great piece for YouTube. So right now we're going to talk about jade lizards. We're going to answer some questions and some emails that I've received since I have Fazia with me, who has been doing jade lizards for a long, long time. And is it one of the strategies that you discuss in your mentoring?
Yes, it's something that I teach because it's wonderful. You and Jenny, Liz came up with this, and it's a way to sell both sides, but only take risk on one side.
And with this market falling like it's been falling, it's a good market for the jade lizard because if the market bounces back up, you have no upside risk. So
exactly.
So let's dive into the platform. Let's pull up the platform. And Fazia, I want to share your expertise as we look at some emails that I've gotten on jade lizards. So I had an email come in this morning saying they were looking at a jade lizard in SPY 21 days, this April 17th expiration. Now, if you're setting one up, would you go 21 days with the vol we have right now in the market conditions, or would you go further?
I'd like to go to May. 21 days just seems so close, doesn't it?
I agree. So
but,
I agree. I agree. We're going to get much further going to May. So let's walk through a typical jade lizard. And then I know you're a big fan of collecting more and bringing in, making a bigger jade lizard than a dollar wide. So I want you, while I have you on, to walk me through, if you were going to May, what would you be looking for when you're setting up a jade lizard?
So I'm assuming that we're going to need to buy something because SPY is a pretty big deal, right? So how about we sell the 600?
Okay.
And so let's get the buying power part done. And how much do you want to put in? 570? Is that, or is that too far away?
Sure. So 570. So here we're collecting 430. So then we could do
and then it's going to be $5 wide, I think, in May. Because of the current environment, I'm more likely to sell the call spread closer. So maybe 655. Should we try 655, 660?
Sure.
Does that cover it? Yeah. And then we have some to spare.
I like that. And this is, I think, this is a very Fazia style jade lizard where you have a short $5 wide call spread, and you've created a put spread just to not use too much buying power. This is only using $2,300 in buying power. And I'm going to go to the analysis page just to show people what this looks like, because this wouldn't be. I'm love that you're on, because this would not be a typical jade lizard if someone were setting up a typical Jade Lizard, they're looking for 70 cents on a put and a $1 wide call spread. And that was the email I received. So I could pull up his strikes and we can compare. But what do you like about taking in such a bigger credit and so much over that width of that call spread?
So I like the pop, 76%, right? The probability of profit. I like the downside break even, which is 600 minus about 7, right? So 593. What's the delta on 593? I like to look at that delta on my break even.
Okay, so what Fauzi is talking about is right here we have this break even and SPY is trading 640. So if I go back to the table page and go to May, 593, it's about a 20 delta.
Yeah, so I feel comfortable with that. The market's really been shot down, but we don't know when this is going to stop. But how do you feel?
So 593, you take a look at the chart. We have had quite a month, or the past couple months, and we're at 640 now. We've fallen from about almost 700 to 640. So 593, we haven't been to that in that level or that territory since June of 25. So I agree with you.
So I like that.
Yeah, I do like that, and I like the large credit. This 685 that we're taking in. Now, if you're putting a trade like this on where you're taking in $685, risking 2,300, 49 days to go, what will you put in a GTC to take partial profit out of this?
I like to do my GTC at 50%, especially since we have 49 days. And, we always have an opportunity to adjust that GTC later, right? But at the same time, Jenny, let's talk about what if the market just shoots up, all our bows disappear, and we're back into a nice bull market, and it goes beyond 660, and we still have time. I don't see an issue with bumping up that put spread and gathering more. Yeah, why not?
Why not? Why not? So I'm going to call you the queen of credits or the queen of collection because you always try to collect more, where I'll often put it on and sometimes I won't even cover my call spread, but you like to collect more. That way, if we pop up, instead of not making anything, you're guaranteed at least $186. That's the overage over that $5 wide call spread. And now you're talking about bumping that put spread up and collecting even more.
Well, if we have enough time and if the new break even makes sense in that environment, I don't see why not. And 184 based on what is the buying power? You said
2,300.
Yeah, so it's not a giant return on capital, right?
Hey, you know what? If you're using $2,300 and the market rallies back and you're guaranteed $185 at anywhere to the upside on this trade, that's not bad, Fuzzy. Of what, 8%, 8% return in 49 days?
All right, well, go for it.
Okay, I'm going to.
Did you want to do one without the law? Okay, all right.
I'm going to ship this one because I like this one. Okay. I'm going to ship it.
All right.
But so I shipped that. I'm working that, but I'm also going to pull up. We had a viewer send in his strikes, and I wanted to look at it. So he's looking at the April 17th. Okay, and we're filled. Almost $700 credit. That's really good. He was looking at his short strike of 595, and you know what?
He has a large account.
So, well, I didn't ask him. It was just an email, but he said in the 21 day.
Okay.
So that's very close to where we were. Our break even was around what, 593? So he's looking at the 595 put in the 21 day. So he's looking at aggressive credit too. And I'm going to double check his strikes. 595. And then I think he was the 705. 705. Could that be? No, that can't be possible. Maybe he was really far up. Let me just double check his strike. I think he was right around.
He might have gone there also because there are single strikes and not the $5 ones we found in May.
But anywhere, honestly, if you're collecting 430, on just this put, Oh yeah, he has InSpy 705, 706, which honestly,
That's too far away. Yeah.
yeah, you're
I
not
mean,
getting anything.
he's not even getting a penny for that. Why bother?
So if I'm doing this one, the 595,
Yeah.
like you said, I probably bring in a $5 wide and get your collection over $5. Or
if you want to, but that's still a large buying power. Are you going to not buy the long?
honestly, in my mind, if you have a big enough account, when I have a big enough, if I have a big enough account to make a trade that's a naked option, I prefer the naked option. If
I
like
do too. I do too. Yeah.
Here in this show account, we don't have enough buying power to do this. But
Right,
if I'm an
yeah.
account that it has enough buying power to do it, I prefer the naked option because look at what we have.
I feel like if the buying power is less than or equal to 5%, maybe closer to 3% of your account, then go for it.
Mm-hmm.
Yeah.
And I'm gonna, since we're on the topic of Jade Lizard, I'm gonna walk through one very traditional Jade Lizard, which would be, going close to 45 days till expiration. I don't even know. It would be 70 cents on a put. The lowest strike we have is the 500 put.
Exactly.
And then, so we were getting almost $2 and maybe go the expected move and do a $2 wide call spread. And here you're collecting over $2, no risk to the upside. And your downside put is the 500.
Yeah, that would work.
So
I mean, look at that pop. It's almost a
it's a 99.5. You're at a 4 delta put. The TP always says if we end up at that 500 put and that's in trouble, we've got bigger things to worry about than our trading account.
We've got other things to worry about. You're right.
Yeah. So I think that it's a great piece on Jade Lizards that our team could clip and share on YouTube. And if people enjoy that piece on YouTube, they could subscribe, and they could find more trade ideas like that on tastylive.com or on our Tasty Live YouTube channel. I think that's good and hopefully cleared up some questions that people had on the Jade Lizard. Now, Fazia, I want to talk a lot about what you do and your trade mentoring and the type of questions people have, and are people worried in this environment, and what are you seeing right now?
So I've been doing this for so long, just like you said. Back when you guys were just starting, I remember that you didn't even have a studio. You just stood behind a curtain with a whiteboard. That was amazing. And I remember Nick, he didn't even know what a put was as differentiated from a put. And his dad started teaching him. And look at him now. He's like the big honcho there doing all the shows. And he's amazing. I follow a lot of his trades. So I love doing this. I can't imagine ever stopping. And I love sharing my knowledge with others. And I had an opportunity to start coaching people. So that's become fun. And I coach all over the world. Jenny, last year, a client of mine from Perth, Australia, actually came to Vegas to visit me and spend some time with me.
Oh, so
isn't that
nice.
amazing? Yeah. And I was making all these plans for her to go here to the Grand Canyon to do this. And she says, "Can I just spend a day trading with you?" And she sat right here in my office and we traded together.
And that's got to be so rewarding to take someone from starting to trading on their own, no help, doing everything on their own.
It's fantastic. It's a very, very rewarding. Yeah.
Yeah. And I know it's intimidating when people start trading options. It can seem overwhelming. But I truly believe if you have noise on in the background, you're always listening to it, it sinks in. And the more you're putting on trades and taking off trades and starting very small and starting very defined risk, you get it. And I don't want people who are brand new and starting out to be overwhelmed and feel like they can't get it. I mean, what do you see as the timeline for someone who's brand new to really start learning options?
It depends on the time they make available. So I always say it's not rocket science, but it involves study. It involves repetitive study. You can't get it all in once. sweep. Even if I wrote up 5 pages for you, I always send people to the Learn Center because that's fantastic on your website. But it takes doing over and over again, and also developing a bit of market awareness. If the person is not interested in what's AI doing and what does it mean to have EVs, this is my view, right? Like if you're not interested in that, then you might as well just pay someone to manage your money. But if you are interested, there's nothing better than managing your own money and learning how. And options give you the leverage, right? The financial leverage. So you can have a small account and still be fine.
Right. It is nice. And that is nice,
Yes.
especially with the smaller account. You've got a lot of leverage with options. Now, I know you said it's people who want to have market awareness and knowledge of what's going on in the market. But Fazia, nowadays, we've got a massive amount of traders who are just trading these zero DTEs. Have you been dabbling in the zero DTEs? Is that something... I know I would think when you're starting, especially with someone new and you're mentoring, that's not where you start. But are the people you're mentoring getting into those zero DTEs?
They want to, but I always discourage them because I feel like you can't really have another job, at least in my view. You've got to be sitting right there in front of the screen. And you need to have a really good understanding of the Greeks. And if you don't, I wouldn't go there. So if you're looking to make $100 with a zero DTE, or say even 50, right? You could sell something out 45 days for a lot of premium, get that 50 and be done. Yeah, it won't be in one day. It might take a couple of days for that to happen, but that's not going to cause you to be having sleepless nights.
So
right?
I see what you're saying. Instead of selling, like today, I sold a put spread in NDX for 350. So instead of selling that zero DT put spread for 350 and managing it at 50% and making, $175, go out further in time, sell both sides, collect a much greater credit, and instead of taking smaller credits day by day, getting a much bigger credit further out in time and not having the day to day.
It seems to make sense. I mean, you won't get that instant gratification that you get with zeros, right? And that is exciting. But I think if you can, I wouldn't do it as a newbie, but if you do just a small percentage of your portfolio, sure, it adds. What is the word you guys use? Engagement and excitement. But sometimes I don't need that excitement.
Right. I mean, you started your career as an engineer, switched over to becoming a full-time trader and trade mentor. Now, we have so many traders that started as engineers. Do you find that surprising?
No, I'm not surprised because options are all about numbers, right? And probabilities. So I think engineers just eat that up. I don't find it surprising, but in all the people that I've coached, it's not been predominantly engineers. I have a truck driver that drives interstate. I have a heart surgeon, a farmer, all kinds of people. I think that if you have an interest in managing your money, that this can be learned and it's forever. I know you and Jenny talk. Liz talk about.
It's so funny because everyone calls me Liz and everyone calls her Jenny, and even. Oh my gosh, our producer John, for 15 years, he was our producer. And on his last day when we said, "Congratulations, enjoy your retirement," he called us the wrong names. So everybody everybody.
Well, I've heard you girls talking about retiring in the villages, is it, in Florida? And you're still trading away. And you would say, we don't know where our husbands would be, but we know where we will be. We'll be just trading away.
Well, could you imagine waking up in the morning and not having the markets to look at? Could you imagine not having a trading account to be active in? I don't know what I would do all day.
Yeah. Sometimes if it's a holiday and the markets are closed and I go out during market hours and I see all these people and I say, do they care? Do they care where the booths are going to open? Does it matter to them what oil is doing? And it doesn't. No, I can't. I think and you know what? We can control how much we trade. We don't have to trade every day and for the people that are just starting out, I always tell them do it 45 to 60 days out, set your GTCs, put your alerts, set your break evens, and then don't look.
Don't look. Really?
Look maybe in a few days or look, watch the deltas of your shorts because we don't really have an alert for that. That would be nice. If the delta on my short drops down below 10, then maybe I want to close it or I want to pull it up, make a decision. But it would be nice to get that alert.
That's a great idea. So you mentioned 45 to 60 days, put these trades on and don't look. And it's so funny because I know people who trade like that and they'll have a better performance than I do, where I'm every day in micromanaging, panicking as things are whipping around. So maybe that is a better state of mind to be in. Put these long-term trades on, put in your GTCs and don't worry about them so much. But when you're talking 45, 60 days, have you seen the new trades from Bob from Texas, his long-term December, January trades? Have you seen those?
I've seen you and Liz discuss them definitely. I haven't tried one. Okay, so I didn't get it from Bob, but from someone else. Do you remember the shadow trader?
Oh, I loved the shadow traders.
Yeah, me too. And I get his weekly newsletter and I watch him. I really respect that guy, though he's pure technical analysis, right? Mm-hmm. And one of his cohorts did a long-term trade in gold, GLD. This is like in last fall. And it was buy a long-term call spread and then sell in front of it using iron condors or strangles or whatever suits you. Mm-hmm. And that's still sitting there. The deltas don't move much on it. It was out of the money.
You still have it on?
I still have it on. And it's if I paid $10 for it, it's worth about $5 now, but it's so far out in time. So I'm just going to kind of see, but I've reduced that cost almost down. If I paid 10, I think I've reduced the cost down to about 4 by selling in the front, right? So I'm going to see, right? But Bob's, no, I haven't put one on personally, but I hear you and Liz talking about it.
I do really like them. I do. And I'll go back and forth. Sometimes I'll change my positions to that and then I'll take those off and switch it to something else. Let's go back in the platform and pull one up since we're talking about it. And we could even go SPY's expensive. Let me think of something.
How about IBIT?
Oh, IBIT. Sure. IBIT. We have positions in IBIT. We have some in the money positions today that are going to, and maybe this is a good idea. Maybe I'll take this off. So here's a put in IBIT. People always wonder, what do we do with a losing naked put? Well, here's a losing naked put. We sold this for 73 cents. Now it's worth 246. We could roll it or we could take the loss, but maybe I will take this loss. I'll take the $173 loss, close this so I don't come in long 100 shares of IBIT. And let's take a look at Bob's trade, which would be, I'm going to go to January 2027. Mm-hmm. And the way he sets them up, he buys the at the money call. Okay. So, and then sells the call for half the price. So if we're paying, seven, almost $8, let's sell a call for about $3.85, $4. Yeah, or even this 50. So we've got $38.50, $12 wide. So this call spread could make $1,200, and then we sell 2 puts to cover the cost.
In the same expiration.
Yeah, same expiration. So that gets me down to 25. So here we have it.
But is IBIT cash secured, or do we get some leverage?
We get some leverage. So that's using $1,400 to sell.
That's excellent.
Right. So we're using $1,400 to make $1,200. If I'm going to go to the analysis page, and I just have to remove our other IBIT positions so we can see what this looks like. Because I think it's a really great idea. I think it's a very cool trade.
It's wonderful.
So you could see if Bitcoin bounces and IBIT goes back up, which going back up to 50 is not unreasonable. This could make $1,200. This would expire in January. And if it drops down, we don't lose anything until at 25, we'd have to get long 200 shares.
I think I love it. Yeah. Or I would also do a called Zebra, but I do like this. I'm going to put one on like that. Yeah.
I'm going to put this on too, because so what we've found from putting these on and watching them, let's say IBIT goes up $4 in the next week or two. Well, we'll only be able to take $200 out of it. Basically, in the short term, it makes half of the stock move. So if a Zebra makes 1-for-1 to the upside, these make half the stock move. So if the stock goes up $4, you make $200. If stock goes up $6, you make $300. It makes half the stock move now. But if you were putting these on and just leaving them, and IBIT's up over 50 at the end of the year, then this makes $1,200, and you're using $1,400 to make $1,200 if you get the move you're looking for.
Yeah, and you've got so much time, and it's sort of kind of like, I look at IBIT as a core holding in anyone's portfolio. It gives you exposure to digital assets, right?
You heard all I wanted for my 50th birthday was a Bitcoin.
Did you get it?
I bought it for myself. I mean,
good for you.
I caught my husband shopping online for jewelry, and I said, "Don't buy me jewelry, especially with the prices of gold these days."
I know.
So I just said I'd rather have more Bitcoin to get myself. I'm trying to get myself. Well, it's easy. I don't want to say it's easy, but like nowadays, Bitcoin is only. Right now, we've got Bitcoin. Where is it? Here, 66,000 versus it was
110 or 20.
Yeah.
Yes.
What are your thoughts on crypto?
I'm a believer. I like to buy small bits of it. In the beginning, I would do like weekly $25 when we first started this mania. But now I like IBIT the best because it's sort of, if I were to say I have a favorite, it would be Ethereum.
Oh, still, really? Yeah.
Yeah. I think because of the blockchain technology but IBIT works, and it's fairly inexpensive, and it captures all of them. You don't really have to pick any one favorite. Yeah.
And ETH's 2,000, which is, we've seen it a little lower, but we've seen it as high as 5,000. Now, as far as IBIT, I like IBIT. And when I say Bitcoin, I use IBIT because if you wanted, and again, it doesn't matter. No one has to buy one full Bitcoin. And I think a lot of lay people out there maybe don't realize that, or a lot of people who just don't trade might not realize that. But if I'm busting out my calculator and we have Bitcoin is $66,700. How do we get $66,700 of notional in IBIT, which is a $37.68 product? Oh, hang on.
A large amount.
66,700 divided by, I've got one too many zeros, divided by 3766. We've got 1,700 shares of IBIT.
I know that it's not. But Jenny, do you know what percentage of this ETF is actual Bitcoin itself? Do you have that breakdown handy? Maybe ask Gemini or ChatGPT.
No, but I think what percentage of
IBIT?
Isn't this all just Bitcoin?
I'm not sure. That's a good question.
I think it exactly tracks Bitcoin.
Okay, all right.
I think it's all Bitcoin.
Oh, okay. Well, then I stand corrected.
I don't know. I don't know. You think it's a blend?
I thought so, but I could be wrong.
I'll see. I'll look.
Yeah.
Is IBIT all Bitcoin? Okay, and I will say, because our time's flying, it's already 10:36. We are taking live tweets.
Okay.
Send us your tweet if you have any questions. We're taking live tweets, and it's great. Take advantage of having Fazia on. She's amazing. So let's see what we have going on here. Punished Pixels. Morning, ladies. Jenny and Fazia. New trade idea. Oh, and Punished Pixels comes up with a lot of trade ideas.
Yes.
And they've been great. MES or SPY based on your risk appetite. An upside call ratio 60 to 90 days out. Sell 5 lots of 6,500 calls and buy 7 lots of 6,600 calls. Okay, let's look at that. So that's in MES or SPY. 60. All right, let me take a
So
look.
that's not a ratio, because for the ratio, you buy the nearer strike and you sell the further strike, unless he means something else.
He does them different sometimes. Upside call ratio 60 to 90 days. 60 to 90
Let's set it up and
So
see what it looks. Yeah.
in 90 days by the 6,600. I'm just going to go to SPY to keep it simple. In SPY.
Okay.
In 90 days, here I'm going to go to these Junes with 83 by the 6,600. So that'd be these 660s, right? And he's saying buy 7 of those. And then in the 60-day, which would be...
Oh, it was diagonalized, was it?
Yeah. Then in the 60-day, sell the 6,500, 5 of these.
Okay. He called it a ratio, so I was a little bit.
Yeah, so he's usually, selling the selling that 650, 5 of those.
The near term, right.
3 days. And then buying the 660 in the 83 days, 7 of those. So he's long more units than short, but he's got this little embedded $10 wide spread in there.
Right.
And
but he's paying a debit for this. There's no credit here. So how does he get a credit?
Yeah, because what did he say? Sell 5 lots of the 6,500, buy 7 lots
provided
provided for a credit. If the
provided it is for a credit, so we're not getting a credit. So I'm thinking he might have.
Let me try MES. See what he's got going on, or ES. What did he say? It was an ES.
MES, yeah.
MES. I don't know, because doesn't it look like upside call ratio 60 to 90 days out? And you've got to put your longs in the 90-day. Otherwise, your buying power is going to be out of control.
But I don't see where he had different durations.
60.
I didn't read it that way.
So
right. Yeah.
Oh, okay.
Yeah. It's kind of like either 60 or 90.
I can. That's
how I'm reading it.
Why you're the mentor and I'm not.
No, because you're running a show and I'm sitting here reading it.
So 5 6,500s. Okay. And then buy 7 6,600s. So you're buying 2 more. You've got this $10 wide embedded spread. But
this is what I wanted to say, that we always buy the 6,500 and sell the 66. But I don't want to interfere with what he's trying to do. But there's no credit here. If you're going to buy the bigger strike and more of it, how do you get a credit?
Yeah, it's only 883 debit. But so Punished Pixels, he knows what he's doing. He's good. He's good, and he comes up with clever, creative trades by 7 lots of 600.
If the market reverses, he means goes back up, right?
Goes back up.
Right. Yeah. Well, we might need to ask him to clarify.
And usually he's putting on like a type of crab trade where he'll get long something close to at the money longer term, and short term sell that ratio spread to offset the cost of it. He does quite a bit of those. And again, if the market reverses, I don't know if you heard us talking the other day, but a trader in the SPX pit said oil's the new VIX, and basically if oil's up, the market's down. If oil's down, the market's up, and this is what they're watching. And how long is this going to continue to go on? As long as this goes on, we're going to have this choppy market.
But we could trade oil, stay far away and sell puts.
What have you been doing in oil?
I did that, and I have out in April 16th, I did a long put ratio.
Okay, and I have out in this April in the 20-day, I've got a big wide going butterfly.
There. Okay, so I did the ratio, but I did it with MCL.
MCL, and
So,
how would you?
yeah.
In MCL, we actually have just a strangle on. We're probably down in it because oil's been all over the place. Yeah, we're down a little, but look at how far you can get with. We sold this for $635, the 79 put, 107 call.
Well, I kept reading that when this issue comes to an end or there's some resolution, that oil is just going to drop like a hot potato. But then others said, no, it'll drop somewhat, but it'll maintain. So what I did is I went to the expected move and I sold 2 puts there, and then I bought a put closer in, just for a small credit, but a big wide,
And so if you're collecting $4 here,
but that's not,
you bought something that was a little less than $4, so you're taking in a small credit. So
That's
something
right.
like this. Yeah, where you've got.
There you go, right. So then you'll get the, 6.5 or just 6.25.
Your break even is so far down.
Exactly. So have that in place in case. But Jenny, I always like to sell both sides. So then I went to the
you did it on the
call
upside
side. Yeah, but I went super far because everyone kept talking about $120 oil. So I went super far. So what's the 120 call for?
What do we have? Gosh, we've got the 107 call, the 120 call. It is far, but you're still getting paid, right? It's $3.
Yeah, and it's and I always like to look at the open interest, and it's still 24th delta. So if you want, you could go even further away. But if you sell the 120, do you get? So that's a 73 pop. You could go further away, and let's see if there's more open interest further away. Maybe the 120.
Yeah, the 125 has open interest.
There you go.
So you keep an eye on open interest and.
I do because I figure if everybody else is there, and I keep an eye on volume. So I want to kind of be with the crowd and not too far away.
Oh, that's funny. That's cute. Like it makes sense. It makes sense, right?
Yeah.
So it does make sense. And
so lots of people at 140 also.
Right. Look at this, 140, 130. Well, this has got to be a spread, 900, 135, 140.
Good point. Yeah.
So now this is what we've got going on in MCL. We have the short 79 put, short 107 call. We're losing on the call. We're making money on the put. I'm tempted to take that put off and replace that on the downside with a ratio spread. Like similar to yours, because if we do have that big fall down, that could make.
Oh, don't take it off. Maybe sell another one there. What's the delta on the 79?
The delta here is 14.
Yeah, so don't take it off. Sell another one and then buy one closer to.
Okay, so if I'm getting
and that makes your ratio, right?
If I'm getting 171, How? I mean, but then I'll be paying for it. But I've got.
Well, you have to. Yeah, I don't
I've
remember what
okay,
you
so
got
171
for it.
twice, so 350. If I want to buy something for 350, maybe the 85.
Sure.
Then $1.50 debit. Then we got the 85.79.
Well, it looks like a debit now, but if you go back to your positions, you could see what credit you got for that 79, because I'm sure you got more than
316.
Yeah, so you got to factor that in, right? Sort of, kind of.
Right. So 316, and I'm paying $1.50.
So you still have a credit.
Yeah. And then we'll have a ratio spread to the downside in case we pull back, because look at oil. We've been up every day this week. Yeah.
And because it's up, are you interested in selling a call too?
Well, I have a call.
Oh, you have one. Okay.
Yeah.
All right.
I have this 107 call on, which is getting a little too close. It's only $10 away. So we need.
Well, but you could always, I always feel like if my call gets tested, I'll just roll out in time. This thing has to come to an end at some point, right? We can't see it.
Yeah. But I agree. At some point, it's going to come to an end. And how low will oil go then? We'll see. We'll see. That's why I like having those downside broken butterflies or downside ratios.
Good idea. Yeah.
Okay, so I want to make sure we get to all questions that we've had in Twitter. Patty, I'll get to you in a second. Let me get to Fabio. Good morning, ladies. Welcome, Fazia. What do you think about a put credit spread in AMD? IVR is 31. May the 15th, 170, 160. What do we think of an AMD put spread?
I don't know. Can you bring up the chart? Because I haven't looked at AMD in a while.
So AMD, it's fallen, but it doesn't look as bad as some of the stocks.
But I think we might be crossing earnings. Do you want to look? Is he talking about doing it in May?
Yeah. He looked at May. I think he looked at the 170, 160, which if you're
bullish, I suppose, if you're directional, it doesn't matter.
Right. If you're bullish and you want a directional trade, sure. But if you're neutral, I wouldn't sell a neutral trade with earnings coming.
But wouldn't the IV increase as earnings approach and we might get more credit?
It will, but if the market turns around and AMD bounces, then
that's true. Okay, sure.
Yeah, if you're bullish, I know my son is bullish in AMD. I've had some bullish positions on an AMD, but the other day when the market was falling, I got kind of nervous and I took them off. I took off some of these higher flyers off and switched to some. I don't know. I've got now I'm getting a lot of airlines on because thinking if this comes to an end and oil falls, the airlines will all bounce back. Okay, but that was a good question, Fabio. And again, if you're bullish AMD, sure. Patty, good morning. Great to see you, Fazia. Generally speaking.
Hi, Patty.
Oh, do you know Patty? Do you know her?
Through you.
Okay.
She tweets you a lot. Yeah.
Yeah. And you're on Twitter too. And you'll see Fazia on Twitter. And okay. Good morning. Great to see you. Generally speaking, what percentage of a total portfolio do you trade options, including retirement accounts?
Wow.
I feel like that's tricky because my retirement accounts are like out of sight, out of mind. I don't even think about those. I don't even look at those. I don't even know what's in them. I don't know. But that could be. What do you think?
I think what I've learned from best practices, and this could potentially be outdated, that if your account is under 100K, not retirement, but just a regular margin account, don't let any position get over maximum 5%, right? 3% is even better. Retirement accounts, I like them, and I like to use those zebras in them and all because it's a great way to get the leverage. And it's been a while since I ever really bought stock, unless it's like really cheap, right?
Well, do you ever have, like in your mind, do you ever have taxes in mind? Like, oh, if I really want this stock and I'm very bullish on it, I'm going to buy it and just hold it, and then you never want to sell it. Do you not?
I don't, but a lot of people do. I always say, don't let taxes wag the dog, right? Like, but I do understand that when people have very large capital gains, that they are prone to not wanting to. But my thing is, if you're paying taxes, that means you made money.
Right. True.
Yeah.
True.
Right.
Um,
And Uncle Sam needs it, though. Well, that's another issue.
But Patty, I feel like my trading accounts, I do have probably half of more longer term what I would think of investment. Like I said, I wanted to have some Bitcoin, and I wanted to have, like, there are certain stocks I want to have, but I will also sell calls against a percentage of it. So like Intel, now I've started selling calls against half my Intel stock. IBIT, maybe I'll sell calls against 25% of my stock. So I will still sell calls against that. And let's say that's half of my account. And then the other half of my account is full options trades.
Yeah. And with retirement accounts, I think if you're young enough, you don't really, the taxes are deferred.
Oh, I mean I'm not talking retirement accounts. I don't.
Oh, just normal. Okay.
Just my trading account. My retirement accounts, again, I don't even look at, because there's nothing you can do with them, right? For me, I mean, you can set up an IRA in Tasty and trade an IRA in Tasty, but like the retirement account that I have through work there's nothing we can do except maybe pick where we want to allocate it, but there's no option trading in there.
Oh, you're talking about 401ks and stuff.
Yeah, right.
Actually, and this is anecdotal, I mean, one person, but I do have a client who's doubled his IRA and just selling NDX call spreads.
But see, if you're in an IRA, or if you're in something that's tradable, not a 401k where you can't.
Not a 401k, right? No. Yeah.
So just selling NDX call spreads against his holdings.
Call spreads and put spreads. I don't know all the details, but I do know that he has doubled his account. So that's great. We're using one underlying.
Yeah, that's great. That is great. And it is nice when you could do that. And it is nice that Tasty does offer that. You set up an IRA and Tasty and trade in that. Our time, we have 2 minutes left. I can't believe it. See, I told you it would be the fastest hour of the day.
Yeah.
So I'm just going to go back to the platform, take one more glance at what we have going on here. What did we not get filled on?
Go to your activity and you can see if it's working.
Oh, I'm going to cancel that. That was a working order to close that strangle. But now that I have on that downside ratio spread, I'm going to cancel that. And
tell me about ACHR. Do you still love it? Because I followed you in.
Okay, so this is so Liz's husband is a pilot, and not a commercial pilot, but a pilot for fun. And he loves the Archer Aviation and the vertical lift technology, and he has been a big fan. And I don't know if you have a trading buddy, but Liz is mine. And when she gets into something, I get in too, because I don't want her talking about all the money she made in Archer Aviation, and I'm not part of it. So
and I'm your virtual trading bunny. I follow you into it too.
And Archer's been killing me.
Yes.
But again, this is one of those things that I just have stock in Archer. I've got quite a few things that I just have stock in, and what are you going to do? They're just more of a long-term hold. It's no different than investing in a company, and what can you do with that? Nothing. You just wait and see if it works out, right?
And the technology is fantastic. So we don't know. It might take a little time. But it's a $5 stock.
We are out of time. Can you believe it?
It went fast.
It did go so fast. So we're out of time. Fawzia, thank you so much for joining me. If you want to see more about Fawzia, she is on Twitter and she's on our follow page. She's one of our follow traders, and she is amazing. It was my pleasure to have you on today.
Thank you so much, Jenny. Thank you.
Everybody have a wonderful weekend. Remember to trade small, trade off, and laugh with us, learn with us, and watch the Liz and Jenny show. Now, Monday, tune in. I'm going to have Tony from Mexico joining me.
Yes, he's amazing. Amazing.
He is.
Yes.
Thank you so much, Fawzia.
Take care. Bye-bye.
Mikey, we are back, my friend. We've got E-minis down 43, oil up almost $3 here. It was up $3 and change at 1.9734. You have volatility futures at 27. And per the alert that I put in with Jamal on Monday, the VIX is above 30. I just got that notification on my platform, the email, the text, everything. Jamal, this week in stocks, rough.
I mean, it's a double-edged sword, right? You put these alerts out, it's not really what you want to see, but you do want to know. And I feel like that's a level that's you just want to pay attention to. Look, I don't really want to start here because it's not gonna end well. Okay, we should actually start with these games last night. Nick, I don't know if you know, but 2 more Big Ten teams just won, and they just went a little bit further. I just want to make sure you're aware.
Are you trying to talk some smack
one
about?
of them is Purdue, who Mike has in his bracket. I know.
Yeah, I poo-pooed the Big Ten. Yeah, I mean, I feel like every other year it's like you have, 80% of the Big Ten gets in there and then they all lose in the first 2 rounds. But I feel.
But this year the Big Ten actually was really good.
Yeah,
it actually really was. It really was. I mean, this has proven it. But
props to the Big Ten.
There's some pretty good teams,
except for Wisconsin.
Oh, you said it.
Props to the Big Ten, except for the frauds.
That's fair.
In Wisconsin.
That's fair. That's fair. High Point University. Look, man, they.
Did you get?
Yeah, did we lose audio?
I think we lost Jamal's audio.
I think we're.
Oh, they shut you off, Jamal. They shut your.
It's my bad. It's my bad.
I was gonna say they said whatever he's saying is just gobbledygook. That's what they said.
Yeah.
Right.
No, I was saying High Point University, they actually had a pretty good, they paid a lot of money for their team. As we learned, they have money, as we learned on Monday from Netta. I don't know if you know this, Mike. They do some wild stuff at that school, man. It's crazy. I
actually saw like a short video about it, like a TikTok video, that it's like $70K a year to go there. It's basically like not an actual school. It's just like a program to like build you into an adult. And so
I'm glad you said that. I kind of knew that already, but I didn't want to say that on Monday.
I didn't know that. I didn't know that it was actually just like not a school. Like it was.
It's like if you don't get into NC State or like Wake Forest, or if you don't get into Duke or something like that, the High Point University is there for you.
But it's quite expensive. You walk out of there with like $300K in debt.
I don't think most people who are going there have much debt is the thing. I feel.
Okay. All right.
A lot of them.
All right.
Just not all of them. Obviously, some of them. Most of them probably take out loans, but there's a lot that have loot, and a lot of it's a well-funded alumni base. I think.
Okay, so it's a fun time.
So they literally made a university for the rich kids that don't try in school that still need a degree.
Yes.
And they know their parents will pay for it.
Yes, that is exactly what it is. Yes, that's pretty exactly what it is.
Exactly what it is.
Yeah. Wow.
It's crazy. I mean, going back to Monday, that was when we were talking about this. I mean, what a surprise. We're right back to Monday's levels on the ES and most of the other indices too. It's not looking good out there, folks. Look, the dollar is above 100. VIX, as you just said, is above 30 or sitting around there. Jeez, bonds are at lows.
111 on the bonds right now. They just got below 112.
The interesting thing is the ebb and flow of oil prices, right? Like earlier, when we had these similar levels, oil was at 100 on Monday, I'm pretty sure, prior to all the big moves. And it's at 96 now, right? So that's kind of not necessarily comporting with me. Gold is positive. I don't know why. I feel like that relationship has been really weird this week between gold and the dollar. It's really oscillated a lot.
Yeah.
I always like to do this more recently with these green shoes. Bitcoin is at 66K. It's at the lower end. It's not breaking down lower. Obviously, S&P is broken down lower on the lower end of its range. Bitcoin is too, but like I feel like we've stair-stepped down, in markets. Like we were at 6,600, now we're at 65, now we've broken through that. Bitcoin still seems to be sitting at 66. I'm worried because if we get uglier in this market, then that breaks through 60. Markets break through 64, probably 100. I mean, and the VIX gets to 40. It could really get ugly. But this is kind of the pattern we've seen. Up on Mondays, down on Fridays, heading into the weekend. There was news yesterday, right, about pushing back any further strikes to Monday, April 6th. It's interesting how we get these dates that correspond with either a Monday or a Friday, right?
Yes. I think we've caught on to that MO. That the weekend is usually the when the tweet storm comes out. Yesterday's move after the close didn't make me warm and fuzzy. You had the taco has clearly lost its luster. We're down to it's Taco Bell tacos. It's not local, beautiful, homemade Mexican restaurant tacos. It's Taco Bell. It's slop now.
Yeah, I mean, well, the whole taco trade, right? Trump always chickening out. I mean, you can chicken out of really tough talk about tariffs that you're going to impose, but how can you chicken out about, when you already had airstrikes against Iran, and then Iran comes back and says, they're willing to keep the Strait of Hormuz shut for the longest time. You can't do anything about that. You can't chicken out of that, right? And so that's the real problem. And so, I don't know, man, like going forward, I had the bullish positions I have on. I pushed a lot of this week has been spent, and as I'm sure a lot of people, it was the 21-day cycle. I pushed a lot of stuff out to May, and I don't think. Man, I don't know. Your question earlier this week is a poignant one now. Earlier this week, we were on last call, and you're like, what's the area? Yeah. What's the area where we buy? we're damn close to an area that we threw out on the show. What, 6,400? I don't necessarily, I'm saying that because I'm not putting on any more long positions at the moment.
Sure.
At this point, I think it's a waiting game. I mean, you have to wait to see where this thing goes.
That's my ultimate, it's easy on the way up and everybody's like, yeah, you just buy them. They go up every day. On the way down, there's got to be a spot where you say, okay, that's my spot. I think I've said, and I'm at higher prices. I was at 65, 66. That's a spot where I'm getting long. Mm-hmm. The hardest thing to do, I think, is to look at this market and be like, okay, I'm going to start getting long here. We go lower. I'm going to get a little longer because it looks like duty. It looks like duty, but I think at some point you got to start looking at that, right? I mean,
yeah, I think if you look at just historical sell-offs, we're down 10% or almost 10% right now from the highs in SPX. If we get down 20%, that's where you really got to start considering, because historically, the worst market years have been down 30%, down 40%. Mm-hmm. So if you get the closer you get to that, the more extreme this move obviously is, and you got to start ignoring the tape and start getting long at that point in a responsible way. Keep the risk in check, but the further down we go here, the more the opportunity is going to present itself, and there will be buyers eventually. Mm-hmm. And when the buyers come in, it could be a swift rip to the upside.
Yeah.
Agree. I just don't want to do it anything near term at this point. I mean, I'm a month out. I think you got to at least be a month out because this situation is volatile. We have zero control, obviously, over the situation over there. And so, I mean, obviously that's what we're moving on, It's different than last April when it was tariffs and Trump could just say rhetoric because he was the one who's creating the administration was the one who's creating the fall in the market, right? Because of tariffs. Oh, we were so worried. Oh, well, the tariffs aren't going to be as bad. We rise, things like that. In this situation, I mean, it's the global conflict that's creating the situation now, and you can't just back out of a war.
Yeah,
you can't, right? That's the issue. So. Initially they said, 4 weeks? Well, I mean, we're beyond that at this point. It's been the whole month of April, March, and we're heading into April, bless you. And so I am just being cautious and adding the longs, like you said, Mike. I've gotten enough here. Even yesterday, I spent time rolling different things and changing a few strikes here and there. It's going to be more about adjustment than straight up ads, and I'm certainly not adding anything within a 3-week time period now. Not longs, like vol, sure, iron condor or something, within the 3-week period, sure. Yeah. But not directional. Directional, I got to be in May. I got to be in May and June now.
I agree. Does the move yesterday, does that concern you that the luster of the taco has gone away?
I mean, it was a day early, right? We discussed Fridays, and don't worry, we're getting the move today too. But it was a little day early. It definitely concerned me that it was already happening on Thursday. It was like they were getting ahead of it. Because again, this has been 4 weeks straight that we've seen we're up on Mondays, we're down on Fridays. And I felt like the market got a little bit ahead of it yesterday. So I am a little worried about what's going to happen today. For those who are chartists, I mean, we're on the 50-day moving average for ES and NQ. We're a little below it on NQ, and we're not quite there, believe it or not, on the Russell, which is showing some resilience, and we're on a 50-day moving average for the Dow. So that's Dow, NASDAQ, and S&P, and that's really not good. They're kind of ugly.
6,500 has been the taco spot. This is the second taco we've got at 6,500.
I think that's where his break even is.
That might be his spot.
But
his pain threshold.
But he already pushed it. He already put the pushback date is already set for April 6th.
Yeah.
I mean, what is he going to come out and say today? That's gonna be I don't know. What can you come out and say today that'll alleviate markets?
That is a good point. You can't because he said something yesterday. He can't say something new today.
You can't do it twice in a row.
No, it would be a kind of a flippy floppy look.
Mm-hmm.
But yeah, a lot of these Mag 7 stocks are near lows, and there's plenty of opportunity out there. I loved your call, Jamal, about just being longer term with direction. Like we're looking at June, May. Like I threw on a January 2027 calendar spread yesterday. So there's stuff you can do to keep the risk small and put a ton of time on your side.
Mm-hmm.
Yeah, I think that's what you got to do at this point, and just wait it out. Because, like you said, Mike, the bullishness eventually comes in these situations. It just, and this one is a little worrisome because, again, we don't have any control over ending a war in Iran. So I feel, it would seem if we could, we would have already done it. That was the idea going in, right? Oh, it's going to be quick. It's going to be pretty swift. It hasn't been that at all. Yeah. It's 4 weeks now. We have, and everything you look at, 4 weeks of volatility in gold and silver, 4 weeks of VIX closing above around 24, 25, 4 weeks of the dollar basically hanging out in the par 100 range, 4 weeks of this selling that we've seen so far. So hold on to your hats. All I can say, we'll see what Friday brings, but I'm a little worried about today.
Yeah, today I think, if it plays out like every other week, Friday has been the most painful of the days all week. So that could certainly play out today, but we will see here in a couple minutes here. We got the opening bell
4 minutes to go.
Coming up next. Jamal, thank you for joining us. We're going to take a quick little 90-second break, come back with the opening bell, and then we got fast market, a couple trade ideas. Those will be interesting to look at given this the moves that we've seen in this market. We're going to take a quick little 90-second break. You're listening to Tasty Live. Thank you, Jamal. Thank you, my friend. We are back. E-minis staging a rally. I shouldn't even say that. They're down 35 here, 64.90. You've got the NASDAQ down 156, the Dow down 300, and the Russell down 11 here. Everything down about 0.5%-ish to start the session. Oil catching a bid, up $2.76, 97.25. You have volatility futures up 79 here, about 3%, 27.05. Volatility futures at 29.30. You've got the bonds at 112.02. Gold and silver both relatively strong today, but not looking great. You got gold up $58, silver up 57 cents. Bitcoin moving with the rest of the market here down $2,000 on the futures. Icky, not looking good.
Yeah. Gonna see a volatile day today.
Yes.
VIX ticked above 30 for the first time in a while. And yeah, gold trying to catch a bid, crude catching a bid, silver catching a bid. So it's an interesting story that's playing out today, with only a handful of equities in the green in Apple, Costco. So yeah, we'll see what happens here.
Yeah, I've been just closing, scratching.
Yeah, I closed my silver position.
Battling. Yeah, I closed off a silver put that I had. It was a scratch, but I'm happy with the scratch. I'm trying to close out of some of my long gold exposure that I have with this short put spread, but markets are moving around pretty violently here. There we go. You want to see what the peeps have for us here? A little fast market?
Let's do it.
Let's do it. Damn, I'm so off. So off.
One day.
MU.
I should cue you in. That's because I've got the internal.
You do. You're kind of a music guy. You gotta.
I'll cue you in next.
You're a man of many arts, and you know, there's Mikey is like an onion. You know, you peel one layer, and there's another beautiful layer underneath, and then you peel that one, and you're like, oh my god, it just goes on forever. So many dimensions to that young man over there.
And then you get to my gambling side, and it's rotten.
And then you're like, oh my god, this guy's a psycho.
But that's how onions work.
Yes, yes.
Yeah.
Very good.
Micron.
Bullish. All right. Today's break below short-term support makes me cautious, okay? Selling a 293, 20, 450, 470 iron condor in May for over $10. Okay. I like this. If you did this yesterday, you're probably having a nice little day today. Let's see what this is trading at. Okay, 290. So that's about a 15 delta. That's the long option. Okay, so you're leaning a little bullish. So 320, 290, 450, 470.
Hey.
Yeah, so this is about 980. Let's see where we get filled here is what the mid price is.
322.90. Yeah, you have a ton.
Markets are low wide here. Okay.
Yeah, 30 by 20. 30 point wide put spread by 20 point wide call spread. You're picking up a lot more premium on the put side because you're taking on more risk, of course, but you're also kind of within that expected move. So, yeah, I think it's a nice little trade. Play for this chop.
I put it on.
Nice.
I just got filled. So did the exact trade. We did it at 980. So you're up about 20 cents on us so far. So I like that. Thank you, Ian. Sacramento.
Love it.
Interesting trade.
What else we got?
E-minis down 50.
Ew.
Low of the session. Icky. Volatility future. Where's the VIX at? 29.65.
Pricey. Chipotle could go with the 30-day puts here or a more conservative diagonal between April and May. Curious what y'all prefer from Fatima. Toronto.
Yeah.
Let's check it out. Yeah, Chipotle is $30 now. Kind of crazy to see. Was trading at 60 just last year. And it's tried to catch a rally, but it's sold off from there. Caught a high of 42 recently. So I like the idea of selling a put here. We haven't seen sub 30 pricing in many moons. So 30 strike put, trading for $1.50 out in May. If you just sell the put, you'll be in the earning cycle in the 49-day. But if you just sell the put, it's not going to matter if you get the rally. You'll still be able to get value out of that short put. So I think
this stock's a dog.
Yeah.
CMG is a dog.
Only $500 in buying power for the short put, but the max loss is $2,800 if you sell the 30 strike. So if you wanted to keep it really small, you could go with the diagonal spread. Buy May, sell April. And it's going to be a $2-3 debit for a 3-point wide, 3.5 point wide diagonal spread. So I think that could be something interesting. And then you can roll into the earnings cycle. If your April short put or short call goes to 0 or close to it, you can roll from the 21-day into the 35-day, which is where the earnings cycle is, and then pick up more premium that way.
I'm going to lean slightly long. I did a 30 straddle with the 35 call. So a straddle with a big lizard.
Yeah.
I did it at 380, 375. So you have a tiny bit of risk to the upside. It's more of like a neutral / short vol trade than it is bullish. But my risk to the upside is very minimal. If we get a 35 print on CMG, this will probably work out pretty nicely for me. So I'm in. I did that at $3.75. It gives you a break even at like 26-ish. So we'll see what happens here. But this CMG is one that has had my number for quite some time.
Yeah. It's been a dog.
It's down
for
over.
sure. But yeah, I like that trade.
Very nice. Intel, IV is elevated and price action looks range bound, selling a 1 standard deviation strangle in May and planning to close it before earnings. Well, planning is great until you get a 10% down move in the market. Then you got to adjust those plans low. Omar, Orlando, Florida, Intel.
Omar, you're on the right track here. We actually placed an Intel trade yesterday.
For Johnny Trades. We did the short put call ratio.
Yeah. So it's another way to play it. But yeah, the 1 standard deviation strangle today is looking like somewhere around 32, 33 put strike and the 52.5, 55 call strike. So pretty wide, but you can get close to $2 for it. We got into the 40 short put and the 50-55 call ratio yesterday. So just adding a little upside kicker in case we rally off these lows in the market. Market down 60 now.
Oof.
Crazy.
I did the 35-55.
Okay.
So you do have some call skew here. I mean, the stock's at 43. So the 55 call, which is $12 out of the money, it is about a 20 delta. The 35 put, which is about $8.5 out of the money, is a 17 delta. So you have, a higher delta for further out of the money on the call side. I did that in May for $2.23. And then I also have a Jade Lizard type position. I'm short the 40 puts and the 45 calls, and then I'm long the 50 wings. So I'm certainly neutral here. Short vol.
Love it. So yeah, we're in. Thank you, Omar.
Yes.
From Orlando.
E-mini's down 63 at the moment.
I just got filled on my SPX 0-day into this sell-off for $1.
Nice.
So took another $100 out of that.
Love it.
And we'll see. Maybe at the end of the morning session here, we'll throw on something for the weekend.
Cool.
Coinbase leaning bullish with support near 150, selling a Jade Lizard 150 short put with a 200-210 call spread for decent premium and no upside risk. May expiration from Chris in Austin, Texas.
Ooh, Coinbase not looking good. Down $11 today, about 6 to 7% here. Ooh, the 150. We're looking at May, so this is a pretty directional. Your short put is about a 35 delta here in May. So it's a pretty directional shot that you're taking here. The 200-210 call spread trades at like $1.70-ish. You're selling a $13.50 put to $1 call spread. You're really just short the put. I think if you were looking at this trade, I think you're really just short the put. I don't know if I want to be that directional here. Maybe thinking maybe like I'm closer at the money Jade Lizard.
Yeah, so you could actually, because this is selling off even more today, you could go from May into April. And you could do a 140 put in April with a 180, 185 call spread for 587. So same idea, a little bit more narrow on the call spread side, but you're in the 21-day cycle, and this will decay rapidly. You're not in the earning cycle. So that's another consideration too. Into the sell-off, it creates this opportunity for more near-term type of stuff.
I sold the 125 out in May, which is about the one standard deviation. So I sold the 125. I sold the 170, 180 call spread against it. The 170, 180 call spread, 10 points wide, trades at about $4. So you're getting like $6, $6 on the put, 4 or 5 on the call spread. I did it at 965. So technically I have a tiny bit of upside risk, but really this is more of just like kind of a neutral / almost kind of slightly bearish position here. Omnidirectional.
Yeah.
We'll call it. E-mini's down 70, low of the session.
Crazy.
All right. So we are in on the Coinbase Jade Lizard.
Sweet. APP. App loving. Sold off quite a bit recently. Not ready to get long yet. So staying neutral with an iron condor in May. The 290-310 put spread, 20 points wide. 530, 550 call spread, 20 points wide. With strong call skew from Ethan in Charlotte, North Carolina.
Yeah, this is a stock we've tried to trade many a time. I mean, you got an $8 wide bid ask spread on a 20-point wide iron condor.
Yeah,
it's going to be a really hard one to trade. The Coinbase trade, I was like, I don't know. This one, I feel like you gotta just avoid this.
Yeah, it's a little tough in May, especially because you've got earnings priced into the May 8th cycle, the 42-day cycle. So with risk on both sides, neutral risk, it's going to be a lot of risk without a lot of profit until that earnings cycle. So I think for me, if I were to do something in this product, I would go to April and just go more narrow.
Okay.
Do something like a 10-point wide or a 5-point wide, and just keep the risk small. You can still you could do a risk one to make one in the 21-day. You could do a 340, 330 put spread, 440, 450 call spread for $5. And that one will come in quickly because it's only 21 days if you're right. And you're in this nice little channel here. So
it's just it's going to be getting filled.
It's still, yeah.
And the P&L is going to fluctuate wildly. I mean, it's a tough one. Maybe
wait for earnings.
Maybe look at it for earnings. Yeah.
Just earnings.
Yeah.
Because that's when you'll get some more liquidity.
Sure. I think in a market like we have right now, where there's just so many other places that are more liquid and more interesting from my perspective, I would rather just keep this one on the back burner. So I'm gonna pass on APP now. Maybe we look at it for earnings.
Fair. XOM. Completely neutral in XOM here. Selling a 145, 185 strangle in May from Mark in Dallas, Texas. Texas showing up today.
Yeah, 145, 185.
Didn't you do something in here yesterday?
Yeah, we did a put diagonal spread in the Johnny Trader portfolio as our short position. Not working today with oil up on the session, up $3.13 on crude oil futures, XOM up $2 and change. Volatility futures at 27.75. The VIX itself at 30.20. Woo, 30.19.
So for this one, I think this is another one. You're in the earnings cycle. You're selling risk on both sides. It's going to offset your theta decay until the earnings announcement. The risk here, I think, is to the upside in XOM. So I might consider just ditching the call and then moving the put from 145 to either 150 or 155 to pick up some more premium and just sell the put side. You're still neutral in that sense, but you don't have the upside risk in case this thing really takes off. Given the market situation right now, I feel the risk is to the upside in this one.
I think I'm going to play this. I hear you on the upside risk. I don't know if I can sell the puts, though. I'm thinking maybe a ratio spread. I was thinking the 170, 175 right at the money, the long call spread, and then selling the 185 where they're looking at. It trades at about a 20-ish cent credit in May. You got to break even up at like 90, 190-ish. So you got another, 20 handles to the upside, 10, 15, 20% on the stock. No risk to the downside because I have enough oil short vol / short delta into this move.
Cool.
All right, so I got filled on that. So I did that at 20 cent credit. Small credit.
I like it.
It's neutral. It's a neutral position. If we fall out of bed here, it basically does me nothing. If we kind of chop / go higher, that's kind of the best case scenario.
I dig it.
Tail risk on the upside.
Index.
Just straight up index. Okay. Waiting on any headline or tweet that could shift sentiment. If we bounce, indices like SPY, Qs, IWM, and DIA all offer good premium, selling a bullish iron condor wider on the put side. Okay, Derek. I think that's an interesting spot to do that. I did a wide SPX iron condor this morning, which didn't lean bullish, so to speak, but it is short vol. And so by that kind of setup, you are somewhat bullish because you expect volatility to come in on an upside move. So I did that. I also have downside crab trades that are like, I would call omnidirectional. You kind of want the market to chop here, volatility to come in because you're selling more units on the tail. So I have this in. I think if you've avoided the downside move that we've had here, you got to start looking at like wide iron condors or strangles if your account size is big enough out in May, because you don't, this 30 mark in volatility, you don't get much higher than this most of the time. Yeah. Not to say you can't, but this is like, this is a spot where you got to start considering that stuff.
Yeah, I think if you're doing something like this, I like any of these, and I totally agree with you. If you get a reversal, you could see a swift market rally. Mm-hmm. Maybe not to all-time highs, but definitely from the bottom here. But yeah, I like the idea of going like a 10-point wide put spread with a 5-point wide call spread, or any kind of ratio like that, like a 20 by 10 or 10 by 5. Yeah. I'm looking at the 21-day in April and the Qs. The 540, 530 put spread.
540. Okay. So you'd go into May?
April.
April.
Yeah. The 540, 530 put spread.
Okay.
And then the 600, 605 call spread for $3 almost. So you have risk to the upside, but it's negligible.
And you're doing like a dynamic iron condor where your put side is wider than the call side. So it would be a blessing if you were like at 590.
Yeah.
This trade would be great.
Yeah. So it's definitely a way to take advantage. You don't need to cover the risk on the call side completely, because if the call spread goes in the money, it'll be trading for about 250. Your put spread's going to lose value, and you're collecting 280 up front. So even if the call spread goes in the money, it'll be a scratch or a small winner.
Very good. I'm already in. I like this situation. If you are looking at new trades and you have better timing than me. Next one, please.
Microsoft taking a shot here. Pure speculation. Iron Fly centered at 400 with 20-point wide wings from Joe in Vancouver.
So you're basically like buying a butterfly here. What are we thinking? In
400 20-point wide wings, probably April.
So I have some long delta here. I'm short the 350 puts in May. So you want to buy a butterfly. I mean, the 400 strike, the stock is down another $8 today, and yesterday it was down like, what, 10?
Yeah.
So when he was looking at this, we were probably sitting at like 380. The stock's at 357.
Yeah.
If you're doing an iron fly, rather than selling the in-the-money put spread, just do a butterfly, a call butterfly. It'll trade for a debit, but it's the same trade.
Yeah.
You'll just have tighter markets. the in the money put spread, it's not going to be horrible because this is Microsoft, but it's, you got $1-ish wide spreads on each of the options and the in the money options. We could show this here. So the way you would do this, instead of being short, like let's just make this 10 point wide. And we'll go here. So this is 370, 380, 390. We're looking at this in April. And this spread is, we'll call it 30 cents wide here. Instead of selling the 380, 390, and then selling the put spread and then selling the call spread, this spread is going to be, about 70 or 80 cents wide because you have $1 wide spread on the in the money put spread that you're selling, rather than doing this trade, which trades at an $8 and change credit. So you have $1 and change in risk. You can do the butterfly, which is the exact same thing. If we were just to buy the 370, sell 2 of the 380s, and then buy one of the 390s, you can see trades at $1 and change. Max profit is the same exact thing. It's your upside shot here for a bounce into the end of the April expiration. So do the out of the money call butterfly versus the in the money iron fly. The iron fly we use at the money. It's the same thing as a butterfly, same exact risk profile. I guess I can add another $100 in risk here. What's that matter for me? And
it doesn't matter.
My 350 puts at the money game, my face ripped off.
I went to April and I bought the 380, 400, 420. So I did this butterfly here in April.
Okay.
Definitely going to April instead of May for me, just because May has the earnings, and for these butterflies, you want extrinsic value to be as close to zero as possible.
Yeah.
So April is the expiration for me, and yeah, it was $1.70 for a 20 point wide.
Cheap shot.
Yeah,
I like it.
Hood running a diagonal in Hood, long June 80 calls and short the April 77 calls.
June 80.
So a little backwards diagonal.
More like a calendar type position.
Yeah, it's basically a calendar with the strikes being close. Yeah.
But you're using $300 extra in buying power.
Correct.
Because you're short call. This is why we don't do these like this.
Yeah.
Like I would rather go and buy the June 75 call and sell the April 75 and do this as a calendar spread, or go to May and sell like the 80 strike against it and do it at a $3 debit. You'll have positive delta into you want the stock to go up in either of these trades.
Yeah.
And it'll just use a lot less capital, and then you don't have the risk of like, okay, the stock's the expiration risk, the assignment risk of being long or short stock at 77 at the April expiration. That's how I would do this.
Yeah. I think because it's going to be cheap anyways, we would set it up with either a calendar or even a slight diagonal spread. Like you could buy the 75 in June and sell the 77 in April. You're paying over the width of your intrinsic value, but you still have no upside risk really, and your debit is going to be less than or equal to the other one.
I did the 75.80 June, May. And I also have long stock here. I've covered strangles. So I'm short the strangle with long stock. So I have some long delta here, along with a lot of other things.
Beauteous.
Yes.
One more. Last but not least.
Google. Okay, Google has taken a beating and might be the weakest in the Mag 7. I don't know about that. If you've looked at Microsoft or Meta, those are certainly weaker. Setting up a calendar around the 300 strike, selling May against June. Okay.
Owen and Reno.
Probably do something like this. So you're going June, May.
June, May.
A lot of time.
Yeah, I like it.
I'm going to go
300 piece. June, May. So let's see. The May is trading for $7. What is the? Bless you.
Thank you. Ooh,
Yeah, so you're picking up a little bit more premium by selling the May monthly. The May 1st cycle is where they're pricing in earnings with a little jump in implied volatility there, the 35-day. So the 300 strike there is trading for 550, but it's not that much of a difference. But yeah, the 300 strike calendar for $3. Why not? I can get down with this.
I think I might do just a June, May diagonal.
It's fair. But yeah, these are the kinds of trades that I really like a lot in this environment. Just taking cheap upside shots, long option with a lot of value. Worst case scenario is this market keeps tanking.
And you lose the debit.
Or you just buy back the short option.
Yeah.
The short option loses all of its value. You're just left with these June longs that have 80 days or 70 days by the time, if the market keeps going down. And you have these really cheap, unlimited upside calls now. And if you do get that big rally, they can come into play very nicely.
I did the 290, 310, June, May.
Cool. I did the 300, June, May.
There you go. Same sort of thing.
Yeah.
Very
That's
good.
it.
E-mini's down 60 here. I think this was a good session. I think we got about pretty much all of them.
Yeah. I think
either have them on or...
I think our last session too, the 5th one, the bottom left corner was another X. So I think that's our zone.
Yeah.
Fortunately.
Well,
9 out of 10, it's perfect.
It's about as good as it gets.
That's an A last I checked.
Yeah. No, that's a good
From
one.
the people.
Yeah.
Love to see it.
Thank you. No applause because my stuff not looking good. We need a little bit of a bounce here. E-mini's down 58. You have oil up $2.68. Volatility futures, they're hanging in there. I don't expect to see any volatility come out today. You got VIX at 29.82. The VIX futures 27.55 here. Bonds catching a little bit of a rally. Gold and silver also kind of bouncing a tiny bit. We're going to take a quick little 90-second break. Come back. We got a market measure sponsored by the SIBO, a nice one on put spreads in SPX. We're going to take a look at those, see what the juice is there. We're going to take a quick little 90-second break. You're listening to Taste Live. Mikey, my friend, we are back. Let's go through a quick little market update. You got E-mini S&P 500 futures are down 50 here. You got the NASDAQ down 250, the Dow down 350, and the Russell down just under 20 here. Catching a tiny bit of a bid here from the bottom of the session and across the board, but not looking great. You got oil down up $2.86, down about $1 from the highs. 97.37 right now. We got as high as 97.87, so I guess only like 60-70 cents from the highs. Volatility futures in by a little bit from the highs. 27.35, up a point-ish, about 4% here. The VIX futures at 29.56. You've got bonds upticking a little bit. We're in the 112 handle. That's kind of nice to see. Gold and silver both catching a little bit of a bid here. Gold up $86, floating around that 4,500 mark. You got silver at 69 and change. Bitcoin still down here, 2,500 on the futures. Spot's actually at 67 and change. So nothing looks too encouraging right now. Just a little bit of chop here. I think I got to probably take off another one of these silver contracts.
Apple continuing its little rally here, up almost 1% in this big red market the last 2 days. So
does that make you feel good?
It does, because I do have a bullish position in there. But yeah, today's content, 0 DTE, out of the money put spreads, I think will be very applicable.
Yeah, these haven't been great this last couple of weeks, but they were amazing for a couple of years. I've seen some comments like, I did these and now I'm out some money. Yeah, well, when the market goes down, it's not the greatest trade.
Yeah, that's why the 0-day stuff.
Got to be prepared.
I size way down.
Yeah.
Because you're doing it every day.
Yes.
Ultimately.
And there's only a small amount of data. The data set is 3 years.
True.
I mean, we did have they had the Fridays that came out every week, and then they had the Monday Fridays, and then they added the Wednesday in there. So you had a Monday, Wednesday, Friday, and then they just added the full Tuesday. They added the Tuesday, Thursdays 3 years ago. So now we have every single day expiration. So there's only been a handful of years where this has been applicable.
Yeah. I'm intrigued.
Very good. Well, let's see what the gang put together for us here. Zero DT out of the money put spreads, sponsored by the SIBO. Take a look. So zero DT options, I mean, they offer fast results, highly liquid. It's obviously an appealing trade. Lots of people are trading these in many different ways, whether it be just put spreads, iron condors, long spreads, long calls, long puts. People are seeing these all day long. Last week, we explored various mechanics around selling at the money put spreads, but many traders prefer staying out of the money. So we're going to look at out of the money spreads this time. Obviously, this means we're going to accept a smaller initial credit. So your closer at the money spreads are going to be juicier premium. Further out of the money, going to be lesser premium. But in exchange for that, you're going to have a higher pop and a higher win rate, given that we've had quite a decent move to the upside. But your overall pop's going to be better on the out of the money trades versus the at the money trades. Those are going to be more 50-50. The big question is, how far out of the money do we go? So we often use an expected move as a reference point for when we place these trades. But for same day moves, there are meaningfully different ways to calculate this. So we're going to talk about just kind of the different ways that you can incorporate expected move or different expected moves you could use for your trade entry here. What do you normally look at?
I look at the big orange bar on the platform.
That's the straddle / IVX that you see on the volatility when you look at like SPX. So if you look at SPX, it's this number right here, $41-ish. It's also represented in this brown bar in the middle there.
Yep. So that's where I start. It's always going to be around the 25 delta, 20-25 delta. And then you can manipulate it from there, but just visually, that's where I start every time.
I think that's a pretty easy way to do it. I usually go to delta and I go to just the 20 delta, but I'm doing usually iron condors.
Yeah.
So I'm doing both sides and 15, 20 points wide, depending on my risk tolerance for the day, but somewhere around there.
Yeah.
So let's take a look at this next slide here. So the VIX and the VIX 1D are things that are the VIX 1D is a newer product. I think that's only been around about 1 day, 1 year. It's the VIX 1 day.
Yeah.
It's been around, I believe, 1 year, around that, just to give you an idea of what that looks like here. So the VIX 1 day, it's a VIX style calculation for 0 and 1 day options. So this today would look at this Friday SPX options as well as next Monday's SPX options. You see this constant kind of bid into the end of the day. You see all these green bars kind of close up at the top, and that's because you have volatility. The 1 day or the current day options go to basically 0, and you kind of move into the next day's volatility. So you tend to see this kind of spike to the end of the day, and that's just the mechanics of the calculation because you're moving more towards the 1 day options, which are going to have a higher volatility as you get closer to expiring today. But the expected move is basically just spot price, and then you can incorporate the vol, and you divide that by the number of days left until expiration. There's your calculation there. We just talked about the VIX 1 day, but it's largely composed of 1 day options rather than the 0 day options because of the time that comes off the board. So you only have 8 hours on these 0 day options. We have much less, or a little bit less than that now that we've passed has passed. And now we're going more into the 1 day options, so you get a little bit higher volatility. Because of this, using a fraction of the index derive the expected move is a natural way to place 0 DT trades. So we're going to be looking at VIX. We're going to look at the IVX, that expected move, the brown bar that Mikey mentioned. And we're also going to look at the VIX 1 day, which is more of a short-term volatility metric. Typically, it would be a higher number than The VIX itself is going to be a higher number, but when you extrapolate that to a one-day move, it's going to be a lower number than the actual VIX one day. The VIX one day is looking at the VIX, the short-term options, not looking at the 30-day options. So we're going to see how put spreads placed at different distances out of the money anchored to each of these expected move frameworks have performed. So you can take that expected move calculation. You can look at the VIX one-day number, plug that into here. You can look at the VIX and plug that into there. And then you could look at the IVX and plug that into that calculation. That's how you'll get each of these spots if you are looking at this sometime in the future.
Yeah.
And doing these trades.
Love it. So yeah, same kind of idea, the same strategy, just using different frameworks for entry points, but using 3 years of data in 0-day SPX options collected every 10 minutes. Consider the results for selling one 20-point wide put spread every day, either at 9 a.m. or plus or minus 5 minutes from there. Experimented with short strikes at different multiples of the different expected moves or at the money as a baseline. Explored closing positions at a range of profit targets from 10% to 50%. Other trades were allowed to expire. Examined the total number of winning trades, total profits or losses, and the maximum drawdown. Largest amount someone could have lost following these mechanics every day by starting at an unlucky time in the study. And as we talked about yesterday, it's hard to be 100% lucky. It's also hard to be 100% unlucky.
True.
Yeah.
You should keep in mind these drawdowns are the string of drawdowns.
Yeah.
So these numbers are going to be more than what you can actually lose on a single trade.
Mm-hmm.
But it gives you an idea of like, okay, when things don't go my way, what's my distribution size, right? So you're taking $50, $60, $100 profits every single day. What's the bottom part of my P&L distribution on a day-to-day basis?
Mm-hmm.
That's what it's going to give you here.
Yep. So let's dive in.
Yes, the first ones we have. So we're going to manage these at different percentages. So we're going to start at 10%, go up to 50% of the total credit collected, and take a look at like the win rates, the average P&L, and then the max drawdown. So the first grouping that we're going to look at here is the winners closed at 10% of the max value. And then we're going to look at, again, these are, so the columns that you have here are each of the different entry points based on the volatility calculation. So we're looking at the at-the-money short strikes. That's what we've looked at in the past. And we're looking at half the VIX one-day expected move. And then the full VIX one-day expected move. And then we're looking at half the VIX one day. If you took the VIX and put it into the volatility calculation for expected move, we're going to take half that. And then we're also going to look at the full VIX expected move. And then we're going to just take the simple one that's right on the 0-day expiration, the IVX, that brown bar that Mikey looked at. And so you can see across the board here, they've all been net profitable. That is influenced by the higher win rate than you would typically expect. The pop on all these trades is going to be like 70. And you're realizing 90% plus pop. That is mostly because the market has had a significant upside move. If you started doing these this year, you're like, this trade stinks. Well, the market's gone down. Something you have to keep in mind here. You can see across the board your average P&L, kind of the best when you're doing at the money because, again, those are the most bullish. Market has gone up. You're going to have the most bang for your buck there. It gets better as you go more towards the expected move there. When you're using the VIX numbers are kind of, because it's 30-day implied volatility versus the IVX, the 1 day, 0 day. You're going to be closer at the money, which is going to skew the P&L. It's not going to be as good as some of those further out expirations, but because you're closer at the money, you have lesser max loss on those trades, which means lesser max drawdowns in the case of those trades. So you have, and the data speaks for itself. It's been 3 years. It's been an upside move, 10%, good profit.
Yeah. For me, I think this win rate is a little too high.
To be consistent. You expect this to come.
Well, no, it's just because like if you're closing it at 10%, you're taking it off too soon for the risk you're taking.
Yes.
I think is what we'll see as we go down the road here. Some people in the YouTube chat saying, wow, 99%, 98%. That's because we're closing winners at 10%.
Yeah. And those max drawdowns are big numbers.
Exactly.
And that's because you're taking such quick
Yeah.
profits. The max drawdown on an at the money put spread, it's going to be the same across the board, or at least it's going to be relative to whatever you manage at a higher number. Your max drawdowns are going to get lesser with just the purely directional at the money trade because you're collecting more premium. Your winners are bigger, and so your max drawdowns are naturally going to be lower. So we'll see that kind of across the board. But your win rate is going to get lesser.
Exactly.
So here, again, managing at 25%, your win rate kind of comes in a little bit for the at the money strikes across the board. When you're managing the trade, it's going to be you're going to have a higher win rate. You're taking your average P&L is going to increase here. Your max drawdowns are also sort of they're in line because the same period, like this week or the last couple weeks, will probably be our new data set for max drawdowns because we've had such big moves to the downside.
Yeah.
There's been a consistent number of them. And so it's just something to keep in mind. The losses can get big. Got a nice win rate. Got to keep size in check.
Yeah, but this one, closing winners at 25% versus 10%, your win rate goes down, but the average P&L per trade is double or triple in some of these with a similar max drawdown. So this is why it's the same concept as like why we don't sell 5 cent out of the money undefined risk options. It's like, yes, you're going to have a super high win rate, but when it comes into play, you're going to have some pretty big losses too. So it's like you got to have this balance of risk reward. And you can clearly see it here, the difference between a 10% winner closing and a 25% winner closing with all these same entry points and frameworks. You have a much higher average P&L per trade over time, and the max drawdowns are similar.
Yeah, I think that's kind of the key here.
Yep.
And you'll see that when you get to the 50% here. So when you're closing winners at 50%, again, you're going to see your average P&L kind of tightens up. It's actually in the middle of the 10% and the 25%. The 25%, your average P&L is going to be better, but you're going to have bigger drawdowns than you do with the 50% here. You can see across the board your drawdowns, max drawdowns get lesser because you're taking more profit. Your P&L values as an average are staying all in line across all of these. It's just tightening up your distribution on the downside here.
Yeah. And I think this one's interesting because you're going to have, if you look at the difference between a 10% and 25%, you're picking up way more premium over time with probably a similar risk in trade. But when you're going from 10% to 25% to 50%, to get to 50% with 0 days, you have to hold it a lot longer.
Yeah.
You know, like you have to get
where you get a big move.
Yeah. For you to get 25%, you can get 25% from the opening print to 10 a.m. a lot of times if the market's not going crazy. But to get 50%, you have to hold it another couple hours, and that extra couple hours could create more volatility for you. So somewhere between 25 and 50%, I think is the takeaway here in terms of average P&L per trade mixed with a nice win rate, mixed with similar max drawdowns.
Yes. 90% win rate on some of those. Sounds nice.
Love to see it.
Sounds nice. I think
it's like your friend that says, I don't look at the market unless it's up 15%.
That's true. That's true. They're not happy right now, I can tell you that.
No.
Couple takeaways here. So initial strike selection is one of the most important times for an option trader to determine the characteristics of their trading outcome. It's one of the only things we can control. Despite the persistent bull market, out of the money put sellers have been able to largely keep pace with at the money traders thanks to more consistent winners. So we've seen that out of the money and at the money spreads, into what has been a bull market, they've both been good. Further out of the money strikes gave up some profits, but further insulated traders from the dangers of consecutive losers. When you're selling at the money spreads, you're going to have bigger risk and bigger reward. That's just going to come with the territory. The best performing profit targets for further out of the money strikes were slightly higher if you take smaller credits. try to keep a larger part of them. So somewhere in the 25 range, that's kind of the spot. The exact particulars of which out of the money strike to use was not especially significant. When you're trading it, and this kind of goes to, we had this confirm and send question the other day on Wednesday or maybe yesterday, where they were like, how do you pick which strike? On a 1-day time frame, whether you go to the 6,500 or the 6,495 on SPX, basically the same thing. It's kind of just the mechanics of being out of the money versus at the money.
Yeah.
So there was not a significance to which one was better, though a full VIX 1-day expected move is likely too far. So if you're the VIX, what that's telling you is that volatility in the here and now is usually the most overstated. When you're looking at 0-day options, it goes to why we do these, diagonal spreads, stuff like that into earnings, because the 1-day volatility is usually the most juiced of the bunch. And therefore, if you're using that as a gauge of where you should place your strikes, it's probably not worth the risk.
Yeah, it's the same concept as yesterday where we talked about like trying to time everything perfectly, which you're not going to be able to do anyways. The mental load in doing that is just so aggressive. And that's why, especially for 0-day stuff where I know I'm entering it in every single day, it matters even less, which is why I go to the orange bar for me personally. Look at the orange bar, sell this put spread, and you can do it in 10 seconds instead of doing all this analysis and having the market move, and then you have to read
and you miss it, or
Exactly.
Sometimes you'll get better prices.
Yeah,
because sometimes the market will open and E-minis are down 40 and then they're down 60 in 10 minutes. By the time you've done your analysis, you have better strikes. Indeed. But it works out. It's very similar.
Yeah.
Good stuff. Quick little market update as we've had some whippiness in the market here. You got E-minis down 65 here. We're kind of at the low of the session, near the lows. 64.54 was the lows, so about 4 or 5 handles from here. You got the NASDAQ down 330, the Dow down 450, and the Russell down 29. Everything down about 1% here. Oil at the highs of the session, 98.25 here. We're about a nickel off the highs. Volatility futures at 27.60. You got the VIX itself at 29.95, just ticked into the 30 handle again. Bonds down 16 ticks here, 112 and change. Gold and silver have remained kind of strong here. Gold's up $80, silver up $1.12 here. So silver kind of catching up to the move in gold, 69 on the dot there. Ugh. Hasn't gotten any better.
No, it has not. No, it has not.
Good stuff. We're going to take a quick little 90-second break. We're going to bring Q on to see what's going on at the trade desk here. We're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What's going on, everybody, and welcome back to Risk and Reward. Today's Friday. We've had a pretty volatile week. We'll get into everything, do a little bit of a tour of the market. But before we do that, Brother Gus, how are we doing today?
Doing good. We got a full hour today.
We do have a full hour today.
We got plenty of time to talk about all the things. We can do our usual series of yammering and yapping without having to worry about eating into our small time window.
Yeah, we're sliding into.
Thank you for the air horns.
We're sliding into Chris's yammering and yapping a little bit today, so that'll be
We
fun.
are. Chris slid into his own yammering and yapping.
Yeah.
That's why we're doing this. So,
Exactly.
But another day of bleeding in the market, which means another day of bleeding in my portfolio. Been rotating out of some losers all morning. Things are finally starting to get overextended to a level where I feel like some things are becoming unrecoverable. Let's see what I did. I liquidated my position in CoreWeave this morning, was the big move. I liquidated a loser in Philip Morris yesterday. And just kind of trying to manage a lot of these losers based on time horizon, what my thesis was getting into them, how valid I think that those things still remain. So it's not necessarily a size of loss equation as much as a time horizon and, what's the realistic possibility of them getting back into the money. The next one that's probably going to get let loose for me here is Live Nation. I'm waiting to see if it'll hang on to this 145 level. This one, I would be really sad to lose this trade. This was so far in the money for so long. Just didn't quite pick my time right for max profit. I was never close enough that the theta decay even started to come through. I think this was up like $80 at the very peak. We need it back over 155 21 days from now. We're within the next 21 days. Realistically, I don't know that that's in the equation. We got this big down move yesterday, and I was like, okay, that's fine. That's tolerable. There seems to be good support at like this 148, 149 level. Hopefully, we'll just catch another bounce. But now that we have just flown way down through that level to 145, I'm not liking this as much anymore. So keeping a close eye on this one. If we test 140, if we test 140 at any point, I'll certainly get out. And if we're not, at least making some sort of move back to the upside by the end of next week, I'll be forced to rotate out of that one as well. And this is particularly frustrating because I bought lots of tickets recently. I'm trying.
Live Nation, yeah.
I'm doing my part.
Put your part in for the revenue. Yeah, you've got about 5% of their overall revenue. If everybody else could help pull their weight. If J. Cole was sliding around a little bit sooner, I would have pulled my weight a little bit more into the revenue share portion of that. So that's my fault.
Yeah.
But
Baby Keem just announced a tour, and that guy, he's not even coming to Chicago.
Oh, wow.
He's doing like all kinds of obscure places. He's got Dayton, Ohio in there.
How are you
going to go to Dayton, Ohio and not come to Chicago?
That's absolutely absurd. What is going on right now?
I know. It's insane. Yeah. It's like 30 cities. It's not like it's a small thing.
Yeah, no. Chicago's usually one of the hubs that's hit.
Yeah,
always,
you would think so. I mean, this has got to be one of the easiest places to sell out.
Yeah.
I don't know. But so Ion Live Nation would have loved to turn those into some free tickets with the max winner there. Instead, it looks like they're going to be some extra expensive tickets, but hopefully things can turn themselves around soon.
Right on the dance floor.
Indeed. Still got these short VIX positions on, just waiting for the collapse there. 52 DTE doesn't have me too worried yet. Just naked puts there, just gamma play, hoping the VIX will do one of these. We'll get some big sweeping good news, and VIX will just rocket right back down through 20 in one day, and these will flip over to green. And then aside from that, nothing I'm too concerned about. I'm still short these USO positions. This is one where the losses are bad. This is hurting, but my original thesis remains with oil. Basically the same thing that I just outlined with VIX. I just think whenever some big anti-war news comes sweeping through, we'll see the big collapse in oil, and I'll be able to get out. This 85, that's the only one that I would consider cutting. I'm going to let that ride probably until 30 DTE before I really consider doing anything with it. But that's the only one that's on my mind to cut. These other two will be staying in the portfolio for sure. And some other bad losers down here. This position I took in Baxter International, this was tailing a Congress trade that was kind of sus. Hurting me bad, but this is a gigantic January 21st, 2028 leap. So
got a lot of time on those.
Yeah, really don't care.
You might have a couple gray hairs, but yeah, we might look a little different by the time that one expires.
You're not kidding. You're not kidding.
We might be.
That's more of a set it and forget it type play.
Yeah.
Rivian, you could never make me hate Rivian.
Yeah. I'm curious, what is your actual opinion on the actual company of Rivian, like their vehicles? Are you a Rivian stan, or are you for Rivian?
Yeah,
You're kind of indifferent.
I'm a bull. The thesis has sort of shifted as over the life of this trade. I originally put this on. I believe I put on the that's UNH. I put on the 12 and the 25. Yeah, I put on the 12 and the 25. And I had a 20 in the middle as well during the tariff tantrum at the bottom there.
Okay.
Because Rivian is the only EV maker that's just fully U.S. All the production is U.S. based, so no tariff burdens at all. We've since obviously backed off the tariffs fairly aggressively. But I've just sort of shifted over now to where they just keep getting these little bits of bullish news, and I feel like very soon all the pieces of the puzzle come together, and they'll have some massive quarter and just make this big leg up over 20 and hold it.
Yeah.
They just signed the big deal with Uber, right? To do it was with Uber to do 50,000 robo taxis for Uber, and like we've gotten into a lot of times, I won't go back down the rabbit hole, but I just think that Tesla becomes the budget EV, and that opens the gates for somebody to swoop in and be the luxury EV. I think that
Rivian could be luxury?
I think they're clearly positioned to take.
They are expensive, right?
That market.
I know Tesla came in pretty expensive on top of market, but Rivian's still pretty up there, around $100,000 for most.
Yeah, I think the Rivian's like the cheapest ones are like 70.
Oh wow, that's up there.
Yeah, and then
before upgrades and all that.
Yeah, exactly. Yeah, that's just if you want like the very base cheap Rivian for it's 70,000. And the Teslas just keep getting cheaper and cheaper, which I think makes sense. I think it makes sense for both brands. Rivian, you don't have the facilities to produce these, crazy mass produce these yet. Got to keep your prices high and really focus on quality. And Tesla is in a position where they have, one of the better EV mass production workflows in the world. And it makes sense to try to get your prices down as low as you can and just get as many on the road as possible, continue to build out your infrastructure, all that good stuff.
Yeah.
How is Tesla looking? I know we just had a look the other day as well.
Tesla's been really quiet, I would say.
It has. All the Mag 7 companies have been quiet, really, in the midst of this drawdown. But yeah, Tesla, no exception here. What's going on, everybody in chat?
Yeah, what's going on, guys?
Rodrigo, Brett, Sergio, Brandon, Luis, good to see you.
What are you guys looking at? What are you adjusting right now? We got salt with the SPX butterfly. So we got some more positions throwing it around on the indices.
364.65. That's clean. Easy
and up in the profit right now.
Sitting around $300 profit, considering taking the profit, but it's my only downside protection and currently tons. Thoughts? Yeah, I mean, I think if it's your only downside protection, it depends how long biased the rest of your portfolio is. When you use the vernacular downside protection, that's sort of what comes into play. I would say if this position is like, large relative to the rest of your portfolio, if it's like if you have 20% of your buying power that you have out right now is allocated into this trade and 80% is allocated into long stuff, maybe it makes sense to hold it a little bit longer. If it's closer to 50-50, maybe to take your profits, you could get back into something with downside protection, but make it a little bit longer dated, give yourself another month. But yeah, I would say it's all a ratio equation there. And then, no futures power hour today or only a half? I believe there is no futures power hour today. Somebody can correct me in the chat if I'm incorrect on that, but I believe it is canceled. I'm not sure. All I know is that I was asked to go an hour. It's very compartmentalized, okay? It's like national security around here.
I'm just here so I don't get fined.
Exactly.
No Marshawn Lynch. But no, Rivian R2 is supposed to come out this spring and starting at $45K.
Oh, interesting. Yeah, so that's a foray into being a little bit more affordable. I don't mind that either because, $45K is still not a cheap vehicle.
No. I was literally just about to bring up the fact that we're talking about $45K like it's one of the – because I think like in the early 2010s, like a $40,000 car, that was like a – we're getting expensive, up here. And it's kind of funny how we're 45,000 is going to be the more affordable, more getting into the market.
Yeah, it's just you don't have to. They don't need to stay like a hyper luxury brand.
Yeah.
You can dive into that realm of mid tier luxury, if you will.
I feel like a lot of these vehicles have so subtly slid into that $100,000 range with all these like the a la carte, the add-ons for the vehicles. I mean, back in the day, there's no way all these vehicles cost $100,000. Now there's so many vehicles that you can get for $100,000. I feel like that a la carte option. I don't know. The car industry was a little slick with that one.
Yeah, and
the upgrades.
Yeah, I don't know. And it's just I think the like payment and like financing options have gotten more robust as well. People are willing to get more creative. There's a lot of people out there driving around in cars that are underwater that they cannot afford. I think that as that's been sold to the American populace a little bit more, it's allowed them to get away with hiking these prices up a little bit. But yeah, the only thing that would really alarm me for Rivian is if they suddenly roll out something that's like, $25K off the lot, and they're like really trying to get into that competitive, cheaper environment. I feel like then they're picking a fight they can't win with Tesla. But I think that as long as they continue to stay in the, I would say, 35, 40 plus range, that's like my comfort range with saying I think they could fill this luxury EV void.
Right.
It's interesting how to be luxury, there is an expectation that it is expensive. It's not just inherent quality.
100%.
It must also be expensive to go with the quality.
You would think, well, how are you getting such good quality without putting more dollars behind it? So, I mean, I see why why we kind of...
Yeah, I've always thought like, I don't know, like Mercedes. I don't want to throw any Mercedes owners under the bus here, but if you...
you're about to get dogged on.
Unless you're in like a crazy... high trim Mercedes, a six-figure Mercedes. I think that there are $60,000 and $70,000 new Mercedes that are really less nice than like a comparable vehicles that you could get for $40,000 or $50,000. Like I think for instance, a like lowest trim package Tahoe is going to be nicer than a lowest trim package Mercedes GLK.
Oh, for sure. Then we have that brand equity.
Exactly.
Right.
Exactly. Sure. But it's going to be cheaper also. Not by much. The Tahoes are not cheap by any stretch of the imagination, but it will be $10,000-$12,000 cheaper. Yeah. And objectively, I think it's a nicer vehicle. But
you pay for the brand a little bit.
Yeah, a Tahoe is never going to have that luxury appeal that Mercedes has.
Samsung,
that is keeping your prices high.
That's a good point. I mean, Samsung owners have spoke about that a lot of the times, right? We've already had a camera like this, plus more megapixels, plus X, Y, and Z, and it's like, but you can get more of a bang for your buck going to Samsung, but we always purchase the brand of Apple, and they've killed it.
Well put. Yeah, and absolutely. I mean, pretty much every single new feature for like the last 10 years, it feels like that Apple's rolled out. The Samsung owners are like, we've had this for 2 years.
And I'm still going to get the next one.
Yeah, exactly.
I mean? Like,
every time, it never even crosses my mind to switch away from iPhone because it's just it's ingrained. They have the brand equity. Apple does a good job of tying you into the whole ecosystem as well, which is a factor. Yeah, I appreciate Apple moving to the USB-C cables. I will say, I think that they were forced to do that. I don't believe that was their choice.
Yeah.
But not having to do proprietary Apple Lightning cables anymore is very nice. I got USB-Cs all over the place.
Completely agree.
Big fan.
Big fan of the USB-Cs. What are the metals looking like today amongst all this?
Oh, you got the Ford Lightning, Brett. Interesting. How about that? Does the 500e work well? Oh, the Fiat as well. That's a fun lineup of vehicles you got going there.
The Fiat 500e.
Yeah, gold catching a bid today, up 3.5%. Silver up a little more. So winning the race today, up 4.5%. So yeah, finally a little bit of a bid coming in with these metals. Like I've been saying this whole time, this is kind of what you would expect as the market slides, as uncertainty mounts, that people would kind of rotate into these risk-off assets.
Yeah.
That just hasn't manifested at all as they've just continued to slide alongside the market. But finally, a little more traditional action there.
They are.
Bitcoin was getting obliterated last I looked. Yeah, back at 66 now, testing those lows.
No, back to the points that we were talking about the other days, it does seem that the market is starting to get a little bit desensitized to the overall environment that we're kind of sitting in, especially with all these breaks, all these extensions on making a decision, because it feels like we just got a pop like a couple minutes ago too. That was fairly aggressive, and now we're sliding back down again. So it's just like, looking at all these asset classes like oil, some of the metals, crypto, we really are getting desensitized to a lot of these headlines.
Yeah, it's odd, and I'll tell you what too. I mean,
pops aren't holding.
We whenever this whole conflict finally ends, I mean, we are going to rip to the upside. It's crazy because, and I say that because you see all these little things like yesterday, right after the close, Trump tweeted truths just that he's putting a 10-day pause on Iranian strikes, I believe, or something to that end. And that they're going to revisit it on April 6th. That was all he said, which is not even necessarily a bullish headline. It's just we're gonna pause these strikes for 10 days. We're gonna kick them down the road. And I believe that is, what candle is that here? Yeah, that was this rip that we got right here on this candle. We move in like 10 minutes. We went from 65.35 all the way up to testing 6,600 on ES, and then immediately came back down as the market was like, wait, we don't care about this.
Yeah.
But the fact that we can move, 70 points in 10 minutes on barely any news, just one Truth Social post. It was really more like 2 minutes, if I'm being quite frank. It's like, imagine what happens when we actually get the headline that the war is over. If this is what we're seeing on these little nothing headlines,
yeah.
It's like, we're gonna get. It would be another move like this, but to the max. We could get legit. We could get 400 or 500 points in like a number of hours.
Yeah.
Whenever this finally ends. So I look forward to that. That'll be a fun day. Yes, Gus, I've gone EV. Yeah, I'm probably gonna be looking at an EV for my next vehicle as well. Whenever I decide to move on that, especially being here in the city, I don't drive very much. There's a lot of good charging infrastructure. Gas is incredibly expensive in the city. Just seems to make a lot of sense. My building just has free EV chargers.
EV chargers?
Yeah.
Oh, you said only 3?
No, free.
Free.
Yeah.
I thought you said they only have 3 EV chargers. Like, well, you might have to take turns sometimes.
No, yeah. Usually buildings will charge you like at least a little bit.
No, that's fire. That's amazing.
Yeah, there's just a whole bay of them.
Free gas at the apartment.
Exactly.
Let's go.
Literally.
That's fire.
We live in the future.
Slow drift down, longs down here aren't working. No, yeah, it's one of those things where whenever I do think we get that turnaround, I do think it's going to be pretty aggressive whenever we do get it. But interestingly enough, like these pops are getting sold into pretty immediately, which is interesting, something we haven't really seen in quite some time.
Yeah, but it's just like, at the same time, it's just like, how much can we continue to bleed?
No, yeah.
It's like I was saying yesterday, at a point, this must be priced in. I just don't know exactly when that point is or at what level. But it's like you take oil. My idea with oil has really been holding up.
Yeah.
On the how much higher can it really go sort of idea. It has not come down, and we are working towards those highs. I don't know. Maybe I'll be proven wrong into the weekend or at the open on Monday or something like that.
Man, what would need to come out for oil to break out even higher? I feel like some major news.
Exactly. It's like how much worse could the oil situation really get? It would have to be another country with large oil reserves gets involved in this.
Right.
Like it would have to be something to that end. Because
or boots on the ground.
Yeah. Maybe boots on the ground, but even then it's like the oil's not moving now.
Yeah.
So that doesn't change. Maybe we can acknowledge that it might go longer if we put boots on the ground, and perhaps that could push oil a little bit higher. But as far as like a decisive breakout move, I don't even know what kind of headline would be required. So we'll see. But again, I do say this as we've seen a crazy move up in oil over the last 3 days. So perhaps we're chasing those highs right now. So super bull then? LOL. Pretty much. That's pretty much what my idea. I just have no idea the time frame on this. Will the 800 point face ripper day that I'm talking about come next week or a year from now? I do not know. So you have to be conservative keeping that in mind. But whenever it does, I certainly want to make sure that I have a long bias and I'm ready to take full advantage of that. So kind of going into all my trades, keeping all that in mind. The old CEO of Fiat used to hate EVs. I think back then he had to build them to reach his EV quota.
I think the market of the vehicle market, the way that it seems like it's heading, it seems like it's getting down to a point where, man, if you're a car manufacturer, I think it's getting to a point where it's not going to matter too much about your opinion or thoughts on EV. I think there's going to be certain regulations that go into place where you're going to be forced to at least have some type of EV line sometime down the road to at least have you, or to at least give you the ability to produce gasoline-powered vehicles. So I think it's going to get to a point, man, there's probably a lot of tough opinions and pushback against EV sectors. Because again, if you're a car, especially a car enthusiast, if you're a car manufacturer, you're probably a car enthusiast or lean that way a little bit. Electric vehicles isn't something that you wanted to come to the industry. It pulls apart the car industry as we know it, as we've known it, since it's been around. So it'd be interesting to see how all these other players get interested or, get dialed into the EV space. I know we've seen Ford try to, lob us some of their EV vehicles. I know some other lines I was surprised by. But a lot of these, I mean, the EV Hummer was interesting. That's one I don't know if I can really mesh with. I'm sure the tech is good. I'm sure it looks good. I'm sure it's a powerful vehicle too. But man, an electric Hummer, I don't know if I can even say that in the same sentence.
Yeah, it is. I mean, I think it is more or less adapt or die time on EVs, sort of as you just alluded to. I think you're going to have something, but I think that I don't know. I think that a lot of these companies can benefit from the fact that there is, to my understanding, and somebody can correct me if I'm wrong, there is basically a EV charger that is like fairly universal, and then Teslas have their own thing.
Yeah.
And
okay,
so,
I didn't know. I didn't think about that actually.
Yeah, Teslas are doing like the Apple thing. They have like a proprietary plug.
All right, smart. I mean, they first to market. They're going to try and put a monopoly a little bit on it.
Yeah, but it just means that Tesla also, to a degree, has to build out a lot of their own charging infrastructure.
Makes sense.
While a lot of these other companies kind of wait for that charging infrastructure to develop and then try to attack things when people, because, I know that was always a concern that people had when Teslas were first rolling out and EVs were first rolling out in general, is the charging infrastructure just wasn't quite there.
Yeah.
Now it has caught up a lot. You're pretty much, if you're in any, suburban area close to a major city or in a major city, which is, I don't know, I would venture to guess 70% of the United States population, something like that.
Yeah.
There's EV charging infrastructure all over the place. But I think that you can let some of those concerns be mitigated as the infrastructure catches up, and then start really pushing out your EVs just to give consumers one less concern.
It must have been so nice for Elon to be the first mover to that market and then be able to have the deep pockets to be able to produce the infrastructure you need. Like all the EVs, being able to have enough in different locations to be able to support your own charger. Like what an advantage to be able to have. Like he was kind of the right person to at least pave the way a little bit because he had the means to do so.
And the big drawback and something that is still catching up is the time that it takes. It does take, if you pull up and you need to fully charge your Tesla to supercharger, it is still like a 20-30 minute sort of situation.
For about a full charge?
Yeah, if you're going from like, if you're real low, like 5%.
That can feel a little bit like an inconvenience, huh? But I'm sure people that own EVs probably have a workaround to where they don't even think about it as much. But with somebody that doesn't own one, I mean, just thinking about staying at the gas station for 20, 30 minutes, I mean, doesn't sound very
you
pleasant.
typically have, you typically just, find something in your day-to-day workflow where you can just charge it passively while you're doing something else. Like my buddy that has a Tesla, he has chargers at his gym. So it's just, he plugs it in every day at the gym, goes and works out, comes back, it's charged. So that's one element of it, but it is still problematic if you ever want to drive like distance. Like if you're on a road trip where time already matters, you're trying to do a drive that's 8 hours if you were to never stop, and then you have to stop 2 times throughout that drive and add 30 minutes each time. It's like that does kind of start to add up. So, but I think that all of that is coming along. I think 10 years from now, it's going to take 5 minutes to charge one.
Completely agreed.
Factor.
Completely agreed.
Because just charging infrastructure, not even just with electric vehicles, but just in general, has come so far. I can't believe how fast my phone charges.
Yeah.
Right. It's like insane.
Yeah.
I mean, I plug it in out here and it like pops up and it'll just straight up say, 30 minutes to 100%.
Yeah.
It's like, what? It's impossibly fast.
Agreed.
I've taken the Lightning on road trips. High speed charging everywhere. One was 350 kilowatt. Woo. No one can compete against Chinese EVs. Yes, that's true, and that's why we have to have regulations here to keep the Chinese EVs out, because as soon as those start streaming in, that would really, really disrupt the domestic market here. They're able to get those things done for so cheap, and they are so nice. It's true. I get 350 models on my Model Y. It's a no-brainer. Yeah, I concur. And a Tesla will be very high on my list for my next vehicle as well. Oh, Tesla charger is now standard. Oh, there you go. I guess they did the same thing as Apple there too. Apple moving to USB-Cs. Tesla moving over to the standard chargers. There you go. Tesla chargers. No, that's North American standard charger. I see. EV is over. Acura has abandoned EV market. Volkswagen EV in tons of trouble. Yeah, and I know that there are people who, and it's just sort of like a too much too soon thing for a lot of these companies, and not having the not having the deep pockets that we're talking about to maybe eat a loss in the short term on these things as well. It's much easier for Ford to do.
I mean,
say Volkswagen.
Elon is in such a great position. I mean, this man was able to overpay for Twitter by hundreds of millions of dollars, you know what I mean? So, I mean, he's in such a position to be able to just purchase whatever opportunity there is and then work on it as time goes by. So,
BYD already has 5-minute charging. Yeah, there you go. Yeah, we could look at some of these Chinese EV companies. I know Li Auto is one of them. There's
was it NIO? Was NIO?
I think they're public. I do think that is a thing.
Maybe so.
NIO is a. Are they Chinese? I'm actually not sure. I guess they are. Yeah. Silly. I'm being silly. NIO is Chinese, yes. Then is I don't think BYD is publicly traded.
Those electric Volvos have been looking pretty nice. Volvo on the come up over the last decade. Good Lord, Volvos were not the move in 2005, right? I know I was a kid, but I knew a little bit of ball though. I knew ball, but those Volvos have been on the come up. They're pretty nice.
Yeah, Volvo has
That's an underdog for sure.
Yeah, Volvo has the like international purchase thing, which I think
do they have
is
some
really
incentives?
attractive, where you can if you want, they have like a whole package where if you buy a new Volvo, they will give you tickets for you and one person to fly to Sweden, and then they'll put you up for a week there, and you drive the Volvo around Sweden and do whatever you want.
Gosh, they're begging for sales.
Yeah,
they're begging for sales.
Yeah,
No,
and
I'm just
then
kidding.
when you're done with your vacation, you come and drop it back off, and they ship you that vehicle
Oh, that's fire though.
over to the United States.
Yeah. You do a little honeymoon in like Sweden. If anybody wants to do their honeymoon and then get a brand new Volvo for their
just
wedding.
Good way to work it in. And if you're buying a
Newlyweds.
car and you have this giant expense anyway, it's like it makes sense. Although I don't know where the stipulations are there. Like, I guess you can probably finance and still do that, but like, how much do you have to put down to make that happen? Do you have to be buying all cash? I don't know.
Limited time offer.
But it's enticing. It's enticing to me. I mean, I've thought about it.
Yeah, I was like, you know the details about that. Yeah, I was like, actually, let me ask you, how was the trip, guys?
Tesla pivoting robotaxi. Yeah, the robotaxis. And I think that's sort of the next level for all of these companies. And Google has Waymo as well. Which
I was literally just gonna say, I've been seeing some more Waymos out here in Chicago.
Yeah.
Been seeing some,
do we have them here?
I saw one right over here on the crosswalk right over here, right outside the building yesterday. I think it was. Yeah.
Oh, how about that? Yeah, I've been wanting to try one of these out. It seems like a fun thing. But yeah, that's a sort of its own whole thing that's just nestled within Google. It isn't necessarily
so many cameras. It still looks so. Yeah, it still looks very. I mean, I don't even know how to describe it.
They do look funny. It's almost like it's like Wall-E or something.
Yeah, it's I don't even know how. I don't know how to describe those vehicles, but cameras all over them, every angle. Let's see. NASDAQ is a level for 0 DTE long if willing to take the risk. Yeah, it's a tough one for me. I was looking at some longs as well, around 23,450. Took some, but now I have no more levels to the downside, so I might be a little bit hands off. But I might feel FOMO by the end of the day if we do get that face ripper, because it is Friday, and we haven't had any type of pop yet over the last few days, and we're not. The market has been known to see those last hour rippers, especially whenever we're putting in lows like we've seen, sustained lows.
Yes.
So I mean, I'm hoping we do get it though.
This is selling off incredibly hard as we sit here looking at it. Pulling back a little bit, I guess. But yeah, testing 23,400 might get a confirmed break through that here in the next matter of seconds. Really, it looks like we are pushing.
Yeah, no, we are.
My God, market's crash. Well put.
On the Volvo, we had to pay complete prior to going to Sweden. We
did it.
Oh, no way.
Oh,
I love that.
That's sad. That's awesome.
Yeah.
But yeah, okay. So yeah, you had to pay in full. That was sort of my question. That makes sense. It's only only if you got the cash money laying around they're rolling out the red carpet for you. That seems sensible to me. Because yeah, I was gonna say, what if you just like, well, I guess if you default, you're in trouble anyway. Never mind.
Yeah. So what happens the last hour today? There's 0% chance anyone wants to hold into the weekend. Yeah, we will we will see what type of order flow we see coming in the last hour, because I mean the overall sentiment, right? I mean of how the market's feeling right now. I completely on board with you there.
Yeah,
but once again, once it gets a little bit tricky like this, that's where there are some risk reward opportunities that are a little bit more favorable at the times to where you don't really want to be sitting long. But nonetheless, the market could gap down into the week. I mean, we don't know what could happen. But if you're able to structure a position where the risk is managed, things can get a little dicey down here.
Selling will not stop. Yikes. Yeah, this is insanity. We're down like 20 points just since I opened this chart in NQ 3 minutes ago.
No, and I mean, right before we had hopped on, we had a pop to the upside. That was about 450. That was about 75 point pop in like 20 seconds. And then we give it all back and then some to the downside here. So now we're trading at the lows for the day, 23,390. There's really not much to say about the market right now. It's more so just what is the market looking to accomplish right now? I mean, whenever we're sitting at these lows here and now testing lows from last year, September? So last September, about 6 months ago now, 7 months ago?
130 reversal incoming, says the Brooklyn trader. All right. You heard it here first, guys. 130, we're all buying. We can do this. There's enough of us that we can make this happen. 1:30. Oh, I guess Brooklyn trader, you're talking 1:30 Eastern. I'm going to use my deductive reasoning skills there and assume that you are on on Eastern time.
What's Nvidia looking like right now?
Yeah, we can have a look at the semis.
Yeah, and then curious about what is VIX looking like. I mean, I got a lot of questions now.
Yeah, this is we're getting
the market is getting a little aggressive as we speak.
Yeah, VIX climbing. We're back over 30 there.
Back over 30 VIX. Volatility is expanding. One thing I had done today was looking at some of the QQQ calls. We'll see what we can do over here. So it was really tough to even get on a little bit of long delta, but with such an aggressive slide, I at least wanted to do that with some of the out of the money calls. At the time, they were out of the money. That's how aggressive the market has been today. So we were looking at selling the 565 QQQ puts. We bought the 560s, $5 wide. We collected about $1.84 on it. So with that being said, I mean, we were looking at other names as well, right? I mean, there's other names across the board that look very attractive to get some long delta in. But heading into the weekend, I don't want to overexpose myself a little bit. But what I did do was I'm dabbling by getting on some long delta in QQQ. 21 days left to expiration, a little bit shorter time frame. And then looking to manage this one at least by next week. Just looking for a short-term pop if we can get it. Just because, again, since I wasn't long prior to this, now it's looking a little bit more attractive. So as long as we give ourselves a little bit of time, and we can catch a little bit of a relief pop, let that theta cook.
I just fired on a cheap 0DTE QQQ. Why not?
There we go.
Let's have some fun.
There we go.
Let's have some fun. This has entered the portfolio. Yeah, very cheap. We'll cut this if it gets down 20%, but why not? You know, sometimes you just got to put on a glove and try to catch that freaking knife, man.
We're sitting at the lows.
Just catch it by the handle. I've been saying this.
You don't gotta.
You can catch a falling knife. You must just catch it by the handle. It's dangerous.
Or put on a nice little sturdy glove. Nice little glove.
Yeah, we'll see. But yeah, if these lows come in, I mean, it's just like I totally do agree with the thesis outlined by Superstar here. Why would anyone buy? Why would anyone buy into weekend uncertainty? With all this headline risk, we could easily open much lower on Monday. There really is no sense in buying right now. But you know, somebody's got to be a contrarian here. I'll do it.
All I'm saying is I would rather get on a little bit of long delta now than last week. And we weren't saying all this last week, guys. Chat, we weren't saying this last Friday, and we gapped down last Friday and sold off even more. But nonetheless, it does not feel comfortable to hold any long delta into the weekend. Let's definitely manage for that headline risk because we haven't gotten any conclusions. Just only extensions.
SPX under the 4925 taco anchored VWAP. I see the Liberation Day VWAP.
Liberation Day VWAP.
I guess post Liberation Day VWAP.
What's that high options volume watch is looking like right now?
Let's have a look.
Because I'm curious what SanDisk is doing, even maybe Micron. I'm curious what else has been sticking out to you, Jared? What have you been looking at, Jared? I know absolutely you're looking at that SPX.
Am I blind
right now?
It's not right here somewhere.
That high options volume.
Yeah.
Let's see.
Category is that it? Am I stupid?
Might be liquidity. There we go.
Yeah, I mean, pretty much the usual suspects here. HYG.
The Brooklyn keeps talking about that 130 reversal. We'll see what we get there.
130 reversal. I'm in. I'm in for the 130 reversal. Up 3%. Let's go. Keep it coming. What is EEM? Also, Mara is an interesting name on there. Oh, emerging. I see.
EEM.
Beaten down, and then Mara is like one of the only individual names I see popping on there.
Wow, what is that? Is that the daily?
These are 10 minutes.
What is it, 10?
Yeah, we can zoom out a little bit. I'll go hours. Gross. Fun channels though. If you're a day trading,
yeah.
Good vehicle for it.
If you were swing trading Mara, good lord, you'd probably pull your hair out.
No kidding.
Man.
Yeah, we can zoom out a little bit. I think things have been pretty bleak for Mara. I mean, it's a crypto mining company, so you'd expect similar action to what we've seen with MicroStrategy and everything else as Bitcoin has slid. Yeah. Down. I'm not touching that. Up 6%. Let's go.
There we go.
Keep it going. 565 strike. Theta. More theta by the minute on these 0 days. See what we get. But yeah, I don't know. Do seem to be finding at least an ounce of stability there. Go more granular here again. Green
Selling.
candle.
Yeah, green
To the
candle.
moon. Trump tweet right now. Fix it.
Selling puts out into May. Keep nibbling on the bottom fish. Yeah, we'll see what we get. I'm gonna get in just a little bit of long delta on for now, and then maybe reconsider on what we'll do. We'll do next week on it.
And Microsoft is almost at 350. I'm kind of waiting for that 350 level on Microsoft. I'm definitely going to get long Microsoft here sometime.
Because it does kind of feel like we're getting to the point where even if we do continue to slide lower, I mean, we've sold off so much so far. I mean, yesterday we had almost like a 2% down day. Today we're almost down. I think we're down over 1% on the overall market. So, I mean, even if we continue to slide into the next few weeks, that would be very aggressive for us to not have any relief pops like at all into the next couple weeks, given where we've slid from so far. Now, I'm not saying it can't happen. It can absolutely happen. But then you can kind of weigh the probabilities and the risk reward based off of that. But I don't know, these last 3 days have been very aggressive, even just directionally speaking, in the range on those days.
Yeah, and it's like you compare Microsoft to something like a Google. It's like Google is so much closer to its high still than Microsoft. Like there could still be more downside there, but this slide on Microsoft is just obscene. I know Meta is in a similar boat.
And I mean,
this is
I don't even know, or I don't even think that we're in a market where if we recover and bounce back, that we're going to be seeing all-time highs right away. I don't even know if we're in a market like that, but I just don't think we won't always be at the lows, even though it feels like it because it's so aggressive and so heavy whenever it is doing that. But I mean, I don't even know. I'm not saying we see all-time highs right away whenever we do get that pivot or a little bit of a relief rally, but nonetheless, I'm looking forward to the expanded volatility we're going to be seeing, even once we reverse course a little bit here.
Yeah. This Meta slide is so nutty.
Oh no, that's crazy. What is why is
they had a lawsuit? They lost a lawsuit yesterday for $400 million, but it's like, we're talking about $1 trillion company.
Yeah. I know the
$1 loss. It's like, I don't know. It doesn't frustrate me.
So this is Meta's fault.
Yeah, no FPH today, James. Sorry to disappoint. We're here to entertain though. Chris had a commitment. We're doing our best.
So this is Meta's fault, is what you're saying.
We won't see SPX to 7,000 this year. I think we could see SPX to 7,000 this year if we suddenly get the headline that we need. I mean, I seriously think that if we just get a like true war is over, we're out, this is done headline, nobody likes this thing. I think we're back at 6,800 in like a day. And then all of a sudden we could start trying to make those legs up towards 7K, but it would take that headline though. As this continues to drag, I do think 7,000 becomes more and more out of the equation. Still up 5 on these bad boys. Need more.
But yeah, we need 2 McChickens. Don't be selfish.
Seems to be some.
It's only 1.5.
So we'll see.
$1 trillion company until it's no longer $1 trillion. Yeah. I'll come back next week.
It's true.
We'll see if we're still sitting at $1 trillion.
In any case, I mean, if it's a $500 billion company, $400 million is still a drop in the bucket. Like it's infinitesimal.
Oh, was that the comparison that we were doing?
Yeah.
Oh, yeah.
I was just saying, the lawsuit they lost was for $400 million. It's like that.
Oh, yeah, but that's pocket
chump
change. Yeah.
They announced layoffs yesterday as well.
Layoffs aren't always kidding me? They probably have reserves. Their reserves for their goldfish snacks is probably more than $400 million.
I'm being told Iranian hackers got into Kash Patel's personal email. I did see this earlier today. I didn't think about bringing that up, but I've seen all kinds of pictures going up on Twitter of Kash Patel doing various things. Let the countdown timer on his resignation begin. Yeah, inclined to agree. Bad look when the director of the FBI has his email compromised.
The director of the FBI has had a terrible look for a long time now.
It's true.
And you're very sus, my boy. You're very sus.
It's true.
You're very suspect.
Yeah, and Comey before is sus too. It's that position. I can be fully confident in that seat.
I don't want that position. And if you take that position, you're communicating a lot of other things to a lot of people.
It's not about the lawsuit. It's about the future implications for regulations on social media. It is now classified as a risk to mental health. Think tobacco. Yes. I understand the implications here. And I honestly think in a more esoteric, opinionated context, I agree with this lawsuit. I think social media addiction is a prevalent issue. I was saying to Arrow right after we got off air yesterday, like we just barely missed like growing up in this hyper social media era. Like, I mean, the social media has kind of really began to emerge when I was like 11 or 12, but there wasn't this societal pressure associated with them for like another 4 or 5 years after that. Like it was still very casual, just throw up, whatever you're doing, and it was this chill thing you do with your friends. But now it's like these kids come up, and from the age of like 8, it's like there's this massive societal pressure on social media, and everybody's watching your every move. Cyberbullying, I'm sure, is at all-time highs. So I do think that there are problems.
Is cyberbullying at all-time highs?
Oh, it's got to be.
Is it?
Got to be.
For sure.
I would imagine.
For sure. No, it is interesting. I mean, if I was just getting out of college here, I'd probably be scrolling while we were live over here.
Yeah. No, yeah, exactly.
No, but yeah, interestingly, I am very happy that tech really ramped itself up during the era that it did for us in terms of our childhood.
But obviously, yeah, negative implications for Meta as that news starts to come through, and as people begin to try to price in what the future could look like in a world where there's this addiction outlook on social media. Court said Meta was legally responsible, opening the door for lawsuits for users who claim social media had detrimental effects on their mental health. Not a one and done court case. I see. Okay, well, yeah, I guess that makes sense. They've set a precedent now, so sure, yeah, I see that. I do love all the people that come out of the woodwork saying "I told you so" when they called the top, but have been calling the top since last summer. That's true.
that was Bitcoin as well.
Yeah, no kidding. Yeah. Bitcoin especially. Yeah, I basically did that with Palantir. This whole time I was like, Palantir is overvalued. This is stupid. This is stupid. You should short Palantir. And then I got short Palantir right here, traded this down, and I was like, I am a genius. And then it's really just at levels higher than when I first started yammering about Palantir. You gotta take the wins where you can find them.
Yeah, and traders that start after 08. I know a lot of us hasn't seen different types of market cycles. I do know in 2020, I was very heavily shorting a lot of small cap stocks, and small cap space was completely different. Like the volume that you would get traded on these small cap companies that released some type of news that day was insane. Like you'd get 200, 300 million shares traded on them just regularly, so many small caps. And then we stopped printing money in 2020. I think it was March of 2020. We stopped printing money. And that completely tore up that entire niche in the market. And that gave me my first taste of the medicine and what it really felt like to have like a market cycle change on you and it affect a niche in the market that you didn't know what it would affect. And it affected everybody that started, I think, after 08. So it's like, how could you have known? You have no data on that. So I definitely get the different market environments shifting. Because the small cap space was a lot more fun in my opinion before we stopped printing money. And then once we started lifting interest rates, that's really where I got my first taste for these decisions. So you didn't have to learn to use a slider roll. I only have 2 channels in the VHF.
All right, we're getting burnt. I'm getting out of this thing. We're going to 0. It's all over.
What's going on over there?
Small loss. Just taking off that 0 day. No reason to have that excess risk in addition to all of the freaking stupid long bias that I have on right now. It'll happen. Trump will save me. Give me the truth. No futures power today, Daniel. Apologies. Chris had a prior commitment. Not a prior commitment. A commitment pop-up, shall we say. A spontaneous commitment, if you will. But we are here to entertain. We can look at some futures. Let's do futures power hour. What do we got? We already had a look at the E-minis. Bad. Let's have a look at oil. Good. Oil good. Metals are also doing pretty well today. Although actually, getting a considerable slide on the metals in the last couple of hours here. Interesting spot happening there. What do we got? Bonds. Actually logging a good day. We were surprised by how poorly bonds were doing yesterday. Moving up a little bit.
Oh yeah. I mean, with that being said, we can jump over here to the TradingView platform. We got a couple things over here.
Let's do it. Let's have a look.
Grab on. This futures market has been really forcing you to be very decisive with some of the decisions that you make because we've been super volatile. But we can go ahead and jump over to the TradingView platform here, and we'll get into it.
Yeah, we can go TradingView. Well, yeah, that's futures. That's all. That's just futures. We talk on TradingView.
Yeah, for the most part, yeah. For the most part. And we'll do a little bit of catch up on crypto too. I will say, I do think the oil trade has gotten even more interesting to me, at least. Like, I know the overall market is sliding, but the short trade for oil, whenever it does come, I think is going to be a nice one to at least attempt a few times. So even though the market is sliding, oil being at the levels that they're at, it's probably not going to be sitting at those levels within the next few months or whenever we get a little bit more of a resolution on these issues
I'm still
with the war.
USO too, Ranch. I feel it. Just, yeah. It's just like, this USO position, it sucks. I mean, it's pain right now. Don't get me wrong. But it's just whenever the move finally comes through, any one of these contracts could fund the other two. Is sort of the outlook that I have here. Even if I wind up having to eat some sort of gross loss on this 85 put, I still have the 75s and the 65s here to take advantage of the gamma whenever it comes through. And if that move swings through, it's no telling how high these things could go. We could just all of a sudden, this doesn't do justice to the picture. We could suddenly just collapse back to 90 or something in a day or a week, whenever things seem to be stabilizing here, and then all of a sudden we're laughing to the bank a little bit more.
Yeah, give them some time, because once again, these oil prices are wild. It's really going to be a matter of being patient, I think, if you want to attack this one here.
After so many saves, is Trump losing the ability to save the markets? Love the show. Oh, thank you, Colin.
And I think it depends on what the headline is.
I think so too. Well, it's just the headline has to be real. It's like the market is getting tired of these little. We're
getting desensitized.
Exactly. Yeah.
Of course, we hear you the first time, then second time we're going to get a reaction, and then it's like after the fourth, fifth, sixth time on the same headline, it's like, all right, what are we doing here?
Yeah.
Now we're stalling. We're buying time now.
So it becomes a boy who cried wolf situation where it's like the trust begins to wane. But whenever the real headline does come through, obviously that will see a substantiated move as a result of that. It just has to be real. The doubts are growing with the tweets and the comments in press conferences and all that good stuff.
Yeah, 100%.
Affirm though. Hey. One of the few shorts that I have here are doing well. As is Netflix. Netflix actually.
We should have put the kids' college tuition on Affirm. Honestly,
no kidding.
We should have put the house, the mortgage on that one.
Short Affirm with your kids 529. Yeah. Thank me later. Just the collapse on Affirm is imminent. I can feel it.
Justified. What about some of these Chinese names? What is Baba? Baba been up to?
Worth a look. Baba. Not really so great. They've actually had some fairly bullish news emerging recently, but the market doesn't seem to care. I know JD is the other big one. See, JD, this is what you call a tactical collapse. Okay, JD says, okay, it's March, guys. We can see that in early 2026 the market is going to crash. So what we're going to do is go ahead and crash right now so that we're already down there, and then while everybody else is hurting, we'll be going up. All right, this is serious peak business management right here out of JD.
Peak business management, JD.
There's trading for you. Let's dive in.
There we go. No, we did a little bit on NASDAQ today. I mean, to be completely honest, if we zoom out a little bit here, I didn't even expect us to get down to these levels. I mean, I know last week or earlier this week, we were looking at how we started to trade above the Friday close a little bit, and then got rejected from the Friday close and went right back down to where we opened up Sunday. We got some spikes above Sunday's open a couple times, but we just weren't able to hold above these levels. And we started using Sunday's open as a little bit of a form of resistance, it seemed to be at one point. And then with that being said, we took out some other swing lows from months ago. So nonetheless, boy, what a market what a market we've seen. I mean, just didn't even expect the market to get down to these levels. But we did take a couple trades. If I can let this load real quick.
I managed to sneak a winner or two in there, it looks like.
We tried to. We got long down here, and this sweep of the low almost took me out. But we got stopped out a few contracts there, and then we loaded a couple more in. And then we scaled out over here towards these highs. I took off one here. I wanted to hold the other one for these highs. But once we started getting rejected here, I just once again didn't want to hold into the pullback if we got the pullback. And I didn't want to wait to hold and then sell into the new high. So I just decided to get out both those there. And then just because the market was so volatile and it just made you cross your mind, like, could this be a day where we go lower one of those? And it's like, if the market continues to rip without me, will I be satisfied? Will I be okay? And I think we were satisfied if the market continued to leave us. So that's what we did over there towards the value area low. The market came back over here just right before we were getting on. We got long a couple more contracts, and then we sold one into the rip up here. And then we got stopped out near these lows on the last contract. But that's pretty much what we had for the day. And then this is when we got that 20-second 75-point rip to the upside that we just couldn't hold. So even seeing moves like this, not able to sustain itself to the upside, was really telling just on how weak this market was. So seeing the market fail so many times in this level just made me not even want to get long again at this value area low, just because, we kept struggling today. So maybe we won't get the rip all the way back to the midday highs or near wherever the market opened up at. So once we kind of gave this level away, it was kind of hands off from there. And we've sold off so much this week. I don't even have any other levels to the downside. So it's just going to be a week of being patient. But that's really all there is to say. I mean, I didn't think we'd be talking about the day lows with a couple hours left to market open right now. I mean, we're sitting at the day's lows as of now. But that's all we're looking to do over here in NASDAQ.
The sell-off is crazy town. The bulls just can't get anything going here. And yeah, it goes back to what Superstar was saying earlier. It's just what reason is there to buy? And
no, yeah.
At the end of the day on a Friday ahead of a weekend that could bring any sort of headlines. I suppose the antithesis to that is that the headlines could be good and you'd like to get out ahead of that a little bit. But who's abundantly confident that we're going to get good headlines over the weekend right now? It'd be hard to find somebody.
No, it would. It really would.
Daniel, in response to the question about Dow Inc., I'm looking at the chart over here. This is interesting, actually. I hadn't had a look at this chart in a while. It's been long on some really good weeks here since the end of December, and I don't know. It depends how long dated your time horizon is here with your long delta, because this does seem to be starting to get a little overextended in like the very short term. I think we could get another one of these little dives before we move back to higher highs. But that said, I don't see really what's capping this. I mean, we're highs are much higher, pretty much, double, I guess, up 67% from this level we're at right now to chase down those highs. So if you have months and months, I don't see any reason to move out of that long position with the momentum that this thing has right now. If they can move like this against the market that we're in right now, what's stopping it? Sort of becomes my line of logic there. So I think this looks fine, but yeah, maybe, I don't know, next couple weeks, perhaps it could breathe for a second before it makes higher highs. Stairs up, elevator down situation. 49 days. So that's
about a month and a half.
That's like mid-May, I guess.
Yeah, about mid-May.
Yeah, I think I don't see any reason this couldn't get a little bit higher before mid-May. I mean, this 42 level seems to be something of resistance, and then you're kind of looking at 45 after that. But I don't know. If you have a few and you're comfortable with your profits, it might be time to start rolling out of those one by one. Get some profits secured and just leave a few as a runner. This is a lot of momentum, and like I said, against the market environment we've been seeing, if you're getting these kind of gains out of it, I don't know what could really slow it down. Because I mean, think about like I've been saying this whole time. I mean, what if in the next 49 days we get good headlines? I mean, what does this thing look like then if it's had this type of momentum against the bearish environment we've been in?
It hurts so good. It hurts so good.
Sylvie, I think he's talking about. Oh no, ETH. Yeah, I have some ETH on as well.
That's how it feels in just the overall market, because I know it doesn't feel great to slide down, but don't worry, guys, we're getting some increased premiums, so it'll be worth it once we rally back. It hurts good right now.
Yeah,
it hurts good.
Yeah, exactly. Just gotta be able to tolerate the pain. It's not about how hard you can hit; it's about how hard you can get hit and get back up. I appreciate it. Yeah, my only green in the portfolio, so I was curious. Yeah, especially if it's the only green in the portfolio. Yeah, I would say if you have a few, it might be wise to start to take some profits off. But I don't think it would hurt to hold this a little longer either. This is fairly attractive. Usually when something is moving like this, I would say it's starting to get scary to me. But with no real cap on these levels up all the way to like 50 or 60, and this momentum against a bear market, I don't see any reason to. What do they say? Don't look a gift horse in the mouth. There you go.
Yeah.
I've got my horse to water. Now time for the easy part.
He said levels to the downside are monthly point of controls from last year. Orange. I know when we were looking back on the chart as well, I was like, I can't believe we got to go back to last year to find any levels of even value or any previous levels. It's like we haven't even been down to these levels in quite some time. But I think it's also a testament to how we really stalled at the highs on these markets and on these indices for a while. Which I think is a little bit of an understatement, or is going as a little bit of an understatement. And now we've just been finally holding beneath those levels. But yeah, no, crazy. A lot of levels from the past 6 to 12 months that I think we're going to need to take to at least use as a reference point, or just be patient to use fresher for lack of a better term, of levels to use once we get a little bit of a relief pop in the indices. But if we continue to the downside, most definitely got to look back into the 6 to 12 months range.
Well, yeah, and it's like, we've become so accustomed to just only up forever. It's like it's easy to feel like the sky is falling, but the reality is that we're still 10% from all-time highs right now. So it's like, if you really zoom out, it's like I don't think it's time to start using the word crash yet. It's just an annoying drawdown at this time. We would need much lower lows before we start talking about that. Though the other side of that is that if it were a crash, it would start like this. So I'm not putting that out of the equation either. But yeah, we're still ultimately 10% from all-time highs.
Jerry says, bro, what is this price action? Then I go and look at the charts. The worst, choppiest price action I've ever seen in the last 10 minutes. That's funny. The price just stopped moving pretty much. Ground invasion probably happens right at the close. Haha, Trump always tries things after market closes Friday. Yeah, I mean, we've seen that quite a few, I think 2 or 3 times heading into a weekend where we've gotten some type of headline from Trump as the markets close, of course, while we all lack access to the market. But yeah, that headline risk as market close. Overnight risk is real right now.
Yeah, I mean, maybe I ought to start trying the long Monday, Tuesday, short Wednesday through Friday strategy.
Might have to.
And see how long that continues working for it, because that would have been mighty profitable over the last few weeks.
Can't wait to put on an Iron Condor and SPX Monday morning. You think we're going to get some range-bound markets next week? I mean, after all this volatility, I think we need to pause a little bit. I think we need to calm down. And maybe the same with oil. I mean, obviously, these have such an inverse correlation with each other right now, but I don't hate the idea of a little bit of a slowdown, Ranch. 20 to 30% from highs are also areas to monitor. We'll keep an eye on all of it.
Be at those areas before too long at this pace.
We'll keep an eye on it all.
Pretty uncontrolled.
I mean, less than 7 days ago, I think it was Monday, we had the 1,000-point ripper to the upside within like 5 minutes. So we can be trading at 23,000, then we can be trading at 24,000 the next hour.
Yeah, for real. Yeah. It just takes, it's all, yeah, the market moves on headlines only, and none of the headlines are real. So it makes it a tough environment to get involved with. SPX has been in a 1-point range for 20
Yeah, no, I'm looking at it right now.
Yeah, this is crazy.
Certain behaviors happen in the market where you can only just look at it and kind of laugh or chuckle a little bit. It's like getting top tick out of a trade or bottom tick. Like there's certain things that happen where you just gotta laugh.
Oh yeah.
It's just hilariously funny at this point. There's certain things. Errol, you need to switch to electric. Was this about the EV conversation?
It might be.
Forgot to press enter. Forgot to press enter on the keyboard when we were talking about it. But no, I mean, if it were to go between like a toss up with Tesla and Rivian, I'd always be kind of in the home of Tesla. But I don't know, Rivian has been kind of intriguing. Well, just to see what side gets tested and play it from there. Yeah, we'll see what we get over here.
I think I'll still be priced out of Rivian whenever I'm looking for a vehicle next. But I don't know. Now that I'm here, I mean, I've driven like 6,000 miles or something in the last 15 months. I don't hardly drive at all.
Bro, honestly,
let's put some life on my car.
Honestly, I don't even need a vehicle. Just give me one of those one wheels. Those guys are flying like 75 miles an hour on the interstate. No joke. I see them all the time out here in Chicago too. Just let me get them one wheel. I'm sure those one wheels can't be going more for more than what, 15, 20 grand. I don't know. They'd be going kind of fast. I don't know what the price range might be for some of those.
They are pricey, but I don't even think it's that much.
Okay.
I think that's like,
hey, just give me a one wheel.
6,000.
Let me get a Tesla Rivian one wheel. We're good.
Chase has a boosted board. He really likes that. It's like,
does he like it?
One of the electric skateboards. But it doesn't go that fast. But also like those one wheels that go 70 miles an hour. It's like that's just stupid. Like you could not possibly ever need to go that fast, and it cannot be safe.
Yeah.
It's like I mean it's like a whole level even beyond a motorcycle. At least a motorcycle, you got handlebars to and you can kind of lay a motorcycle down in a sort of safe way. If you have to lock up one wheel and you're going 70, you're cooked.
I mean, in the same way, I've seen somebody on the highway with the electric scooter. I mean, one little bump, and I'm just like, these put motorcycle risk to shame. I mean, there is no motorcycle risk when you look how these guys are moving on the interstate.
Yeah, you get one pebble.
An Aptera? What's an Aptera? Are you familiar? Is that a vehicle brand?
Aptera? I don't know.
Aptera?
I'm not familiar.
Aptera sounds like a 4Runner.
One wheels. They're telling me in my ear here. One wheels range $750 to $2,900.
Okay. Yeah, those one wheels are no joke. I'm surprised there's such a demand and such a market for it. I just can't believe so many people actually have the audacity to actually want to buy one and like go 60, 70 miles an hour. Like I can't believe there's such a market for that many people that's like down. So
Not real. Not a replay, Rhett. We're real. We're live. We're live right now. We're just running a full hour.
Have you seen these markets? Yeah, no. No. You ride a hoverboard. I'm still on the ripstick, guys, from 2008. I'm still on the ripstick.
The hoverboards seem like an economical little thing. You know, they can go 12, 15 miles an hour. Yeah. Get you around if you have one of the nice
I remember when those were first getting super popular. I think when I was in high school around 2015. Some friends had one. That's when those videos were going everywhere on social media with the hoverboards.
Yeah, yeah.
People falling off them.
We always had one like in my college house. I mean, all the way until I graduated.
Oh, yeah.
We had one around.
Yeah.
Right at, just around the house or out to get the mail, whatever, like little stuff like that.
Yeah.
Kind of get over some little bumps on those things.
No, you can. You can.
2 little wheels going at 90? 1 wheel. Oh, you're talking about the hoverboards? Yeah. Or the scooters? I don't know. Any of the above. It's all it's all crazy town. I know now they're making little electric bikes that go like 35 miles an hour, and you don't need a driver's license. You can just rip around the city on this little thing. But that's an electric motorcycle, bro. Like,
I know exactly what you're talking about.
At what point do we cross over? Yeah, I see them around all the time.
I know exactly what you're talking about. That's a motorcycle.
All over.
That's a motorcycle.
Yeah,
they're not slick.
For all intents and purposes,
that's a motorcycle.
That is a motorcycle.
Yeah. I used to want those little mini crotch rockets. You just see some people in the neighborhood riding those around.
Yeah.
Literally like
little donk. Yeah.
Literally on the little look like Donkey Kong on a little bike. Yeah. Based on this market, I have to trade my car in for one.
I'm still on Heelys. Don't get us started on Heelys. This market, I'm going to have to trade my car in for one. Hey, well, trade the car in. One wheel is $750 to $2,900. My sources tell me, so should be a little bit left on top of that. Trade your car in, $10K. Buy the most expensive one wheel you can get your hands on, $3K. You got seven YOLO longs.
Yeah.
Pray for the headline, and then you can rebuy your car. It's that simple.
Or if you ride a one wheel for a few weeks, there's no way somebody does not hit you while you're on your one wheel.
Oh, yeah.
So you just take that insurance check.
Oh, you're so right.
Exactly.
You're right.
And then you buy equities.
Move to like Washington, D.C. with your one wheel, and then just drive that thing around the Capitol and try to get hit by a black Escalade.
You don't even have to try.
You're set for life.
You don't even have to try. There's just no way you don't get hit if you're riding around on a one wheel.
It's true.
It's just still blowing my mind. Like the people on the streets riding one wheel, it just seems like it's the most craziest, intriguing thing, but like one of the most dangerous things I've literally ever seen. But
obviously not teaching physics in any education.
I single-handedly got Heelys banned from high school back in the day. For some reason, Jared, I believe that 100% from UT.
Sure.
And lastly, on the Heelys topic, I never forget, got the Heelys. I think I said it before. Got them at the mall, got some Heelys, and then my dad found me in the bathroom at like 2:30 a.m. in this literal like 4x4 square foot bathroom, trying to ride in a little circle. And he's like, "Why are the lights on? And why do I hear little wheels on the floor in the middle of the night?" I was so excited to try them on and play with them. But anyways, I didn't get them banned from high school, Jared. Right? My peers would have hated me.
They were just banned from our school from the jump.
Were they?
From inception. They were very quickly
they're like, we've seen these games before.
Yeah.
Get them out of here. They banned lanyards in middle school for us.
Lanyards?
That was probably one of the most interesting things that they banned.
People whipping them with you?
Probably.
Yeah.
We a lot of very questionable things.
We always had lanyards. The lanyard hanging out of your pocket was like a style choice.
It was a style choice. They thought it was gang affiliate. It landed in that category. They thought it would be like gang affiliation or whatever, but it really wasn't. Nobody like it was just a style. It was a thing. As you know, just hook it to your belt. It was like you thought you were cool.
Yeah.
Same era with the Nike socks and Vans with the cargo pants.
Like when you get your car and you gotta be swinging around your car keys all the time.
Exactly. You gotta let people know you have a car.
Yeah, exactly.
You got a car now.
You put the keys on the lanyard, put the keys in your pocket, let the lanyard hang out. I got keys in here.
Yeah. Bro, it's just so crazy. Even thinking back, being in high school, having a job, getting your first job, right? You were UPS.
Yeah.
Where I was at Sonic. But like being 15, 16, making $1 was like so cool. Like, I got to leave soccer practice 5 minutes early because I got to go clock in. Gotta go make this hot dog.
I gotta go make $10.25 an hour, packing some boxes.
Gotta go make these mozzarella sticks with the Blue Ocean. But no, anything else top of mind before we start to wrap for the week?
No, that's what I got. Got me wanting a Route 44 ocean water now.
Oh, I love me a Route 44 ocean water.
Yeah, I can't imagine how many grams of sugar are in that thing.
We don't ask those questions.
Yeah.
We don't ask those questions. Anyways, everybody be careful on your one wheels out there.
I love my one wheel. They're really fun. They are super dangerous. You have to use them. Use it as a travel device. Yeah, I'm sure if you got the hang of it, it'd be a fun little thing to spin around.
Yeah.
It's just when you start to get up to those top speeds, it's like if you got to lock them up or if somebody pulls out in front of you, you're just...
Yeah, so I look out the window. I people watch a lot, and I'll look out the window, and the amount of times I see vehicles book it down the road that I'm on, and I'm like, holy moly, like these people just crossed a crosswalk right there and they're hitting 80 around the corner. Like I can't imagine if somebody was coming around with their one wheel. So I think being in such a more digested city with more people in the city, the parent, like, that's dangerous is coming out over there. Like, there was a kid walking that crosswalk 2 seconds ago. What are you doing? Driving around 30 over the speed limit right now. But anyways, that's going to be it on my end. All good on yours? Yeah, cool. Sergio, Ranch, Breadman, Grumpy Mike, Darker, Robert, everybody else, thanks for taking the time to hang out with us. Be sure to manage those positions. We'll see what we get back here on Monday, but be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
This is Jimmy. He's 55 years old, married with 3 kids and 3 grandkids, and he's been investing ever since he graduated from Central Michigan University, Fire Up Chips, over 30 years ago. And given how strong the market has been these past 3 decades, he's done really well for himself. In fact, his retirement portfolio just crossed over the $1 million mark. But he's stuck, earning the same old 7 to 10% annual gains from the market each year, and he's at the mercy of market volatility. With hopefully only 5 more years to work before he retires, Jimmy wants more control. He wants to take hold of his future and his returns. Well, my name is Jim Schultz. I'm a finance PhD, and I've devoted my entire professional career to understanding the markets, starting as a professor in academia, where I taught undergraduate and MBA classes, and also did my academic research solely focused on the markets. I've since been a practitioner in the markets, actively trading since 2007. For the purposes of this video, I'm going to be Jimmy. So I've had a great run in the market over these few decades, but now I want to really unlock the full potential of my portfolio. While the 10% average annual return that the market has given me has been great, I'm intrigued at the prospect of producing portfolio returns that are even higher than that. I've heard with enough skill and ability, it might be doable. And maybe even more importantly than boosting my returns, I'm very interested in reducing my overall portfolio risk. Being that I'm closer to the end of my career than the beginning, I want to be better prepared to handle extremely volatile conditions or big market meltdowns, like we had during the internet bubble in 2002, the financial crisis in 2008, the COVID crash in 2020, or even the trade wars and tariffs that we're experiencing right now in 2025. Well, whatever the reason might be for you or Jimmy, if anything about his story resonates with you, then you are in the right place. I'm going to show you how to begin to make the transition from a purely passive approach with your portfolio to a much more active approach that steps into the world of derivatives. And we're going to break it down into 5 simple steps as I take Jimmy through a first-hand example. And we start with step 1. Taking inventory of where you're at. I've taken the passive approach and it's worked out great, but it's important to remember that those 10% average annual returns are exactly that, an average. While the market does go up most of the time, it can also go down and sometimes seemingly out of nowhere, just like we've seen to start 2025. Well, that is what I'm trying to avoid. Until now, I have been simply buying and holding, absorbing whatever blows might come my way. But I am tired of this lack of control. I want to be more involved. I don't want to be so reliant on market direction for not only generating returns, but mitigating risk. Now, you may be just like Jimmy. You don't want to stand passively by, needing the market to move higher to hit your return projections. All the while, the performance of your nest egg seems to be directly tied to the next Trump tweet. You want to take control and add a brand new strategic component to your portfolio. Well, once you fully immerse yourself into the world of derivatives, all those things can happen. But before we dig into the real details, we have to progress to the next step in the journey, where we are now going to tap into all the tools that were available to you as a passive investor who was reliant on the market moving higher. Specifically, let's talk about the power of dividends and dollar cost averaging. Step 2, the tools you need. Now I'm ready for action. I'm going to ditch the purely passive approach, but to be fair, I have done really well as a passive investor over the last 30 years using the 3 Ds, direction, dividends, and dollar cost averaging. So naturally, there is still a part of me that really likes all these strategies. The thought of abandoning those long bias strategies completely has me feeling a little bit uneasy. Well, here's the great news. continuing to collect your dividend payments, or improve your basis through dollar cost averaging are both still very much in play. You're going to see that there will still be a home for you to carry some share positions in your favorite stocks. And even in the options portion of your portfolio where you might not own any direct shares, any dividends that the company might pay automatically get factored into the option pricing. For example, if instead of buying stock in Apple, you decide to use a short put position, which is a classic option strategy, you are still going to collect any upcoming dividends that Apple might pay with that short put strategy. This happens because you're able to sell the put for a higher price based on the simple fact that the extrinsic value moves higher due to the dividend itself. But all of that is way beyond where we want to go here today. Not to mention, we've already done a video that covers all of that in depth, and you can watch it right here. But what about dollar cost averaging? Well, I learned early on that it was a great long-term strategy to add to my investments in individual stocks or broad-based indexes when the price of those stocks or indexes was falling. If the company was solid or the overall economy would be strong again, then I knew there was a really high probability that the stock prices would recover. Well, with derivatives, high probability trades are at the core of what we do, and here is the best part. It happens right at trade entry. You don't need to wait for the stock to drop or things to go south. You start improving your basis right from the very start. Now, I'm very happy to hear that both the returns from dividends and the spirit of dollar cost averaging can be alive and well with the option strategies inside my portfolio. But now, I'm even more intrigued to hear about how I can actually make money without needing the market to go higher and without being so reliant on market direction. That sounds crazy to me. Well, both you and Jimmy are in luck because that is exactly where we're headed next. Step 3, trading time and volatility. Now, I have to be honest, this completely blows my mind. I was under the impression that to make money investing in the stock market, you buy stocks and you need a move higher in the stock to make money. Well, it turns out that's not necessarily true. It's important to understand that in the world of options, any position you might have can and will make money from 3 different parts: direction, time, and volatility. So let's start with direction. Now, working through all the inner workings of calls and puts and option pricing is way beyond our focus here, and we can't get into it in this very video. So I would encourage you to watch this video right here. For the sake of Jimmy's goal, we want a broad overview, and it works like this. There are option strategies where if I'm bullish, I benefit from the stock price going up, and I'm hurt by the stock price going down. So very similar to being long stock. There are also option strategies where if I'm bearish, I benefit from the stock price going down and I'm hurt by the stock price going up. So very similar to being short stock. But here is where things get interesting. With options, if I'm bullish, I can set up a strategy that benefits from the stock going up, but can also make money if the stock goes nowhere, and even possibly make money if the stock goes down a little. And similarly, if I'm bearish, I can set up a strategy that benefits from the stock going down, but can also make money if the stock goes nowhere, and even possibly make money even if the stock goes up a little. And the reason we can do that is because with options, we're not only trading direction, we're also trading time and volatility. You see, with options, there are various components to an option's price. The underlying stock price of the stock the option is on is a component. The risk-free interest rate in the economy is a component. Even the dividend that the company might pay is a component, just like we saw in the last section. But one of the largest components to an option's price is the time that is left on the option contract. Every option contract expires on a specific date. So some contracts might expire in 7 days, some might expire in 45 days, and some might expire in 360 days. Simply put, the more time the option contract has, the higher its price. As time passes, the number of days left in the contract decreases, and so that time value follows suit and also decreases. Here's the best part. You can play any directional bias you want, but you can also play time along with that same strategy. More specifically, you can benefit from the simple passage of time. As the days go by and the time value dissipates from that option's price, it helps the P&L on your position. Now, for our strategy examples coming up, we're going to focus exclusively on time, but it's important that you're made aware that you can also trade another non-directional metric, volatility. Now, volatility does share a reliable relationship with direction, but we'll leave that discussion for a future time. For us, we want to understand that much like time value is added to an option's price, a volatility premium is also added to an option's price. And also very similar to time, more volatility means higher option prices, and lower volatility means lower option prices. This will come as no surprise, but this video right here explains volatility in great depth. But for our purposes, here is what we need. Market volatility moves up, it moves down, it moves all over, just like everything else in the market. But generally speaking, on average, volatility is in a state of contraction, so it's moving lower. And just like we did with time, we can set up option strategies to take advantage of that natural volatility contraction. But now you've got to be wondering, all right, I see how time can help me, but I still can't for the life of me understand how I can make money without being directionally right or even being directionally wrong. Well, that's where we're going next. Step 4, strategic breakdown. So let's unpack 3 different strategies, starting with a covered call. I'm used to owning stock, and one of my favorites over the years has certainly been Apple. Well, the beautiful thing about a covered call is that it starts the same way that all of my positions have started, with long stock. The difference is, on top of that stock, we're going to add an option component, specifically a short call. This is what is called a covered call strategy. Let's suppose I own some Apple that I bought earlier this year for $180 per share. Today is April 9th, and right now in the option market, I can sell the 200 strike call in the May cycle that is 37 days away for $2.50, which is $2.50 per share, or $250 for the whole contract, because option contracts are always in 100 share allotments. Now, a key part to understanding how a covered call works, or really any short premium strategy, is this. If the stock price is above the strike price on a call, the call is in the money, meaning it has value. But if it's below the strike price on a call, the call is out of the money, meaning it is worthless. If the stock price is below the strike price on a put, the put is in the money, meaning it has value. But if it's above the strike price on a put, the put is out of the money, meaning it's worthless. And when you sell options, you always want the options to be out of the money. That is because that allows you to keep what you sold it for. So back to my covered call. Let's explore 4 simple scenarios by May expiration. Apple goes to 160, Apple goes to 200, Apple goes to 220, and Apple stays right at 180. If Apple falls to 160, then I'll lose $20 per share on my stock, but my short call will expire out of the money, so it will be worthless, which means I'll get to keep the $2.50 I sold it for. So my net P&L is improved to only losing $17.50, which is good. If Apple rises to 200, then I make $20 per share on my stock, and my short call expires exactly at the money, which is the same as out of the money at expiration, which also makes it worthless. Again, this means I'll get to keep the $2.50 that I sold it for, so my net P&L is improved again up to $22.50. Also good. If Apple rises all the way to 220, I make $40 per share on my stock, but now my short call slows me down because it is in the money. I do get to keep the $2.50 I sold it for, but now the short call loses the difference between the 200 strike price and the 220 stock price. So again, my net P&L is plus $22.50, which is good, but not as good as it would have been if I just held the long stock only. But lastly, what happens if Apple stays at 180? It moves around, up and down, sideways, whatever, but at May expiration, it's right back to 180. Well, I don't make or lose anything on the stock, but again, my short call expires worthless, so I get to keep the $2.50 per share. So in other words, I generated a positive P&L on my position without needing the stock to go anywhere. And that, my friends, is the power of options. Not to mention, I also improved my net P&L in 2 of the 3 other scenarios too. Okay, so next up, the vertical spread. And specifically here, we're going to talk about a short vertical spread using put options. So this would be a short put spread. Let's use Tesla as our example. Here, I won't have the familiarity of long stock to lean on as my position will be solely options. But I'm bullish on Tesla, so I want to set up a short put strategy in the May cycle with 37 days to expiration. To do that with Tesla at $250 per share, let's say I set up a 225 220 short put spread that I'm able to sell for $2 in the May cycle. Now, an important aspect of short vertical spreads like the one I have here is that my maximum gain is always whatever I sold the vertical for, so $2, and my maximum loss is always the difference between the width of the vertical and what I sold it for. So $5 width minus $2 credit, or a $3 max loss. So let's work through 4 different stock price scenarios. Tesla rises to 300, Tesla stays at 250, Tesla goes down to 230, and Tesla goes down to 200. First, Tesla rises to 300. In this scenario, this short put spread expires out of the money, so it's worthless, which means I keep what I sold it for, and my P&L is plus $2. Next, Tesla stays at 250. In this scenario, again, the short put spread expires out of the money, so it's worthless again. I keep the premium, and my P&L is plus $2. Next, Tesla falls to 230, so it went down when I wanted it to go up. But here's the crazy thing. Again, the short put spread is still out of the money, so it's worthless. I keep the premium and my P&L is plus $2, even though I was wrong about the direction of the stock. And lastly, Tesla falls to 200. In this scenario, the short put spread is fully in the money. So this trade would be a loser where I would lose the most I can possibly lose for a P&L of minus $3. Now, as you can see, I'm not hitting home runs when the stock moves in my favor in this Tesla example. Not at all. But it's pretty crazy that I'm able to make money when I'm wrong on the stock price direction completely. Well, that is exactly what we meant earlier when we said you're able to benefit from the passage of time. When you sell out of the money options, if they stay out of the money, then you are able to allow that time value to drive your ultimate P&L. So now, the third and final strategy, the short strangle. Here, let's say I want to do an option strategy in Starbucks. And for this one, I don't think Starbucks is going to move much between now and May expiration in 37 days. So I want to set up a strategy that is a pure time play. It could be a volatility play too, as we alluded to earlier, but for these examples, again, we're just focused on time. So with Starbucks at $95 per share, let's say I sell an 80-110 strangle. So an 80 put and a 110 call in the May cycle with 37 days to go for a $4 credit. As long as Starbucks stays between 80 and 100 at May expiration, both options will expire worthless, and I'll keep my $4. So that means it could go up to 105, it could go down to 82, and it could do everything in between. It won't matter to me, and it won't matter to the position. As the time value comes out of the option by expiration, I will make the $4 profit from time alone. But here's the catch. Anything above 110 or anything below 80, that's where my risk is. And even more specifically, I have an unlimited amount of risk on both sides. Now that right there, you might be thinking, man, I am out. I am not interested. No thanks. Well, that makes sense, because you're just getting started. I just wanted to take the opportunity right here, right now, to introduce you to the short strangle because it continues to be one of the most popular and effective strategies that experienced traders use every single day. And you yourself are probably striving to become an experienced trader one day. For now, though, there's no rush. This is not a competition. Start with covered calls and then move into vertical spreads. There will be plenty of time for other strategies like short strangles sometime down the road. I promise you, covered calls and vertical spreads alone are going to keep you plenty busy. All right, so next up is the final step of this whole crash course, where we are going to work out some different ways that you can break down your total portfolio and show both you and Jimmy how you can split up your assets between a passive approach and an active approach. Step 5, portfolio allocation. So now I'm beginning to equip myself with more skills to attack the market from a variety of angles. I can trade time and I can trade volatility in addition to direction. But to do that, we have to figure out how are we going to split up our assets. More specifically, what chunk, what percentage of our assets are we going to keep doing what we've always done, and what percentage of our assets are we going to devote to this brand new derivative strategy? This is a really important question to answer, and here's the most important thing to keep in mind. You don't have to go all in with 100% of your assets into an active approach in the derivatives market. Definitely not when you're just getting started. It's understandable that shifting away from a passive, long only bias in the market that has done you so well for so many years is going to take some time. But practically speaking, what might some asset breakdowns look like? Well, if you remember, my retirement portfolio just crossed the $1 million mark. And in addition to that, I also have a $100,000 brokerage account that I might use to play a hunch from time to time. So in my situation, the starting point here is easy. While I'm certainly intrigued at the prospect of not having to be passively long all the time, I'm still confident that the upward trajectory of the market will continue to some degree or another. So I'm going to start with my $1 million retirement portfolio, still doing what I've always been doing, long some market indexes and some of my favorite stocks, but I'm now going to devote my $100,000 brokerage account to a more actively managed approach that focuses on derivatives, just as we've been talking about today. So that means that $100,000 of the $1.1 million total, or about 9% of my assets, will be actively traded, and 91% of my assets will continue to be passively invested. This is a great start. And over time, as I gain more experience and my skills improve, I suspect that that ratio is going to shift in favor of more assets being actively traded. But maybe you have a $500,000 retirement portfolio and a $200,000 brokerage account, and you want to devote more assets to the active approach now. Again, I think splitting up the approach to whatever is in your retirement accounts to passive and whatever is in your brokerage accounts to active makes a lot of sense. So here you would be about 29% active and 71% passive, so still the bulk of your assets passively invested, but a much bigger chunk devoted to the active approach. Or maybe you have a $200,000 retirement portfolio and a $40,000 brokerage account. Again, with the natural split of retirement assets into passive investments and brokerage accounts into active trading, you're looking at about 17% active and 83% passive. Of course, you don't have to do it this way. You don't have to use your retirement accounts for passive funds and your brokerage accounts for active funds. You can certainly do it a different way. You could even mix it up if you want to. But when you start to learn about things that we were not able to cover in this course, with buying powers and margins and things of that nature, it does make sense to begin with passive funds in the retirement accounts and active funds in the brokerage accounts. There are many, many, many ways to split this up. But whatever you decide, here are some important things to remember. First, by keeping some amount of your assets in passively invested positions, you'll maintain the familiarity of what you've been doing your entire investing career. So playing the natural market drift higher, collecting dividends, dollar cost averaging, all that stuff. Second, remember, the strategy I suggest you start with for even your active stuff is the covered call, which we introduced just a little bit ago in this very crash course. So even within the active portion of your portfolio, you'll have that same familiarity of long stock. From there, you can grow into vertical spreads, possibly even short strangles down the road, and many, many other strategies. But lastly, again, do not forget, this is not a race. This is not a competition. The market will always be here. So don't go fast just for the sake of going fast. And don't dive into the deep end before you've even dipped a toe into the water. You're going to mess up and you're going to make mistakes. So ease into the active approach little by little and only do it as you are ready. And I'm here to help you as much as I possibly can. So please, you can always email me. I'm jschultz@tastylive.com, or we can connect on X at jschultzf3. But now, where do you go from here? Well, given the nature of this crash course, there were so many things that we were not able to unpack, that we were not able to dive deeper into. And so, if you want to use this crash course as a catalyst to improve your skills and improve your abilities, then I would strongly encourage you now to dig into the live show on the Tasty Live Network. dig into the archives, and maybe possibly even check out some of the other crash courses that are already available on the network and on the YouTube channel, such as the one that dives deeper into what it means to begin to trade options, and it happens to be starting right now.
As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then
we are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Shalaka! Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby! I like the looks!
Understand I got a plan, but I bet you didn't know that I was dangerous.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the Friday edition of the program. And what it is that we are trying to do, man, I have no idea. And neither does the market, and neither does the administration. But you guys are here. You guys are here with me. And man, this is a very exciting moment in your day, in my day. You made it to the show. The market in shambles, but you are here. The metals are ripping, but you are here. And so thank you guys so much for being a part of the program, because we could only do this with you guys. We could not do this without your help. So thank you guys so very much. If you are watching over on the Tasty Live network, now it actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching this show. Man, you can celebrate with your fellow Bears. You can commiserate with your fellow Bulls, but I'm going to do everything in my power to make sure that it is a good time had by most. And of course, if you have any questions for me, drop them in the chat. I'll probably try to get to the questions a little bit earlier today, because I know on a day like today, even the S&P is down 100. You guys might have some different things you want to talk about, so I want to spend as much time with you guys as I possibly can. So, Josh, bring us into the market. Whew, man, once again, if you get squeamish easily, I would look away right about now. EME S&P is down 99, risk-free instrument, also known as the NASDAQ futures, which is an extraordinarily high-risk product. If you're brand new to the show, welcome aboard. That is my very weak, mediocre attempt at internet sarcasm. NASDAQ down 430. You got the boomers down 735. You got the Russell 2000 futures index down 42. You got bonds down 15. You got notes unched. You got oil up $5. You got UB40 down 24. You got gold up 134. You got silver up 240. The shifties are celebrating. The Hunt brothers are celebrating. Metals are back wearing the risk off hat. We'll talk about that here in just a couple of seconds. But British pound is down. Euro is down. Volatility on the rise, obviously. Volatility futures up to 28. And then spot volatility, the old VIX, up to almost 31 on the day. And this is like an intraday print. This is not like an overnight print that we can't count. This is not like a pre-market print that is just another mess up by the VIX interns in terms of doing the calculation wrong. Like, this is a during the day print. This guy counts. It is legitimate. VIX at almost 31. Man, yikes. Yikes. All right, so what I want to do. So actually, first off, So we had a great question come. This is so perfect. So I remember the SC Golfer. So SC Golfer, if you're here again today, thank you so much for tuning in yesterday. And yet, such a good question yesterday about the metals, gold and silver, and when are they going to return to safe haven status? And I said yesterday, I don't know. I don't know, because I think correlations are difficult to be trusted, especially when the market is moving violently in one direction or the other direction. The correlations can quickly break down and new correlations can begin. The problem is we don't know what's happening in the moment as it's happening. We won't know until after the fact. We're all looking through the rearview mirror. And again, guys, we've talked about this before. The rearview mirror is batting like 400. Roman Anthony's batting like 435. So it's in the conversation, right, in terms of one of the greatest hitters and batting averages of all time. And by all time, I mean we're one game into the season. But today, interestingly, the metals are actually acting like safe havens. So today you've got everything else is going down. The market is going down. Bonds are going down. Notes are unchanged. British pound is going down. Euro is going down. The Bitcoin bros, they can't even celebrate. The only place to park your cash today is in the metals. Now, did you know, or could you know that today was going to be the day? I don't think so. Could you know before the fact that today the tides were going to turn and it was going to start to become a good place to park your cash in terms of gold and silver? No, and I think that's the difficulty with kind of especially gold, but silver is kind of always kind of that speculative play, which I talked about yesterday. It's very hard to know which hat is gold going to wear. And so today we've got gold up 135, we've got silver up a bunch, and so maybe the correlation of the metals being back to safe haven status, maybe that's going to stick. Right? I mean, we'll have to wait and see, obviously, going into the weekend and then Monday. I do think it's rather funny that, if I'm not mistaken, Trump is scheduled to speak at 5:30 tonight. And so I'm like, man, are we going to do the exact same playbook? Literally the exact same playbook we've been doing for 6, 7, 8 weeks in a row? To where Thursday and Friday, super, super weak. Man, this does not look good. Or maybe Friday's been a bit of a recovery the last couple weeks. But then Friday night, that's when the really bad stuff comes out. And then Sunday afternoon, Sunday evening, right before the futures open, that's when he tries to goose the market a little bit higher. But I don't know. We'll have to wait and see. It does look like the market, and we talked about this. Man, I think we talked about this yesterday too, if I'm not mistaken. And my blueberry intake has been on point. So I'm pretty sure this is right. I mentioned on the show, it was either yesterday or Wednesday, I think there's going to come a time when the natural flow of the market's response to headlines from either the US or Iran, that relationship is going to break down. That relationship is going to not necessarily be as reliable as it has been, because it's been essentially the good news comes out from either side, the market rips. There's some kind of relief. There's tacos and, there's fluatas and chimichangas and whatever, and the market rips. Well, yesterday after the close, something came out in terms of a pause on the war or whatever from our side. The market ripped, but then it gave it all right back. And so now all of a sudden it's okay, I think the market might be seeing through these different things, and they want to see actual results potentially. They want to see actual evidence of results, whatever that might be, one way or another, with the E-mini S&Ps now down 99 3/4. Whoo, baby. Yikes. But at least it's a Friday, so we got that going for us. All right, so let's go ahead. Those are, a few thoughts. It is a Friday. Take them or leave them. Feel free to discard upon arrival if that makes the most sense to you. But I see you guys in the chat. Man, look at you guys in the chat. Man, I see you guys. Joel James in the house. Sam L is in the house. Man, iPod Touch in the house. So iPod Touch, I saw your emails. So iPod Touch wanted me to set the record straight. So I can't remember everything you said, iPod Touch, but I completely misrepresented iPod Touch's position the other day. iPod Touch covered most of his shorts, but he was calling for even lower lows in the email. And so I can't remember how much of your position you kept on iPod Touch, but I think yesterday or the day before, I completely misrepresented your position that you thought it was going to flip around. You thought it was going to be over, blah, blah, blah. No, iPod Touch has assured me this thing is just getting started. And I think I'm actually misrepresenting his position again, but that's the best I got for you, iPod Touch. I'm doing my best. It's a live show. There's no takebacks. And so thank you so much, my friend, for being a part of the show. But N1C is here. Sam L is here. Point B in the house. A Wills in the house. Mrs. A Wills might not be too far behind. And so Sam L is here. Ordenu is here. Brian is here, man. Look at you guys. Danish Dynamite is here. Man, I appreciate you guys. All right, let's go through a couple things in the portfolio, and then we'll just kind of see where the wind blows us. So again, if you get startled easily, I would look away. I would absolutely look away because we are getting pummeled. I was going to say pummeled, and I was also going to say punished. So we are getting punished. We are getting absolutely punished on the show today. And hey, I mean, this is it. When you're long Delta and the market gets punished, you also are going to get punished. Like there's no way around it, man. Like you have to understand what you're signing up for. If you have a directional bias, which we're pretty long right now, we're long EMS&Ps with the MES short put. We're long the NASDAQ with the MNQ short put. We're long, well, we're not really long IWM, that's a strangle, but we're long Meta. We're long Microsoft. We're obviously long Starbucks. You know, we're long Snapchat, the core of the portfolio, of course. And so when all these things are going down together, I mean, it's going to be a problem. It's going to be, you know, lots of red on the screen. And so again, this is where having clarity around what you're signing up for is so incredibly helpful because you can just remember, all right, I'm small enough in terms of position sizing. I'm small enough in terms of overall leverage with the overall portfolio. And so understanding that is like, okay, I feel okay with where I'm at. Of course, I wish it was going differently. Of course, I wish we were having a different result, but this is what you get, right? Like you play the game. Sometimes it works easily and sometimes it doesn't. Like sometimes you got to work for it a little bit and sometimes, you know, it kind of comes the next day. I think right now we're kind of in that former situation where we're going to have to work for this guy just a wee little bit. But for right now, let's go through. I want to make sure we get everything cleaned up that needs to be cleaned up because yesterday we talked a lot about the oil situation because we rolled that oil strangle and we got a credit for the roll, which I still can't believe even happened live on the show. But you can go back and watch yesterday's tape and you'll see me be surprised and delighted. I surprised and delighted myself, as you guys reminded me of there in the chat during the chat time of the show. That was pretty fun. I enjoyed that actually, yesterday's program. So check that out. You'll see the MCL roll where I thought we weren't even going to get filled for a credit. We got filled for a really, really nice credit. So I'm not going to go through MCL again today, but let's start doing the other things that need our attention, like MES, like MNQ, possibly IWM, and Meta, Microsoft, and things of that nature. So first and foremost, MES. This is very simple. We are at 21 days to go. So at a minimum, we're going to roll this thing out. At an absolute minimum, we're just going to roll it out into the next cycle. Now, are we going to adjust the strikes? Well, let's take a look at just rolling it out. So if I take this guy and I highlight both options and I right click and I go to roll the expirations, I can roll this guy out to May 15th. So essentially the May expiration, which is essentially what I would roll to. Is that the May expiration? Hold on, is that May? Let me check. Let me just double check that. Is May 15th a Friday? I think that's right. Yeah, there you go. May 15th. And so there's no May 8th. That's kind of weird. Is May 8th a holiday? I don't think so. I mean, Memorial Day is the only holiday in May. Obviously, my birthday is also in May, which that should be a national holiday, clearly. But that's not till the end of May. And my birthday is not even until the middle of May. Well, May 19th. And so May 8th is not there. That's weird. But anyway, I wouldn't roll the May 8th anyway. I probably would go to the May 15th cycle. So let's go ahead and do that. Let's open up MES. I'm just going to roll this guy out to the May cycle. And I'm going to pick up $82 in credit for doing that. Now, do I want to adjust my strikes? Do I want to potentially recenter my strikes? It's worth the consideration, I think. Right? Like you can see here, I'm picking up 81, not dollars, 81 points in credit. Let's recenter this just a little bit. I'm going to bring my call down. I'm going to bring my put down a little bit too, just to kind of move the center of mass of the strategy a little bit closer to where the market is. I want to see, because we're going to pick something up for moving the call down, and we're going to have to pay something for moving the put down. And so I kind of want to see how can we kind of shift this guy around to where we still maintain, roughly the same credit that we would get for just rolling it out, which you can see on the screen right now is 81 points. So if I roll down, like let's say I roll each of them down to 100 points. If I go from the 6,900 call to the 6,800 call, I'm obviously going to get a bigger credit for doing that because I'm rolling the call down closer to where the stock is. That makes sense. But now if I roll my put down 100 points, that's going to cost me something. So that's going to cost me. That cost me a lot. So that cost me about 50 points. So now my total credit is 54 points. Let me roll it up to the 6,600. Now it's about 66.75. Okay, I think we're going to do this. So we don't do this that often. So this is something a little bit different. We're rolling out and we are recentering a little bit. And this is not even a true quote unquote recentering. I still want to remain kind of bullish because I like to play the ebb and flow. I like to play, the market kind of, coming back after going down or going down after running up or whatever. I like to play a little bit of mean reverting price, but don't tell anybody I said that. That's just between you and me. But still, I want to remain somewhat bullish right now. I don't want to completely neutralize my direction, because then if we do get a snapback rally and we do get the tacos and the chimichangas, and the Mexican burritos this weekend, as if there's another type of burrito, American burritos, then Italian burrito is pretty delicious. It's got like that tour of Italy in there. You got a little lasagna in that guy, maybe some mozzarella sticks. But anyway, I digress. I think for this guy, 6,600, 6,800. I think I like it, man. 67 points on the credit. Let's do it. A little rolling out and recentering, and we'll see if we can get filled. And so it's working. It was pending there for a second. That's not good. Let's try 65 and a half. Let's see if we can get filled. Pending, working, filled. All right, 65 and a half. Beautiful. Okay. And so MES&P went down 96, so the rally has begun. All right, so MES, we rolled that out. Okay, so MNQ. I've got a 24,000 put. It's in the money. What am I going to do? Okay, there's 34 days to go in the cycle. I could do nothing, obviously. But I think let's try something a little bit different here. I don't want to add a call. I don't want to neutralize my directional bias. But one thing that you can always do, if you're feeling like, man, like I'm really concerned about the weekend, or I'm just concerned about, the next 200 points or 300 points or 600 points in the NASDAQ or whatever, if you're thinking, man, this could get really, really bad, but I want to still be in the position in case there is a snapback and there is kind of a rebound rally. Well, remember, you can always roll early. You don't have to wait for 21 days to go. Like, you don't have to wait until you're tested. I mean, we're obviously tested now, but we're not even at 21 days to go. You don't have to do nothing, right? If you do nothing, it's the default setting for a reason, but you have to understand what you're kind of signing up for with that too. It's an in-the-money option, with shorter time to duration relative to a, back month cycle or a longer dated cycle. So things are going to move more quickly, which again is gimmies and gotchas. If it works, it's going to be great. But if it doesn't work, it could potentially be pretty, pretty bad. So here with the MNQ short put, I thought, let's just roll it out. We'll kick this guy out to, it looks like May, or maybe the end of May. We'll kick this guy out to, add another 20, 30 days onto the cycle. And that's going to allow us to stay in the trade, and everything is going to slow down a little bit for the position, which again, just gives us a better position to be in to extend the duration on the trade to where we don't have to necessarily respond to every tweet or, try to decipher, is that a taco or is that a fluata? Or are they all kind of the same thing with the same ingredients? I'm actually not sure. But how's the market going to interpret this? Like, that could be difficult to do. So let's go ahead. Oh, I don't want to close it. Hold on. Well, we almost closed it. I don't want to close it. Let's roll it to let's go to the May end of the month. We'll go May, end of the month. It looks like now the MNQ markets, as we've looked at before, are pretty craptacular. So you have to be mindful of your bid-ask spread differential there, but I'll go in at the theoretical mid-price. I'll see if we can get filled. I don't think we will. I think we'll have to give a little bit of, we'll have to give up a few shekels to get this guy filled, but I was surprised yesterday. And so maybe I'll be surprised again here today, but let's go 229. No takers at 229. So I'm not surprised by that. I'm going to go down to, let me do like 220. Because again, if there's improvement to be had, like, you're going to get it. You don't have to worry about that. All right, so we got filled at 220. So maybe we got picked off. I don't know, but we got filled. Okay, so there's MNQ. Okay, Dell's actually down today. It's the only bright spot in the whole portfolio. Dell and GDX. Look at GDX. Just trucking along, man. That's some good stuff. So we don't need to do anything with those two guys. We're going to sit tight. But then IWM is also at 21 days to go. This one is simple, though, because it's still inside of our strikes. It's inside of our strikes, I should say. We're down on the trade, so I don't want to close it right now. Let's leave it on. Let's just kick it out. We'll add duration. We'll bring in premium. Like, this is basic adjusting stuff. These are basic adjusting mechanics that are always at your disposal when it comes to being a premium seller. You can always add time to the trade. Everything slows down, which is good. That's a gimme. Jim, where's the gotcha? Like, Jim, for every gimme, there is a gotcha, right? You're the one who taught me that. Where is the gotcha? Well, the gotcha, at a minimum, is you now have unlimited risk or undefined risk for a longer window of time, for a greater duration of time. Like, that inherently is obviously going to be a gotcha. But if you're comfortable selling undefined risk strategies, if you're used to doing this, that just kind of comes with the territory, honestly. That shouldn't really be the deciding factor when it comes to staying in a trade or not staying in a trade. If you're brand new, obviously, you might be thinking about, oh man, I don't know if I want to hold this trade for 50 days. I'd much rather hold it for 20 or 25. Well, that has its own set of gimmies and gotchas, but I can assure you, once you put in the reps, Once you gain the experience, you get the market exposure, blah, 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 blah. That just kind of comes with the territory and you really kind of get used to it over time. And so let's go ahead and let's roll out IWM as well. We'll roll that guy out to me. I pick up, it looks like about 330 on the credit, which is super nice. So let's do that guy. I'll do 327. I'll probably get filled at 327. No takers at 327. All right, let's try 325, I guess. That's a little bit more feng shui than 327. All right, so we got filled at 325. So there you go, 325. There you go. And then, okay, so meta defined risk, not going to do anything with that because I want to get to you guys. Meta defined risk, we sit tight. Even though it's at 21 days to go, if I try to roll it, it would be a debit. So we sit tight. And if we take max loss, we take max loss. That's the way that it goes. Microsoft, same thing, 21 days to go. If we take max loss, we take max loss. I mean, we kind of took a shot. This is a trade that we put on, I think, just this week. And so we're going to sit tight, do nothing there. Starbucks, obviously, we're getting punished on this guy too. And so we do nothing. SLV, this was our strangle that we just put on the other day. It's still between our strikes. And so we sit tight on that guy. And then let's see. Snapchat is down 9 cents. My wife is calling me right now. That's so funny. Oh my gosh. Should I answer this on live on the show? No, I can't, because she's at school. She probably has something important to tell me, and so I can't do it, Josh. No, I clicked off. Next time, maybe I'll do it. She's called us a couple times on the show, and I'm like, do you know what I do for a living? It's kind of funny, actually. Next time I'll answer it. I promise. You guys have my word. I will answer it live on the show, but I couldn't do that to her now. I should have done that. I missed it. See, even the market's got me rattled too, man. So you're not alone. But it's so funny to hear my wife try to explain to our friends what I do for a living. Because I don't think she has any idea. Like, I don't think she knows I disappear for like 7, 8, 9 hours a day, and then I just materialize around 4:30, 5 o'clock in the day or whatever. But she has no idea what I do, no clue whatsoever. So like when she's talking to like all her like women friends about like what their husbands do, and it's like one of our guy friends. In fact, we're having dinner with him tonight. Like he's a detective, right? And so his job is like super cool and like super awesome and like whatever. And another guy is like an engineer. He's like super cool, super awesome, whatever. And like all these different things. And they're like, well, what does your husband do? And my wife, just hearing her fumble through it is so fun for me. So fun for me. So then she turns to me and says, well, tell these people what you do. And I'm like, I can't really explain what I do. It's not that easy. And so maybe that's where she gets it from. But Snapchat's down, Tesla's down. We sit tight, we do nothing. Where are you guys at, man? Let's go. Man, I see you guys in the house. Man, look at you guys. I appreciate you guys. So Josh gave me a surprise and delight. Thank you there, Josh, from Orgdenu. Orgdenu says, Dr. Jim, thank you there, Josh. Orgdenu says, hello, Dr. Jim. I just saw your calculated risk series about IVR and IV. I usually choose stocks with high IVR on the predefined watch list. How does IV comes into play to choose the stocks? Yeah, so that's what you should do. Like if I go to the watch list here, right? So I go to like Tasty Default, which is my preferred watch list. If you sort by IVR, which is what I typically do, and it sounds like that's what you were doing too. I think that's the way to play it. I think that's the way to do it. And oh, by the way, we're getting into earnings seasons coming up. Man, guys, I've been studying the markets. It's been almost 20 years now. This earnings season that's coming up, all stocks, every single one of them, I have never personally experienced, professionally experienced, or studied myself a more impactful earnings season than the one that is coming up down the chutes here in the next few weeks. And so you've got a few weeks. If you don't have the bunker materials ready to go, if you don't know what to order, it's on you, man. You've got like 3 weeks to get these things in order because I really can't see a way out of this. I just don't know how we get to the other side. But if we do, you can sort by IVR and you can sort by IVR and you'll see the stocks with the high IVR. Now, right now, a lot of the individual names are going to have the high implied volatility ranks because of the upcoming earnings dates and what have you. But per Orgdenu's question, by sorting by IVR, it shows me all the stocks and indexes that have high IVR. So GLD, EWW, EWZ, etc. Okay, now where does IV come into play? Well, you have IVX, which is right next to it. So here's your IV index that's right next to it. And let me try to find, let me see if I can find two stocks that have very similar IVRs, but very different IVXs. I don't want to do UVXY because that's a volatility product. So it's very, very different than like traditional equity option. Okay, here you go. This is perfect. So look at the IV rank of Citigroup and our beloved Snapchat. Right? So the IV rank of Citigroup is 50. The IV rank of Snapchat is also 50. But look at the IVX. So look at the IVX. The actual implied volatility is completely different between the two. And this is kind of what I talked about in the calculated risk about, using implied volatility and using implied volatility rank. The best of both worlds is high implied volatility rank. That's most important, but also high implied volatility so that we get good bang for our buck. Now, what's interesting about this example, and it kind of makes me realize I probably left out a little bit from that calculated risk. We could have been even a bit more complete because based on what I talked about in that episode, you would look at this and you would say, oh, well, Snapchat is an amazing opportunity to sell premium here. Well, it may not be simply because it's Snapchat, but also it's an under $4 stock. So the premiums are just not going to be that great. Even though the IVR is high, the IV itself is high, the stock price is so low that you're still going to be selling pennies on the dollar. Like that's why we just bought the shares when we bought the shares, a couple of weeks ago. But Microsoft is about the same. And so generally speaking, Orgdenu, look at the IVR for opportunity, but then also look at the IV. Because you're going to notice, the stocks that have been around for a really, really long time, they're going to generally have lower implied volatilities. So, if I just let me sort by symbol. Like Apple, IV, 34%. Amazon, IV, 42%. Now, Google, 40%. Okay, now contrast that with, let me see here, AMD. The implied volatility for AMD is going to be, let me bring up the quote here, because it's not on the Tasty Default watch list. But the implied volatility for AMD is 60%. So you can see that guy right here. The implied volatility for Nvidia, 45. That's actually lower than I thought. 45%. Wow. But AMD is a good example. So you're going to see, when you have stocks with relatively high implied volatilities, you just get better bang for your buck. When you get into stocks with low implied volatilities, for example, and, not necessarily, Snapchat had a high one, but trying to think of, Johnson & Johnson is probably pretty low. Johnson & Johnson, 30%. That's the lowest one we saw. I don't know. IBM's 49. Yeah, I wasn't so sure about that one. McDonald's, 24. Right, so there's another one. So you can see, getting into an Apple versus McDonald's, and I actually referenced both of those stocks in that episode. There's a reason why we're all trading the same stocks, because they tend to have high implied volatilities, so IVs, and then we wait for the implied volatility ranks to spike, and then we kind of get the best of both worlds. So hopefully that helps you a little bit there, Orgdenu. But man, let's see. Can I surprise and delight somebody else? Man, let me find somebody else in the middle. Well, I see that I see two next to each other that are pretty funny. Well, at least one that's funny, and then one that I appreciate, although I appreciate the humor as well. Griffin Jones, Dr. Jim is slinging the perfectly cromulent words. I don't know what cromulent means, but it sounds like something I would say, even the S&P's down 103. Ranch says he followed me on my GDX ratio spread. Doc, I didn't fade. I actually followed. Man, good luck to us both, my friend, because this is not, it's not good for me, and it's certainly not good for you. The only saving grace that you have is this is not tied to a binary event, right? It's the binary event plays that you really want to avoid. It's the earnings trades that you absolutely want to fade. The regular trades, maybe we're holding our own with those guys. So hopefully that's the case for us here. But good luck to us there, Ranch. So let's see here. Let me go to, here we go. I'm going to surprise and delight one other person closer to the end. This looks like a new person, maybe. I see CHX Mist. So Chex Mist. What's going on there, Chex Mist, or maybe Chemist? I'm going to call you Chemist because that's a little bit easier to say. Dr. Jim, I have some short call spreads in ES and QQQ at 50% of max profit, but I don't want to lose the short delta. Should I roll them down in the same cycle? So this is a very, very, very good question. And this is a problem that a lot of people have. If you want to roll those down, you most certainly can do that. You can roll them down in the same cycle. You can roll it out and keep it in a later cycle. That's 100% your call. Personally, I think taking them off is a better move. So when it comes to directional trades, because nobody knows what's going to happen next. I know it feels bad. I know it feels crazy, but I actually prefer the move. And it's like this on the way up too. I prefer the move when the short call spreads work or when the directional moves work, I manage them and I just make sure that my overall, portfolio deltas are in check with where I want them to be. So provided that that's the case, and I'll tell you what to do if that's not the case. Provided that is the case, I take off the call spreads, ES, QQQ, whatever, and I book those profits. I'm done with those trades. Okay. If I like where my portfolio delta is now, maybe it's a little bit more bullish than I would like, but it's within the range. It's kind of around where I like to keep it, whatever. And I don't mind tilting a bit more bullish, kind of being a little bit more short-term contrarian, which is what I naturally am. So if you are that too, this is going to make sense. If you're not really that way, this is going to kind of be like squaring a circle. But as a premium seller, that's kind of how we're naturally wired. And so this could make sense for you. Taking those guys off, booking the profits, and then just saying, all right, I'm going to chill for a second. Let me chill for a day. Let me just see how the weekend goes, what have you. Making sure all of my risk is where I'm okay with that and things of that nature. But as long as you are okay with those things, then that would be the move that I would personally make. What if you still want those deltas though? Okay. In my opinion, I would much prefer to see you get into a different underlying and or with a different strategy. So that could be a skewed strangle. That could just be another, obviously, short call spread. You could do a long put butterfly. Like you can do a couple of different things to build up those short deltas in a similar way. But I actually like the process of when I have a winner, I don't think twice about it. I cash it in, I book it. If I want to restore those deltas, I do it somewhere else in a different stock and a different underlying. Because I cannot tell you how many times, and I will be willing to bet that so many of you in the chat have experienced something very similar. You have a winner. Whether it's as a hedge or it doesn't matter. You have a winner. It hits the profit target that under normal conditions, you would just take it off and not think about it. But because there are, extraordinary conditions by whoever's definition of that might be, you decide to leave it on. I decide to leave it on. And the next thing I know, now the market rips back or I get the opposite move the next day and I'm kicking myself because I did not take those profits off when I had a chance to do that. I would hate to see that happen to you. So I would much prefer taking those off and then restoring the delta somewhere else. In a different underlying would be my personal preference. But if you just wanted to take those off and then do similar trades in like ES and QQQ or even MNQ at different strikes in a different cycle, that would also be warranted in my opinion. And so hopefully that helps a little bit. And so, all right, let's see where we at. Let's go all the way back to the beginning, man. You guys are doing some work in this chat, man. I appreciate you guys so much. So Point B is in the house. What's going on there, Point B? I appreciate you so much, my friend. Dr. Jim promised to be here. There you go. Yes, I'm here. I am 100%. I'm 100% here. And so N1C is in the house. Yo, he's here. The real one. I'm here. The real one. I even wore my crisp white shirt for you guys, man. Like I was almost going to wear my green shirt, but it's dirty and I got to clean it because I got to shift at Publix tonight because the market's down 104. And so I was going to wear that guy early just so I didn't have to change and do all that kind of stuff as I head to the cheese department for my evening shift tonight. But I had to go with the crisp white guy for you guys. And so Joel James in the house. Dr. Jim, where is he? Maybe yesterday's CL trade shook him up too much. You guys are talking about Chris? Yeah, I think Chris had some things come up last minute. And so I think everything is all good, but I think that some things came up for him last minute. And so Vecchio's definitely hiding under his bed at this point. Man, he better leave some space for me because I'm gonna need some room there pretty soon myself. Samuel, happy Friday, Doc. What's going on there, my friend? Wild week in the market. The P&L Open Bros are still running the show, man. They're always running the show. They are 100% running the show. And the P&L Day Bros are even kind of in the mix now too. Look at that P&L Open, man. Look at that. I mean, you've got to try. There's some real effort in that. Like, look at that Dell position. Look at that MCL position. I mean, none of that matters, obviously. And I say that in seriousness. And I've talked about this so many times before on the show, so I'm not going to regurgitate all of it now. But again, when you're managing winners early, none of the good P&L opens stick around. They all go away. Now, of course, I'm not exactly super excited about that, but that's kind of what you're signing up for. That's par for the course. And so the P&L Day Bros, though, man, they're really kind of putting up a fight in their own right there. And so, man, not good. N1C not using his stuntman anymore. Thank God. Yes, I am here. Thank you for being here, my friend. Wolf is in the house. Doc, it's so bad I'm withholding the banana for my... You got me. I wasn't ready for that. I'm withholding the banana for my dog's banana natties. I mean, yes, definitely ripe for animal consumption, much like it is right for human consumption. The banana natty, like the good thing about the banana natty, which if you're brand new to the show, by the way, we've concocted this together as a team because we all know banana daiquiris are amazing. That's what I drank for a week on my honeymoon, and it was incredible. I loved it, and I absolutely would not change a single thing if I could do it again. Natty Light Ice is amazing just because it's Natty Light Ice and it brings back a lot of nostalgic memories, college, stuff like that. If you take the two and put them together, though, now you've got something really, truly special. But here's what's amazing about a banana natty. It's the versatility. Like, you guys think Delta is versatile, which that's, oh, by the way, that's tonight's calculated risk. You guys see what I did there? The banana natty might be more versatile than Delta because not only can you enjoy it when things are going well, not only can you enjoy it when, you're hitting all your directional trades, the theta's coming in, the volatility is contracting. It's just nothing but strawberries and sunshine. It's nothing but tuna fish and applesauce for as far as the eye can see. You can have them then, but you can also have them when it's like, man, I need to lament my situation. I need to get underneath the bed, me and Chris Vecchio, and man, I brought 2 banana natties, one for you and one for me. And it's just like, man, there aren't too many things that you can say that for. Like, there just aren't too many things that are that versatile. And so you are correct there, Wolf. And so give that banana natty to your dog. He deserves it. And so Joel James, it could be an AI Dr. J. No, not an AI Dr. J. No. It's a real Dr. J. Brian says Dr. Jim is in Vecchio's bunker. Yes. And I think Vecchio is going to be in my bunker. So we're going to trade bunkers just to try to maybe, turn on some good juju in the market. Sam L. Doc, with all this red, I'm considering another beach day just to get a real tan instead of a portfolio tan. I know, man. I know, like, this always reminds me of like that Seinfeld episode when that store opens up now across from Kramer's apartment, and they've got those red lights, and every time he opens his door, like the red light shoots in. Oh, it's too funny, man. It's too funny. I mean, Seinfeld, it's obviously top 2 or top 3 of all time. It's either Seinfeld or The Office for me personally. I don't know that you could go wrong with either one. It's just obviously a different era that they were both shot in, but obviously I don't think you can get better than either one of those guys. There's Ogdenu, the surprise and delight that Josh brought me. So thank you, my friend. Man, let's try to get through a bunch here in the last 7 minutes of the show. Point B's in the house. The doctor is in. Pull up your positions. Grab your drink. And let's get some theory to practice. Dr. Jim in the house. Man, I appreciate you, my friend. I really, really appreciate you. MP 5850, I'm happy I took TK seriously. Man, yes, I am happy for you too, my friend. I'm sure Tim Knight is going to have all kinds of fun and exciting things to say on today's show. And he's right after me, by the way. So make sure that you stick around. Dexter's in the house. What's going on there, Dexter? Hey, Dr. Jim, please advise. How much can span margin increase in MES? I have a short 64.50 put in May in an $8,000 account, and I'm getting worried of margin call if this market keeps dropping. Great question. Terrific question. Generally speaking, the theoretical max it can expand, I think is like 6x. That's your theoretical max. For that to happen, you would have to have a much, much bigger volatility event than what you're having right now. I think realistic expectations are a 1 to 2x expansion. So your MES, if you're in a margin account, right? So your MES, it's what is it, like $2,400 for one? You just have MES, not an option, right? You just had the outright future, I'm assuming. Yeah, $2,600. So it's $2,600 right now. On a day like today, I mean, volatility is up, but it didn't double or triple or anything like that. I would be surprised if it expands by 1x. I would be very surprised if over the weekend or Monday morning or Sunday night, whatever, you see the margin expand to 5,200 on this. That would really, really shock me. I think you could see an expansion up to maybe 3,000, 3,300, 3,400 maybe. In this type of market, this type of environment, I know it's bad. I know it's nasty, but this is really nothing compared to what could happen and what has happened in the past. Now, of course, if the EMA and S&Ps drop another 100 going into the close and things get a little crazy, then that might change a little bit. But right now, I think you're okay there, Dexter, in terms of, now, I don't know if you have other positions on, like obviously, you have to be mindful of if you have any other positions on, that could be an issue. But yeah. Hopefully that helps them a little bit. Narciso, what's going on there, Narciso, my man? JP Morgan's March 31st long put is at 64.75 is causing futures volatility. Please explain the market maker hedging dynamic occurring here. It seems the risk for strong directional movement is now amplified. Yes, and so essentially, it's kind of the sequence is. Let's see if we can do it kind of on the fly. So the basic sequence is similar to gamma squeezes. It's similar to triple witching. It's similar to all those things. When you have an option that comes in, so like let's say, for example, you have a long put that comes in. So when you have a long put that comes in, the counterparty is going to be short that put. So if the counterparty is short that put, then that means that they are bullish that short put. So what do they do to hedge against that bullish short put? Well, they're going to add some short shares, right? They're going to be short some shares. And then obviously the opposite is also true. If you've got a short put that comes in and then they're going to be long that put, that means that they're going to be bearish, bringing back the final Jeopardy pen. So they're going to be long some shares to hedge off their exposure. Now, the reason why these collars that JP Morgan puts on are, supposedly acting like magnets is because when you approach that strike, now all of a sudden everything gets heightened. Like everything kind of comes into focus. The extrinsic value is higher. The vega is higher. The gamma is higher. Like everything is higher. So now all of a sudden, even the deltas were higher if they've been out of the money the whole time. Now they're 50. So they've grown themselves. Now, all of a sudden, the market makers, and obviously this is a huge position. And so the pure notional size of this can be quite impactful. And so when you get around that strike, now all of a sudden, the hedging dynamics from the market makers have to respond even more quickly to make sure that they're keeping their directional risk where they want it to be, which for a lot of market makers, you can ask Tony, Tom, Liz, Jenny, back in the day, they didn't want any directional risk, essentially. They wanted to just buy bids and sell offers. And so the market makers, the liquidity providers today are oftentimes doing the exact same thing. And so they're going to want to hedge off that directional exposure. So what that means is, you commented on the increased futures volatility. That's 100% right. Because when you start getting close to that strike, now all of a sudden there's a lot more movement and a lot more whippiness because the hedging mechanisms get kicked into high gear when it comes to what the counterparty has to do to kind of, stay where they want to be from a directional standpoint. So great question though, Narciso. I really hope that helps, my friend. Let's see. N1C says, I'm gonna grab a beer, a banana natty. It's on me if the real one is in, and the real one is here. And so, thank you for being here, my friend. Joel James says, oh man, what happened to Dr. Jim's heartwarming childhood story? I was really liking that. Oh, did they cut it off? I think they cut it off because we had to start the show. I think we wanted to start the show. And so, you'll catch that the next time it rolls around. But let's see. Oh, Samuel iPod Touch took the whole banana natty supply and disappeared. I hope he didn't do that and left us with nothing. He nails the move. He nails the event horizon, and then he takes all our banana natties with him. Man, I sure hope he didn't do that. No, iPod Touch is a good guy, man. He wouldn't do that to us. And so, Joel James, you guys are, you guys are making me laugh. RC Mindset. Let's go, Dr. J. What's up there, RC Mindset? Thanks for being here. A Wills, the market has now surprised nor delighted me, and no, it has now. Autumn is texting me. Oh my gosh, it's too funny. Am I going to read text messages on the show? I didn't answer the phone. Oh no, I failed. The groceries are outside, guys. I failed. Oh no, what am I going to do? The show's almost over. So I totally failed. Guys, this is not good. There's going to be melted ice cream on the porch. Oh man, I had one job today to do. I had one job to do. I totally failed. I had like 19 jobs to do with you guys, but in her eyes, I had one job to do and I totally failed. Man, I got to go. I got to end the show. So now I know why she called. Next time I'm answering it just for my own betterment, just for my own personal safety and security. And so guys, I got to go, but I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and I sure hope that my ice cream isn't melted. And I'll see you guys on Monday.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody. Well, I'm sad to see this weekend. There's a lot of paradoxes in life, and there's a lot of paradoxes in trading. When this week started, it was horrible because we had that huge mega rally take place based on our friend in the White House, and that's all gone. We're below that now. But the paradox was that the week started off horribly, and I was looking pre-market at my positions, and they were all getting absolutely clobbered. And I've just had the greatest trading week of my entire life. I've been doing this since 1987. This is the greatest trading week I've ever had, and the charts are just working great. And it's fitting because this weekend is the 21st birthday, if we can use that, or anniversary. I'm not sure what you call a website, but slopeofhope.com is 21 on Sunday, and that is the longest job I've ever held, certainly. I've been doing this one for, 14 years or so, but Slope goes back to March 29, 2005. And I want to show you a post I did on Slope last weekend. I think it was last Saturday, before all this happened, before all the craziness of this week. Because everything I've been talking about, it took a little longer than I wanted, but everything I've been talking about is unfolding beautifully. And there's lots more to come. But let's just, we're going to share the screen here. This is the normal chart screen here, but we're going to pop over briefly to a post I did. Oh, hello. Yeah, just check out my password, please. And this is the post. I know you can't read the text. That's okay. That's not why we're here. The gist of it was that I was going to go way out on a limb and in very simplistic terms, sketch out with a few crude arrows what I thought was coming. But remember, this is a week ago. And so, and this is for my paying subscribers, because this is good stuff. And the key chart I was presenting was this bad boy right here. And as I said, very simplistic, 4 simple arrows, 2 red, 2 green. When we finished up last Friday, the market was here. We finished on a big down day. And my speculation was that we would rally to here, we'd plunge to here, we'd rally again to here, and then the big finish, the big plunge like so. I feel a little bad because ain't none of you paid for this. And I'm showing you the second half of what I think is coming. But it is a bit of a victory lap, and just to show you that as long as I've been doing this, some of this stuff is just spooky good. Because what did happen was this week began, and we did rally. And I was not looking forward to this green arrow. It was as miserable as I thought it would be. Monday, Tuesday, and a little bit on Wednesday, that green arrow happened. And as childish as this drawing is, it was like almost to the penny where the market stopped. And then we started falling. And just before the camera clicked on, I looked like, where's that arrow? And unfortunately, it's just about where the market is right this second. So I challenge you to find anybody else who offered a chart like this. There ain't nobody. So so far, 100% right, 100% right. Now, what's awkward for me is that the next move, ostensibly, is this bad boy here, which I don't want because the bounces are a drag. I don't like covering positions. I don't like taking profits and getting out. I don't like being in position for drops. If I had any sense, I would. Maybe I'll trim before the market closes because I'm sure Trump will come up with something else to say with whatever credibility he's got left to lift things up again. But the good news is that the big drop, I think, is still to come, which gets us down to this called for like 6,100 or so. It might even go below 6,000. But long story short is this was they knocked it out of the park so far. And if all 4 arrows come true, well, maybe they'll build a statue of me next to the one Trump wants in Venezuela. Who knows? So that's what's cooking. So happy birthday, Slope, this Sunday. Good God Almighty. Okay. Let's go over here to the charts. Yeah. Okay, charts. Let's talk. Market's down, as you well know, and I'm sure the weekend is kind of playing with people's heads right now, because on the one hand, it's a little nerve-wracking. A lot can happen over a weekend, but on the other, historically, every single weekend the president says something to prop the markets up once he got his orders in. And so who knows what's coming next? I mean, this Monday was a horrible for the bears, and this forthcoming Monday could be as well. We are deeply sold off here. This is a new low for the year, and we are about 6,000 points below the Bondi top. And a bounce would make a certain amount of sense right now, which again is a drag, but the market can't go down every day, nice as that would be. So yeah, something to hold on to there. So the diamonds are down a little more than 1.5%. The cubes are down even harder. Okay, look, all 3 of you watching me, I love you dearly, so I don't want to abuse you because I told you so, That's obnoxious. But honestly, I told you so. Everything I've been talking about is coming true. Everything, especially crypto. But I do love you. All you and you and you, all of you. So I'm not going to be obnoxious pig and do the I told you so shtick. But it's really working well, these charts. And this one is an example because we've talked about this range that we were in, and once it would break, it's party time. Okay, so maybe we're going to rally. Where will we rally to? I'm thinking back to that rectangle. And if I had one lick of sense, I'm going to really lighten up and try to dig for something I have in very small supply, which is patience, to get in at better prices. So, that it would make sense to rally back to that rectangle. And if we can do that, I'm here to tell you, God is my witness, that's going to precede the big kahuna. And only the Lord knows what's going to light that on fire. As well as I've done, one broad thing I've missed in general was these leveraged instruments against the NASDAQ. I mean, with 43 shorts, I'm not going to self-flagellate too much, but I let these go by, and they have done great. Remember what I said about these, pretend they're stock. If they were stock, would you buy them? Yes, you would buy them. They're great long positions. Yes, that's exactly what happened. Whether it's volatility, whether it's bearish leveraged ETFs, they've all gone great. QID here, blasting away from that rectangle. Once again, if the market rallies, watch for this to get back down to the rectangle. Watch for it to ease back to that range. SQQQ, up almost 6% today, same deal. Up and away. And old Kathy D. Wood, her creation has been coughing up blood. Not the cleanest pattern out there, so I have not been trading this, but we have been sinking on this, a new low for the year. We've basically undone the past 10 months of progress on this one. So yeah. I wonder if she's still talking about $1 million Bitcoin. Lord only knows. Maybe she needs new glasses. IWM, small caps, down nicely, a little more than 1.5%. Not as clean a pattern as some of the others, but it's doing really well. And yeah, so another big thing this week, at long last, semiconductors are cooperating. I've said time and again that semiconductors are kind of the last brace holding things up, and those have joined the party as well. And so that's been very helpful. As I mentioned, my anchor position for my options is SOXL puts. Those are doing amazing. I've lightened up on those some just because the position got too big. But let's look at a core of this, which is Nvidia. Now, Nvidia has been an oil painting for about 10 months, but it is starting to work its way lower. Now, let me just bang on my virtual table here and say this. If we can get below this range, then it's really party time. And here's another thing of the many things I've got to say. It's the year 2026. If you want to signal as to when things are really going to go off the rails in the year 2026, wait for when they announce a postponement of some big IPO people have been looking forward to. It could be anything. SpaceX, Anthropic, OpenAI, whatever. Those are three big ones that come to mind. Just wait for an announcement to come about, some pause, some delay, and they'll come with some cockamamie reason. Waiting for more favorable market conditions. That will be another signal that things are really going wrong. And of course, the ultimate signal, the ultimate thing to watch for, which will probably precede the ultimate bottom by a couple of weeks, will be the government getting involved against the bears. Banning short selling, banning put options, jailing bearish journalists, somebody, Secret Service showing up on my doorstep, that kind of thing. Banning shorts, it's like, what is this guy off his rocker? No, in 2007, yeah, is it? September 19, I believe. That's what they did. They banned short selling. And that worked for about 5 minutes. I've told the story before. I was there. I was watching. And they banned it, and the market rallied because the bulls always had Dina bailed out, the cowards. And they were like, yay! And then people realized, oh my God. And then all holy hell broke loose. So, and another thing I'll say in the midst of this, I realize my head is like a 1 centimeter square, and you're looking at the big old chart, but I'm going to just say this. A very important moment last night, if you're watching as I was. Oh, Lord. Okay, this one of those shows needs to be 7 hours long. I'll just say this. The 3 times this week, there was big spikes. All of them by Trump, all of them meant to goose the market. And they each had diminishing effectiveness. Monday, hugely effective. Added trillions of dollars to worldwide equity markets. That was the Monday morning tweet. So that was hugely effective. Tuesday afternoon, there was another one about a ceasefire. That was kind of effective. That lasted an hour or something like that. It goosed the markets for a little while. Yesterday, right after the close, it's like, well, let's do it again. And I don't know how, he's got a direct line to Jared Kushner, and he places the trades and God knows what else. But yesterday, it's like taco time again. We're going to wait till April 6th. We're giving them 10 days. We're not going to bomb them for 10 days, the energy facilities. And the market spiked for literally 90 seconds. And the efficacy of these cute little all caps nonsensical missives is like a half-life, just worse and worse. And so the fact that last night's attempt to push the markets again lasted about the length of a TV commercial was, it's like, wow, ain't working no more. You're nailing jelly to a tree, pal. So that's pretty cool. Let's continue, shall we? All right, so SMH, this is the semiconductor ETF, and we are right at the cusp of a breakdown. Not only that, this head and shoulder pattern has some pretty lips on it. This is a really good one. So we're about to break down on this. And as I said earlier, the market's full of paradoxes. We may crash on Monday. Wouldn't that be something? There goes my arrow, right? But the supposition is, well, he'll say something this weekend and things will go up again, as they always do on Monday. Maybe not, because you got something like this in your favor. It may drag everything down with it. How are we doing on time? 2 minutes. I'm about 40% of the way through my symbols. SOXL, against which I own a whole passel of puts. This is down almost 6%, had a big tumble yesterday, so that's going really well. Okay, in the brief amount of time I get, I'm going to jump past 20 symbols now. I'm going to go straight to the very bottom of this. Let's talk about Bitcoin in the few moments we have left. This is crucial, I think. And again, this was a premium post I did, but since the three of you are here, I'll just share with you the following. I would like to put it to you that where we are now on Bitcoin here is the equivalent of, I think, something like this. I must have done this yesterday. I remember like canoodling that part of the chart there in speculation of if it breaks. But this, I'm so short I could jump off a nickel with Bitcoin. And this is going well. We're down, 3.31%. But the point being that this pattern here and this pattern here are virtually tick by tick identical. And the fact we've broken down here, I believe, sets us up for this kind of move, a very meaningful move lower. And if that happens, not only will the Bitcoin short continue to do fantastically, but I believe it'll drag equities down with it. And so that's why I skipped the 20 other symbols I had, because that was a really important point I wanted to make. I'll have lots of other points if you want to pop by Slope this weekend, but thanks to you all. Appreciate it. I hope you've done well. I know one of you three is from Ireland and is sending me some kind of present. Unlike the president, I'm not going to hide what it is because I don't know yet. It's not 8 boats, I know that. Maybe it's some nice whiskey or something. So I appreciate whatever's forthcoming. And you know what? If you don't want to send me anything, get right with God. Send some money to a dog charity. Help them out. Support the good guys, right? Do that for me. So I will see you later. Have a good weekend, and we'll see what's cooking on Monday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back for the final 30 minutes of the trading day, final 30 minutes of a trading week that can't get away from us soon enough. This is Last Call. I'm your host, Chris Vecchio. He's your co-host, Ilya. Ilya, we got to get right into it and take a look at our charts because we're looking at markets that are selling off and sitting right at the session lows. Our S&P 500 is down 109 points, 1.7%, we'll call it, 64.16 here. The Nasdaq's off nearly 23,333. The Russell not far behind at 1.6% lower, down to 2468. But it's not like other days. And I think that's the important thing to note here as the sell-off accelerates, because while oil is up and now CLK6 crossing $100 a barrel here, what will be the high close that we have on our screen, Mr. Spivak, bonds and gold are no longer selling off with everything else, if only to say that maybe there's a little bit more panic setting in right now to these markets. We see at the long end of the curve, ZN is effectively flat on the session, even though oil is ripping higher. We have gold today, Ilya, which is up 3.2% now. Hasn't necessarily cleared the hurdles that we'd like to see it clear to feel like we're out of the woods. But today is a different kind of day right now when we think about these final 30 minutes. It's not stocks down, bonds down, gold down, and oil up. It's oil up, gold up, bonds up, stocks down, which is a lot more fear and a lot more defensive. We need safe havens. It's not just about inflation anymore. It's about the R word on the other side of it.
I think that's really the thing. I think you've just hit the nail on the head. When you start talking about what this does, right? In the beginning, disrupting oil flow is an inflation risk because the question is about price, not about demand. The question is, oh, well, people are going to buy their oil. Of course, they're going to buy their oil. They need their oil. And everything that oil makes, be it fertilizer or petrochemicals for plastics, whatever it is. Okay, it'll be more expensive. That's inflation. Got it. The longer this goes on, the more it starts being, maybe people won't buy it. Where is it optional? Where can people tamp down spending? Because there you start to see what people have been talking about as the sort of second stage deflationary part of this. Inflation first, disinflation second, because at some point you get demand destruction. This was the sort of logic behind the US dollar's recovery this week. Because while last week it looked like all the central banks were more hawkish than the Fed, this week we get PMI data from all of those economies that says those central banks aren't going to be able to hike rates like the markets are speculating. The Eurozone is at a standstill. The UK is slowing. Australia is contracting. There are oil shortages and fuel shortages in Australia right now.
A cyclone just hit and knocked out. I mean, Qatar and Australia are two of the three largest LNG producers in the world alongside the United States. I'm not sure if you saw the headline today talking about this rolling economic destruction moving on from Asia, which it's hitting Asia. There were, I think I saw the report, it said 12 LNG tankers that were US born, destined for Europe, that have been rerouted entirely to Asia. So that's gas that Europe will now not be getting because of demand that's going on elsewhere. It's one of the reasons why when folks say the Strait of Hormuz being closed doesn't affect us, that's ridiculous. There is a law of one price in global markets. Right. So oil right now, $100.40 here, basically at the session highs. Volatility is back up in oil today. It's hard to think that $10 ago, you and I were on camera talking about this on Overtime when we had the Trump kick the can down the road yesterday, extending the ceasefire deadline for the Iranian energy facilities out to April 6th. And the market was not buying what he was selling. He tried to talk this down going into the weekend, if only to prevent another Friday panic into the weekend, as we have seen over the course of this month. And he wasn't able to do so. That's the 5-minute candle from yesterday on the show, Ilya. And within 5 minutes, we had already taken back more than half the losses. And here we are now $10 higher. So the jawboning is losing its effect. And I think that's really the important observation as we think about a market going into a Friday close, just off the session lows by only 2 or 3 points here in the S&P.
Yeah. I mean, when you look at this, you start to come to the idea that the market is beginning to look through that first phase. And it's starting to go, okay, here comes the demand destruction. If the demand destruction is coming, then indeed you start to kind of lay out a recession-y playbook. Interestingly, we'll note the US dollar is not really surging here against this backdrop. It's holding steady, but then you start to look at the Aussie, you start to look at the Canadian dollar, and it's a different story. So on average, the dollar is not going very far, pretty steady against the pound. The euro, although against the pound, it's a little bit lower, but still within sort of a familiar range. But you look at what the dollar is doing against the Aussie, and in particular the Canadian dollar, and you start seeing charts that look a lot more defensive. And that starts to give you this idea that, the commodity exporting countries, the cyclically sensitive countries are on the chopping block. And that, of course, starts to speak like the market is sniffing out some sort of a growth signal. Now, maybe the most interesting part of this story is as gold is doing what it's doing, you also have this sort of curious bottoming in the bonds. Now, who knows if this is the bottom or a bottom, but CT is looking a lot perkier, the short end. ZB is looking heavier. ZF, ZN are kind of in the middle. That's interesting in the context of the market looking at this and going, this is enough of a growth risk that maybe the Fed does have room to cut something at some point, and not for good reason, but because the economy has fallen in the ditch.
That is something that happens today in this market. Even though oil prices are surging, unlike what we have seen in the past where that has catalyzed a bump in rate hike odds, we've now seen that has started to pull back in. I know that we're not thinking that anything will happen at the April 29th meeting, but a day ago there was a 6.2% chance of a hike. Today there's a 4.1. It's small, but alongside the move in golds and in bonds, the market's starting to lean over away from the inflation concern and thinking about the R word, the recession concern here, Ilya. So today is just one day. One day does not make a trend, and it certainly doesn't mean that this impulse of higher oil and everything else pivoting on a fulcrum like it has for the past month, that won't continue. But it's certainly an odd day because this is not the relationship that we've seen over the course of the past 4 weeks, which, Ilya, on First Call this past Sunday, you and I said, would it surprise you if we followed the similar pattern as we have in recent weeks? Monday higher, Tuesday, Wednesday meander, Thursday, Friday close out near the lows. And we both said it wouldn't. And you know what? That's exactly how this week has turned out again. Coming into this week, we were looking at a loss of 0.86% on average in the NASDAQ on Thursdays and 1.3% lower on Fridays. We did have that big move lower yesterday. Today, we are down another 2%. And some of the places that have really held this market up, like semiconductors, for example, which had been a lone bright spot the past few sessions, considering all the other turmoil that was going on, with the memory chip move yesterday and the knock-on effects today, which have moved beyond the names like Micron, you're seeing now a cumulative near 3% loss on the week for semis and an ugly looking topping pattern here. If it's the semis or if it's more broadly speaking on the macro level, EEM, the emerging markets ETF, this likewise looks like it's breaking through a fairly significant level of former resistance turned support and now losing it as support once more. The ball's rolling right now, and trying to call a bottom in this crisis and pick the low in stocks. It's a fool's errand on a Friday, typically, Ilya, but there is even less to like about the way these charts look than they did at the start of the week.
Yeah. I mean, when you look at this and you say, right, over the course of basically a month now, if you had the mindset that, my God, so many people that comment on things I say about the markets constantly reiterate. You always buy the dip. It always goes up. It always comes back. The most recent version is he always tacos. Well,
from day one, you have said you can't taco your way out of supply chain issue.
War. And you can't always buy the dip. Those are the words of someone that has never lived through a crisis. And ostensibly, it makes sense because we haven't had one in a long time at a scale that gets everybody ruffled. By the way, COVID, not one of those, because the response to that was overwhelming and fast. And the reopening of the economy was quick. And the shock was not what it could have been. Those of us that were there in 2008 would recall that shocks can sometimes last a long time and recessions can linger for quite a while after. You have to be really careful here now.
EEM to me is the most interesting one. It was probably a little early when we put this on last week, but we were looking at just buying some downside put protection here, not even a put spread, just buying some, far out of the money puts, because it started to look a little slippery. That's feeling better today, Ilya. I feel like that's still a viable way to do this if we're looking for some downside convexity, some exposure here. Of course, the tasty way to do this is more about selling the volatility. And so even through that perspective, if we were to consider, I think EEM and semis right now, because the market's open for another 15 minutes. And so these trades can be executed, right? Looking at how the technicals have behaved is probably a good guidance. It's helped me in the Russell, I think, here, sizing up opportunities and sticking with it when the market has moved to the upside. This 1 month moving average and the 50-day moving average, the yellow line and the blue line here, they've been capping us off ever since we gapped open lower that Tuesday, March 3rd. And so to that end, it feels like 60 is a level with which we could operate around if we wanted to sell the vol. Something like a short 60, 61 put spread. Obviously, this is one contract, so it appears small, but you're risking around 3 to make one at well north of our usual 60% probability of profit. You're getting 77% here. So scaling into something like this to take advantage of a potential head and shoulders pattern of market that's rolling over, it can be expressed in the typical tasty way. And using the technicals here as a guidance, considering we have likewise not only lost the highs here from the pre-global financial crisis days, we have likewise lost the uptrend from the lows that we had last April, as we see left shoulder head, lower right shoulder into a neckline break today. It's semis are at the neckline right now, but it's another very similar situation where if we think about the highs that we've had over the past week near 400 or so, we could go out to 49 days and we could look at it, say like a 405, 410 short put spread. And that's at a 71, short call spread. And that's at a 71% probability of profit. And that's closer to a 2-to-1 risk to reward. I already have short deltas on in here, but I like the market right now. And we're going to put some more on if we get the neckline break. But that's the way to play it.
I mean, philosophically,
2.5 to 1.
Philosophically, I just want to point out for our audience here the consistency in Chris's momentum trading approach. If this chart were flipped upside down, as we've been talking about, what would you do? You would buy. And so you have to be intellectually honest here. Look at this chart and go, what do you do here? What's momentum saying? if we crack the close, just as a general stand-in for risk sentiment, if we crack this week's close and low, as it looks like we're going to, on the S&P 500, Asia hasn't seen that yet. Europe hasn't seen that yet. So it probably has a bit of a tail when we start next week, unless
a tail as in gap open lower, gap open lower, and trade to the upside,
which,
like we
by
did
the
last
way,
Monday.
if the worst possible thing you could see, it gaps open lower, and that's just a kick down the road, it then careens on. Because we've seen that. That would be very troubling. But if what we're looking at here ends up closing like this, I mean, take a look at the ES continuous contract, just for or even just SPX, the index, just for a sense of where this goes next. If you pull back here and pull back and pull back, because it's not soon the next bogey, we're looking at something that maybe goes back quite significantly. I mean, the last kind of big inflection points we're looking at that point are back in what, late 2024?
Yeah, high 61s. Maybe you could call it 62. So like 61.50 to 62.25.
Yeah,
becomes kind of the next inflection zone. The highs that you have in early 25 before the tariff tantrum, and then in the summer months you had a bit of a window there.
Yeah, that top mid-December to mid-February.
Right.
I mean, that's a trip.
It is a trip.
That's not close.
Ilya, and thinking about the way that this market has behaved in recent weeks, again, the Monday through Friday cadence in the NASDAQ, and this is going into this week, the NASDAQ on Monday, since the Iran war started, up by 0.86%, Tuesday's down by 0.06, Wednesday's down by 0.08, Thursday's down by 0.86%, Friday's down by 1.3%. This week gave you your up Monday, your meandering Tuesday, Wednesday, your down Thursday, and your down Friday in ES and NQ in the Russell here. The NASDAQ's now well into correction territory, by the way. It's more than 10% off of its highs that we've seen, Ilya. In terms of the top tickers on the platform that are helping drive this move, it is the typical suspects, and it's a lot of these mega cap tech names, the Mag 7s. Tesla here now down to 360. I suggest people go take a look at Jamal and I's video, the one we did on Signal and Noise about the $1 million worth of Tesla calls that were purchased this week. Someone buying the 470 strike with now 21 days to expiration. We walk through the mechanics of that trade. Beyond that, Ilya, we could go over to something like a Microsoft, which this is the worst start that it's ever had to a calendar year, and it is on approaching those April 2025 lows now, with still just a 50 IVR. The last time it was at those lows, the IVRs were well north of 100. Mag 7, broadly speaking, it's just a really ugly break, and this is a really nice chart, just instructive for why technicals do matter. We had our
and why it doesn't have to be complicated. The technical, you don't need Ichimoku clouds on your chart.
Horizontal lines, moving averages.
That's right.
That's it. Right.
It doesn't
so we have
have
our
to be
neckline.
Complicated.
We have our former support become resistance. Can't break through our 1 month flag forming. We break down. Next leg lower, and that's typical. You have your consolidation. You break out. You retest the breakout level, and if it's real, then you finally extend. What's the saving grace in this market now? Is it that we're going to reach valuation levels that are historically associated with market bottoms? Like the NASDAQ or the Mag 7 PE ratio is, I think, 23 with today's move. We were at 22 last April when the market bottomed the second week of April. What are equity traders hanging their hats on here if they're looking to buy the dip right now?
Well, if they're looking to buy the dip right now, they're basically gambling. I don't think it's good risk reward to be buying the dip now, unless you can find yourself, and sort of the great diversity of equity markets is a plus here. There are all kinds of things out there from all kinds of sliced and diced ETFs and sort of expressions of risk allocation. But when you look at, for example, what's going on here in the kind of big averages, the big stories, it's not easy to say I can benchmark risk reward in a way that makes sense to go long. But if you look at things like EWZ, if you look at things like ILF, you can find things that look compelling and that have held up better. ILF is Latin America in general. EWZ is Brazil in particular, which I've been long for quite a while. I think there are things you can see here, things that are thematic. So one interesting thing that is on the menu is, of course, everybody's going to start thinking about, here's an important choke point that got taken out. What other choke points do we have? Take a look at EIDO. That's the Indonesia ETF, because ostensibly a much more damaging and contentious spot.
Sorry, what did you?
It's EIDO. That's the iShares Indonesia ETF.
You just said the Star Wars planet. Oh, outing myself. Go on.
You look at this and you go, okay, it's had obviously an ugly sell-off since the start of this thing. And maybe you put that in the back of your mind and go, when this thing looks like it wants to turn, this could be really interesting, because at the end of whatever discount this ends up being on, dominating this is a much bigger choke point than dominating Hormuz. And this is right in the center of the US-China rivalry, which, by the way, has an interesting angle here. Over the past 24 hours, Iran turned back 2 Chinese tankers from the Gulf.
Almost to incentivize China to step in.
Almost, but what do we know about Xi Jinping? Is he going to be coerced?
No, of course not.
Right.
No. Of course not.
And so this now starts getting interesting, because you start looking at those choke points where China has reach, where it might have some influence, where it might say, look, if we were to step on Indonesia, you would need to step off Hormuz. If we were to get fussy in the Malacca Strait, that's not the most choke pointiest of things. There are routes around, but it's very busy. If we were to start to have some jitters in that area, I mean, China grabs footholds in the South China Sea. Why? This could be an interesting experiment for what's been building really since 2013.
Oh, and we've drawn down our security apparatus in Asia to help supplement CENTCOM, and we've learned that our power projection capabilities are stunted by $20,000 drones that can overwhelm our very expensive missile system. So you're not bringing any of those air carrier strike groups close to the region. And our THAAD system won't do anything once it's taken. I'm just like Ilya. To me, I've been arguing with people about this over the past 2 weeks. To me, the market's selling down because there are 3 pillars of the post-World War II financial system. Yes. One of which is that America patrols our maritime shipping lanes.
I might say it's the most important one.
Another is that we are a benevolent hegemon. We have good morals and good wills, and we don't choose to inflict our might upon others without reason.
For the most part.
And then, worse comes to worse, when, things get bad, you could always flee to treasuries for safety. Because we have the deepest, most liquid markets in the world. And throughout this crisis, our ability to control the shipping lanes has been challenged. And it doesn't really seem like we're acting as a benevolent hegemon, from my view. And then, the third point, obviously, no. So, I mean, this is a gross market right now. This is a market unlike anything I've seen or traded through, certainly far worse than what we had last April. Yes. Which could have been turned off with a flip of a switch. But the question is the trade, not the fear. The fear comes later, as some might say. We're just getting started. on my
As
view.
far as I'm concerned, the trade that screams out here, and I've been talking about it all week.
First is cover, what I'm doing right now.
Yes.
Because I had this 100% extension out of the triangle here. Bing, bang, boom, got us down to 64.13.
Yep.
The impetus was 64.25, 6,400 put spread. Okay, we get long that. We're now going into a weekend where I don't know what's going to happen. It certainly feels worse today than it has in other Fridays. But other Fridays, we've gone into the weekend on the lows, although gold and bonds weren't starting to hold up the way that they were. We can't dismiss another Monday bounce is my point. And I don't want to dismiss another bounce. So what, you can imagine they're really going to be working the wires this weekend, given how the market did not respond to the ceasefire news. I'm going to take this off. Okay. I still think the market's going to fall. I hope this gets filled. I still think the market's going to fall, but I think that we're going to get our Monday bounce. And I want to sell a rip in stocks, just like we're buying dips in oil right now. And that's been the modus operandi around here for the past few weeks, working out, I think so far, well enough to try to preserve capital. I'm certainly digging myself out of a hole. Thank you, gold and silver. So that's the plan. It worked out well now. The next leg of this, what do we do on Monday when the time comes? I'm going to go out another 10 days trading. I'm going to look out to the April 17th expiry. I'm going to keep digging a little bit deeper, 62.25, 6,200. You mentioned that swing zone down there that we could potentially trade down into. So let's start thinking about that and some convexity. Risking 1 to make 3, happy to do it in this environment because we're not catching falling knives around here, Ilya. And that in and of itself is why technicals matter, because I'm a momentum guy and I appreciate you giving me the call out because I was throwing on that Russell chart and using the inverse Russell to make the point. The point is that when you get the setup that you see, right, if you're someone who's consistently bullish, flip it over. Would you buy it if it was flipped over? If the answer is yes, don't be buying it then. Start selling. 5 EMA, Ilya. 1 month moving average. There we go. 50-day moving average. All have negative rates of change. In ES, in NQ, on the daily timeframes, on the 4-hour timeframes. Don't be a hero now. Capital preservation is the key. And Ilya, I got the last word here today. So you're going to get the first word on Sunday because you and I, we get but a mere 49-hour, 55-minute break before we have to be back at work. And we're going to be back because Sunday's open is another strong open, Ilya. It's going to be a big one. Oh, hope everyone had a good trading week. Thanks to the production team for keeping it together. Thanks to Ilya and all the other co-hosts. For Ilya Spivak, I've been Chris Vecchio. You've been watching Tasty Live. Have a nice weekend.
Get tasty, free market. Come on, you know we can't get